Welcome to Budget Workshop, session number 2 here. We got a few schedules we're juggling, so we're going to go ahead and push till 10, and then we'll take a recess. We'll try to do lunch sometime between 12 and 1, maybe kind of a working lunch. We might actually have a few people that are leaving this afternoon, so we will get through everything, and we'll push hard. We're going to call ourselves into session and to order here. Recognizing a quorum. I don't have any other business I need to contend to, correct?
Yep, exactly.
Okay. Councilman, would you mind opening us in prayer, and then we'll get going?
Yes, sir. If you'll bow your heads. Dear Heavenly Father, just thank you so much for the opportunity to gather, the opportunity to share wisdom, share knowledge, share ideas, and look at data. Let us make the best decisions that we can, just guide our minds, guide our thoughts, to make the biggest impact we can for this city that you've blessed. Bless everyone in this room. Bless everyone that has given so much time and energy to create this budget. Let it be pleasing to you, and let our actions be pleasing to you. In your name we pray. And just a second, I'm sorry. And please, Lord, be with Don today in his procedure. Let the doctors be skillful and be healing to him. In your name we pray. Amen.
Amen. Thank you, sir. Hand it over to you, Mr. City Manager.
Absolutely. Glad to do that. Thank you, Mayor, members of council, for being here today. This is day 2 of the workshop. As the mayor said, our tentative agenda today, for at least for timing wise, is given some of your scheduling conflicts. We're going to try to power through to 10 o'clock, and then we're going to give a chance for Councilmember Prescott to join us via Zoom as he travels for a job today. Then we will get to lunch. And then I think my recommendation today is I know we're going to end up losing Councilor Tibbs and Councilor Prescott today, so I recommend we go to about 2-ish or so, and then maybe we can call it good at that point. And then that will give us as staff a chance to kind of work through whatever we discussed today in preparation for tomorrow. So. Because by that point, there will just be 3 remaining council members available for the meeting. So with this, I'm going to get started. Again, our overall goal today, we started on Tuesday. We didn't get quite as far as we wanted to. So our ultimate goal today is to discuss supplemental CIPs and the direction that the council would like us to go on some of those based off our limited available funds towards those items. But to get there, we need to begin with available funds and to know. And to know the starting point before we can discuss the CIPs and supplementals. After observing and reflecting on Tuesday, we as staff decided that it might be helpful to take a step back and walk you through how we derive your available fund figures. Whether it is leftover operating, existing reserve, or closed out CIPs, it all gets rolled up into your available fund calculation that feeds into your budget consideration for today. And all this starts with your ACFR. That is an audited point in time that we start with. Therefore, I'm going to ask that our ACFR expert, Katrina Owens, she's going to come forward today and provide a presentation that ultimately gets you from the ACFR to available funds and how we develop those numbers. That then gets us to our ultimate goal of discussing supplemental and CIP requests. So today. We will start with Katrina, and then we're going to roll into supplemental CIPs with Andrew at that point. So with this, I'm going to turn it to Katrina, and we have a presentation for you now.
Good morning, Mayor and Council. On Tuesday, we had numerous questions on the cash flows, the available sales, CIP. So this is a presentation to help answer those, to help bridge the gap between budget, available sales, cash flow, and ACFR, and help you to see how they all fit together. Now, we have multiple purposes that go into a budget. It asks, what services can we provide? What are they going to cost, and how will we pay for them? We have the city council role, which is going to set priorities, policy, set the tax rate, hold the public hearings, and adopt the budget. We have the management and staff role, where we are bringing you the data of what the needs are. We're going to build the forecast, identify the needs and risk, recommend a balanced budget, and manage it after it's adopted. And then we have the public role, the Texas law that provides for a proposed budget, public inspection, public hearing, and council adoption. So we're going to talk about the life cycle of all of it. We start with the budget, the plan. We are actively forecasting 26, 27. Once that gets adopted, we're going to start monitoring it. We'll put it in place after you have gone through your needs, set your priorities. And then at the end of the year, we will audit it. That audit is the first step of the plan for the next year. So it's just a cycle. Budget, put it in place, look at budget to actuals, and then audit it, and then start the process again. Now, we have 3 financial views. Now, they are not going to tie because this is government accounting, and they show different purposes. We have the audited net position. This is your ACFR. This is the front of your ACFR. This is your government-wide accounting. This is a required statement from GASB, or your Government Accounting Board, your Accounting Standards Board, and it's the beginning of your ACFR. And this translates to a financial statement of any business. Your enterprises, your internal service will be more in this bucket. Your second bucket is going to be your fund accounting. This is going to be all of your separate departments of the city that roll into the general fund. This does not include assets or fixed assets, does not include depreciation, does not include debt. Now, your budget to actual is going to be more in this bucket because it's a fund-based perspective. Your third bucket is going to be your budgetary bucket. You're going to have your available funds, which you look at your 90-day reserve. What else do you have excess reserves? And then you start looking at your priorities. Then we look at the cash flow. Cash flow tells you when you're balanced and you need to stop finding priorities to assess money to. Now, your cash flow is going to have a foot in the second bucket of your fund accounting because of the revenues and expenses. That is fund accounting when we present that cash flow to you. That middle part of the cash flow is fund accounting. This is not a required government statement. You're not going to ever find it in the ACFR. The available cash flows, the cash flow statement, those we pick and choose lines from the ACFR to build this solely to present what you have available to spend. Now, the ACFR is the year end for prior year, but it's the beginning of the next year budget. It's going to tell you how it actually played out. It's going to tell you, help you with your monitoring. But what it's not going to do is not going to tell you what your active CIP, how it's going in the year. It's not going to tell you the changes in the current year. That's a monitoring active in the middle of the year. Then we have staff coming in and presenting budget presentation. What gets added during the year, we present the forecast, the CIP commitments, the reserve needs. So we take the ACFR and then we build on it to provide you a plan. At mid-year, we cannot take the ACFR and roll it and give you an available funds calculation because we need numbers to stop moving. It's a snapshot in time for the ACFR. That's why we use that as the beginning point of the budgeting. Now, what a mid-year can show you, it can show you what happens to your CIP. It can show you all of the monitoring that's happening, budget to actual. It can show you how your excess reserves are being spent, and can show you the changes that are happening during the year. Your capital project tracking, this affects your available funds. Your active projects will affect your committed number, which there's a couple slides we'll start showing you the actual calculations on available funds. Closeouts are going to increase your available funds because you're going to have less committed. And then the available funds test is not going to be a dollar for dollar, because we closed 43 million, but you have to factor in cash and investments and liabilities. So the calculation is not going to be dollar for dollar on these closed projects. Conservative mid-year closeouts. We're going to include the closed projects. We're not going to include the ones that are in the closeout process. They still have invoices to pay. They still have signatures to obtain. And then we are going to exclude everything that's still active. Now, this is just the formula. We'll start seeing the actual numbers from, I believe it's the fleet department, in a few slides. We're going to take your cash, your investments, your receivables. We're going to take out your commitments of your CIP. Verified any closed projects are part of that calculation. And that's going to give you what your reserves are, what you can spend. And it helps you set your priorities for this next year. Now let's take a moment to talk about depreciation. Depreciation being non-cash. When we budget, we're on a cash basis on the budget. So we do not include depreciation. Even in the enterprises that typically would have depreciation, we do not include them in the budgetary perspective. Now, from your act for page 200, this is the fleet. Now, this is the calculation, which we will break this down in the next few slides. Your cash and investments, your receivables, liabilities, and encumbrances, and your CIP. So this comes straight from your act for page 200. We had some cash and investments and some restricted cash of $13.3 million. Now, your appreciation, depreciation, that's just marking investments to market, and it's rolled up into the investment line, so we're not representing that in the equation because it's already in there. Your next is assets to be converted to cash. That's your receivables. You had some accounts receivable, you had accrued interest to be received, and then you had some due from other funds that would be received. That total was 3.3. Then we're taking out liabilities and encumbrances. So your total liabilities for fleet was $4.2 million. Now we have leases and we have software in there, but we're going to budget for leases and software. So we don't need to, double account for it. So we're going to take these out of the equation because otherwise we'd have them on two sides of the equation. So we're going to take out that leases and subitas. That leaves you, we need encumbrances. Now encumbrances is a PO. It is the very first step of liability purchase. So we haven't received an invoice, but we know that we have a liability to pay. So that is 4.4. So the total liabilities and encumbrances is going to be 5.9 for fleet. Now we get into the construction in process. This is the note 12. That top box is from the ACFR for note 12. This is the item that is being restated by CLA. That last column is what is being restated. That is the commitment footnote. Now we took a gross line versus a net line. And so it was a new report for the staff. We just chose the wrong line. And so when we look at the commitment, it was originally at 15.5. We're going to now present you an updated note 12, what that would look like, or in a few slides. Excuse me. So this is still the original note 12 in the ACFR. So we have a negative 4.7. That was presented to you on Tuesday on that cash flow. Now, if we update note 12, and that's really hard to see. So if it changes the available funds, that first number, you're now not in the negative. It changes the capital line in the middle of the page. You're now not in a negative. And it changes the adjusted available. You're now not in the negative. Your proposed budget is the exact same data that was presented. So when we update note 12, you're going to have all positive data. But we didn't have Note 12 updated, so it's a timing issue of can we present something to you that we haven't actually got updated just yet. And then water sewer is the exact same. They start in a negative balance. Once we update Note 12, they're in a positive balance. And that, once again, that proposed budget's the same data that was presented to you on Tuesday. Drainage is going to be the exact same. Once we update Note 12, well, this one does have starts with a negative 4.6. But once we update the commitment part of the available funds, you now are going to end the year at a positive 84,000. And your proposed budget's still the exact same data that you were presented on Tuesday. Airport is the same way. We took out, updated the Note 12, and it will present positive data. And proposed budget is still the same as prior year. There was also a question on the one-time expenditures on general fund at $6.7 million. So we have a calculation of how that breaks down. Annual leave buyback was about $530,000 of that. We have DRP, which is going to be longevity checks, $275,000. Holiday vouchers, about $50,000. Parks, E&I, we're having to back that out because there's some loan in that. There's $2 million E&I. So we back out $922,000, and then compensated absences of $1.2 million and general construction of $5.5 million. And that leaves, Grayson, that slide's.
Yes, and so what the goal here today was to give the council kind of behind the scenes as to how we come up with the available funds, and also try to explain the Note 12 matter as well. So again, the examples you saw there are, once Note 12 is updated with CLA, that's what it would look like. Obviously, as a budget here, we want to make sure that our budget matches the ACFR. So until that note is updated, you do see the Tuesday figures in your cash flows. I mean, we did approach CLA Tuesday, say, hey, we would like to expedite the Note 12 update. They're working on that. I don't have a timeline for them just yet, so I don't know if we will have that done in time to finalize the budget. But again, we wanted to give you the examples of what it will look like, so that you can see that at the end of the day, the bottom figure on that center column there doesn't change. And so ultimately, your right column, your 26-27 budget, doesn't change, whether it's a starting point with the existing Note 12 of a negative 4.7 fleet, or the final point of a positive 10, it still gets you to the same point for available funds for fiscal year 26-27. So at the end of the day, this slide here shows you how much funds we had to work with for reoccurring and available one-time CIPs in these funds here. So we've done the work for you the last several months, staff working with financial advisors, working with consultants, working as a team, have worked through the budget. We've added everything up, subtracted what we can, and this is ultimately where we have available for you to work with today when it comes to left column supplementals and right column there CIP. So again, general fund, we have about $6.2 million available. Now we will note that as of yesterday, we have our new August sales tax figures, and we are doing very well right now. So there is an option to, if the council wishes, to increase our proposed budgeted sales tax even more, because the forecast has improved with new data. Again, as budgets progress, as we do budget workshops over time, more data is available, so we can get finer and finer tuned. So if the council wished, I think we could add potentially $1 million in sales tax to the proposed 26-27 budget. That's a good thing. So right now we show you 6.2 because that's what we gave you on Tuesday. It could be 7.2 if you wish to work with that. Again, it depends on your comfort level for risk when it comes to sales tax. Sales tax is volatile. We can, unlike a property tax, you can set it and you're going to basically get it. Sales tax, you have to just hope that we're all still shopping this time next year. So there's that. Water and sewer fund, 2.5 in ongoing reoccurring available funds. Airport $620,000. Drainage fund, $200,000. And an IT fund, $135,000. This is the reoccurring. This is the things that you can put towards ongoing, like COLAs or supplemental things that more services we're trying to provide for our community. Things that are going to stay with the budget year after year after year. Right column is your one-time CIP type things. General fund, $11.9 million. Water and sewer, $3.1 million. Airport, $5.7 million. Drainage, $800,000. Solid waste, $3.1 million. And Civic Center Fund, $1.9 million. That is, again, after we've done all the math, we've done all the work with the all starting from the ACFR. This isn't made up stuff. This is all from, we showed you how we got from ACFR to here. This is where we end up today. This is the roll-up of all your closeout CIPs, all your end-of-year operating that's left over, all your existing reserve, minus all your liabilities and everything. This is what you end up with to work with today. So this is where I'd like to take us now to go towards Andrew with supplementals and CIPs and start talking about that conversation on how to start allocating this towards the list of things we have. So,
quick question. So you are saying it includes reserves and CIPs, but I want to make a distinction. You're saying that existing commitments from previous years are included in those amounts or are not included?
This is the net after all that's been taken into consideration. After you've looked at your cash flow sheets, after you've considered existing CIPs, closed out CIPs, proposed expenditures for salaries, for electricity, those kind of things. After you consider all that, when it's all netted out, this is what you have to work with when you look at your available funds over expenses. And I'm saying that right, Andrew, Lola?
Yes, and meeting reserves.
And meeting reserve, yes. And so this figure here is after you look at our 3-month calculation for reserves. This is what you have to work with today and tomorrow to tell us, I want to give staff a 3% COLA, or I want to add a AMW officer, or this is what you have to work with.
So new CIPs separate from existing CIPs.
Correct.
So existing CIP money, borrowed monies, debt, things like that, not reflected in this current budget.
It is reflected in budget. It's not in these numbers here. And these numbers here is the net after all that's been taken into consideration. So and one of the earlier slides talked about how again, closeout revenue gets rolled into this. Existing CIPs, things that we're under contract for, those are still budgeted to be done. And so we still have to get those things done. But this is your final net to work with for new CIPs.
To make sure, though, at previous budgets, like current budget for 26, right, those CIPs over 100 million, was it 108 maybe that we had? Something like that. This proposed budget, 27, how many, 43 million? Or 47?
It's just going to depend on
flux.
debt versus cash.
Okay.
Yeah, it's going
So
to fluctuate.
let's just say there's 40 million. So the existing 100 million that, is in current 26 was voted on already. The 40 million of proposed would be voted on in this budget. And you're saying the existing 100 million is considered, but not considered in the amounts that we're looking at here. So like fleet services, as an example, we don't have a budget line item for those previously approved CIPs in this budget.
It comes out of your available funds calculation.
How would that work? Like, so if you go to CIP, if you go to fleet services, show us on what you're proposing, show us that line item that pays for those previously approved CIPs. And what I'm really driving at is, do we have a comprehensive budget that we're looking at that reflects all CIP balances and how much we have left to pay versus, so I want to say note 12, y'all help me, was it 280 was the total that we pushed in the ACFR? So in the ACFR, we capitalized closed out projects, and we did 100+ million, 109 million. That's probably the wrong number. But then that means those are closed out and they're capitalized. But then we tell the audit company how many millions we still have left sitting in that CIP of previously appropriated monies. And it might have been 280+, right? Note 12, now you guys are recommending that it be reduced down to 207. And so if we're going to reduce that down in commitments, because I heard Stephanie speak to, there was an error in Workday software that that we reported our commitments higher. So if we're saying all the commitments are in current budget, that where's that line item? And in 27 budget, do we have that line item?
So the commitments are in the available funds calculation for projects through the end of fiscal year 2024, 2025. So you see that in the construction in progress balances. For fleet, we have $15.5 million in construction in progress.
Okay. So out of the $280 million worth of commitments at the end of FY25, going into 26,
Okay.
we had $15.5 million in that fleet fund that was going towards $15.5 million worth of commitments. Is that correct?
For fleet, yes.
Just for that fleet service?
Yes, sir.
And that's part of the $280 million
Right,
total?
that we are adjusting.
And you back that 15.5 out, and then you show me the remaining balance of available funds in that fund?
Yes.
Okay.
Yeah, again, ultimately, get back to that one slide. This here is the final you have to work with for new. We've taken into account as staff, we've worked through the numbers, all your existing commitments. Again, back to what Mr. Reed and I were talking about earlier today, is the budget is a pool of funds. There's pluses and minuses. When you add up all the pluses and minuses, this here is what you have to work with today to commit to new things. The budget takes into account what you've already committed to, whether it was an approved contract or a planned contract. The budget takes into account all of that. This is the new to be committed going forward. That's the goal of a budget process, is to work on these items here.
Yeah,
And as we close out other CIPs, we will bring those back to you the next fiscal year. And so as the next 12 months play out, we will continue to close out more CIPs and either bring them to an end, either contract completed or no longer feasible. And then a year from now, that council will be able to then plan those funds for the next budget. And so it's an ongoing process.
Yeah, so if we can go back to page 49, for example, because we're talking fleet, it's just good to stay there. You guys revised this projected year end with that negative 4.7 up at the top, and then you had this capital reduction under expenditures of 14.7. Is that what you were trying to do prior to the Note 12 correction? And then this doesn't change Note 12. Note 12 would still be 288 in commitments. And in my conversation with Kirshnak yesterday, he was telling me he thought it was being reduced by 80 million, 81. So it was like 207 is what that number would become.
Yes, so the numbers we presented are from the ACFAR as it currently stands with Note 12. When the revisions are made, we'll have an updated cash flow. And we did give a few examples of how the updates would look like once Note 12 is updated.
Okay, so the updated fleet proposal, what page is that? There it is. So if we look at this, what you're proposing is that we would start the year at 10 million in existing fund balance or net position on this fund, right? This one's a net position.
That would have been the 25-26 starting point, this current fiscal year. So
That's right.
that would have been the audited figures for that. Again,
Now-
what we're starting with for the budget is
so-
4.7 million on the right column.
Now, but
It's not net position, it's available funds.
Available funds,
It
yep.
doesn't start, because net position is government-wide, we're dealing with fund. So
Okay.
it's the calculation.
so if I look at the ACFR,
You're not going to see it.
no number
No.
correlates.
You have to take cash investments minus liabilities encumbrances.
That was the
So-
calculation we did on the slideshows
Right.
earlier, that the staff walked you through the process of getting to that ultimate number there.
Yeah, and looking at the ACFR though, if you go down to, on page 200, if you go down to the bottom, unrestricted, and it is categorized as net position according to our audit firm.
That is correct.
Unrestricted is 12.7 million.
But that's not an available funds calculation.
What do you mean it's not an available
That's not
funds
going to be the
calculation?
exact same number that's sitting up at the top of that line. On the screen,
So you're doing your adjustments and then you're
Right.
giving us the available funds calculation.
right, that's
Yeah.
what you have to spend. This tells you when your budget is balanced and when you need to stop finding priorities.
So fleet services at the end of 25, according to the ACFR, net position of 48.8 million. You calculate that down through commitments in CIP that are remaining, less encumbrances and a few other things, and you start the year at 10 million.
Right. It's a cash basis versus that's a modified accrual basis.
Right.
So we've got to put apples to apples.
Yeah, so unrestricted of 12.7 means what?
It is not tagged for a purpose. You can spend it any way you want to
Okay.
on those reserves.
So at the
but
end of-
still not in that position.
No, but
That's not
unrestricted
available.
is unrestricted, right?
It's unrestricted for any
So
purpose.
it's not committed to the CIP balance.
True.
Okay, so we start the year with 12.7 million in unrestricted funds according to the ACFR, before you go through and do your calculation.
Right.
In a modified accrual form, yes.
No, but unrestricted is unrestricted.
And it's unrestricted in the sense that you can use it for anything within that fund. So so if it's a fleet item, you can use it for a fleet item.
So help me here.
But it's not cash you can dedicate toward. You don't have 12 million to dedicate towards whatever, because
No.
there's calculation you have to go through.
No, you do.
No, you
according
don't.
to the ACFR. So in unrestricted funds, how is the 12.7 million in unrestricted funds at the end of that year not able to go towards whatever we would determine?
So in our available fund calculations, we look at the cash aspect of the current assets. That's what we put together to calculate how much resources we have available in terms of our actual cash. So we add our cash and cash equivalents, we add our restricted cash as well, and reduce the CIPs as well as liabilities and encumbrances. So the view we show is focused on cash, what we have in terms of available cash resources to commit to future resources, future expenditures for the city.
Correct. So then we have our net position from there.
So the net position is a different view
Okay?
on an accrual basis.
Is the net position important?
It
If
is
I'm-
important because it provides the position of the enterprise or the fund at a particular point in time
But the point in time would be the close of business at the year end.
at year end. So what
Correct.
we're doing is projecting forward for the current budget year to determine resources for the year to support various expenditures.
And that's where you get the 4.768 there, and that's where do the calculations. You start with, in this proposed budget we're giving you today, 4,768,938, and ultimately, then you go through that calculation there with new revenues, expenses, you end up in the reserve, you end up with a balance there. So again, getting back to our final slide, these numbers here are what you have to work with today for budgeting purposes.
So the ACFR totally lines up with what you have current on these pages.
As we showed today, yes. We
As you
we
showed
walked
it
you through
today.
the calculations, yes.
So we're no longer bringing in an expenditure line item adjustment like we had proposed on Tuesday.
Again, right now, the ACFR has the current Note 12. We're getting that corrected. We've given you examples of what it will look like when the note is corrected. And so that way you can see what it looks like. Because I know it's hard when you see negative 4.7. This is what it actually looks like, is positive 10. So for that starting point. So we wanted to walk you through that looks like there. So that's being worked out with CLA. I wish we could have it done before today, but there's a process we have to go through.
So in the conversations with Kirshnak yesterday on discussing all this, I understand Note 12 to be a commitment of remaining CIPs. Is that understood? And that is $288 million, according to your slide as well, right? In
Yes, for the
remaining
whole city.
funds.
Everything.
And so there's $288 million inside of different fund balances, net position, or even in our portfolio, right? You've identified those monies. And we're planning on spending all $288 million this next year, or we're going to communicate how much of that is to be paid out during the 27 budget. So if we have $288 million to spend, and it's going to take us 3 years to spend it, my question would be, how much of that is incorporated into the proposed budget?
And the available funds, all of it is taken out of the cash and investments.
Well, you're not going to spend all of it in this next year.
You're obligated for it.
So
Yeah,
you're
our goal is to spend it all. So, but then whatever's left over gets moved into the next year, and then what's left will moved into the next year.
So if you remove all of it out prior to your starting position, right, you're kind of on your cash flow, then you're reserving that total amount. So it doesn't ever show up in the actual budget for what we would expect to spend on that fund for that year.
When you move all of it out, you end up with this final slide of 6.2 general, 2.5 water, 11.9 for general. That's where you end up at.
Okay.
Again, that's for budgeting purposes for today. And so that's when you move all that, that's what you've got left over.
So I think I understand better. So we are not getting a complete picture of seeing the $288 million reflected on the budget, because it's been calculated as an extracted amount total during end of year and proposed budget. So even if you ended the year with 40 million or 48 million in one fund, you guys go in and you pull out different things to give us our new starting position. So you set aside all of the commitments that the city still has to make. So those appropriations are still there.
Right.
Yes.
Okay.
It
And
keeps you
then
on a cash.
as we
basis.
bring
Yeah.
those projects back, we identify savings, like we didn't do the project, right?
Yes.
So those monies are still there as well.
Yes, sir.
Oh, okay.
Yes.
And then when we get to the bottom of the proposed new budget, we only vote for the new CIPs if we elect to.
Correct.
So in the new budget that we're going to recognize, it's only going to list that $1 million fleet fund CIP project. All the other fleet fund CIP projects don't get re-voted on in
Correct.
that budget. They're
Yeah.
accounted for previously in a calculation that you're doing that lines up with the ACFR.
Yes, because you or previous councils have already acted on those. And so my goal as a manager is with my staff is we're going to be getting those done sooner and sooner and sooner and faster. So yes, you as the August 2026 City Council, your goal is to dedicate these funds here. And so we've already acted on the previous ones.
Yeah.
And so we as staff have our marching orders on those. We're trying to get those done as fast as we can. And then when we close them out, we bring those the leftover funds back to the next one, or even mid-year like we've been doing even last Tuesday night. If we have needs, we bring them to you, and then you vote on where to put those monies.
And
at.
we should have a great level of comfort. A forensic audit, right? Going to go through the CIP program. Going to go pull supporting documents, see exactly what they are. So like in the 43 million of recognized remaining monies that are unspent in closed out projects, but only back to 23. Those, we're going to go all the way back to 2012, but in those, that 43 million is still there, but it doesn't somehow get pulled into this budget in a cash flow
It does. And again, this here is your net taking all into account because you have
Well-
to do the calculation for reserves, for liabilities,
Well,
for
how
expenses.
would we wash that 43 million off if it's not something that, so the appropriated balance for those projects is included in the 288 million, right? And if you've overstated that commitment, you're asking the auditor to recognize 207. But either way, when you've closed out those projects at year end of 25, you're only talking about what you're pushing to 26. It's only 207 moving forward. Whatever you've closed out up until that would still acknowledge the 43 million in savings.
No, because as we said with the utilities, about 25 million of that 27 was a reserve issue that had to be fixed first before you could spend it again.
And again, your ACFR takes into
it's
account all
calculated
these
out.
funds. Your ACFR takes into account the CIP, the closeout CIPs, your leftover operating, your leftover reserve. It takes all that into account. It gets baked into the calculation for your available funds. So it has been taken into consideration to give you these numbers here today.
So even if you go through a forensic audit and they pull all of those projects and they say, yeah, we can identify every project number, where the money went, it all went to public use, here's all your savings, you're saying that those savings now are being addressed in this proposed budget?
Yes.
And that after everything's said and done, what's the total here at the end of the day? How much is it?
11.9 general fund, 3.1 water and sewer, 5.7 airport, and on, yes.
A little over 20 million.
26 million?
Is that what it adds up to?
Yeah, 26.
26,485.
Yeah.
26,485.
Across several funds. And again, you don't have 26 to all go towards general. You have 26 divided across the funds.
So you've located $26 million in the total monies
When it all
anywhere
nets out,
in the
when it all,
organization.
yeah, all nets out with
And
reserve
when
and
you're saying
everything.
nets out, you're just saying like once all of the projects
Yeah,
are
all your
calculated.
cash flow for the columns there, from available funds to new revenues to expenses to liabilities to your 3 month reserve.
And that would assume zero savings on any of the current projects that hadn't been closed out.
Right, because they're
Yes.
still pending and committed.
So that would mean you've got 207 in commitments and you spent all 207, but in the other $200 million worth of closeouts in previous years, two things would happen there. One, we wouldn't identify any additional savings past 23 because we've only identified savings back to 23. So that would mean that none of the monies previous from there would have had any savings.
I don't know the age of each project we've closed out, and so.
Yeah, it varies going back 5+ years, 10+ years.
Yes, yeah.
Yeah.
But as our CIP committee and our staff continue to do their work every day, we're going to continue to close out more. Jerry's busy on doing that and getting projects closed out, so we'll be able to bring more back to you and more back to you and more back
So,
to you.
but what this council wanted was, we wanted those CIPs that are old, right, closed out, and then that total amount of money of monies remaining in previously appropriated councils. We wanted those brought back to us separately so that we could vote on those items. What you've done is you've brought all those back in this budget proposal.
Which you now can vote on now. And so, again, there's a process, there's a point in time when you do a budget, that's when it's all put here. And so, yes, we have been bringing back to you some, like we did municipal court here on Tuesday. We did a utility one.
And that's
So
a
we bring
great
some
example.
back to you all then. But otherwise, again, given in point in time, August 2026, this is your budget time, we wrapped all that's remaining into this process so you can now commit to new CIPs.
So that's a great example. So the $1 million that was saved in the municipal courts projects that's now going to go towards future municipal courts projects, that wasn't considered in anything that you've done here.
So it's taken into consideration, yes. And so,
So as we close
it's
out,
committed.
I'm sorry, say again.
It was,
Yeah, that wasn't closed out yet.
Good
We're just now
point.
closing that.
Yep.
Yeah.
but it was already
Good point.
allocated.
Yes.
It's already allocated, so it's
Yeah,
not
it's
going to affect the numbers because we
Already
just
allocated,
allocated it
yes.
to a different
It's
project.
allocated to allocate is what
Right.
it is. Yeah, good point. Thank you.
So because I really do like the new process that Mr. Hooper's got in place, as we complete projects, identify savings, bringing those back, and Unil's going through and verifying all of those, so we see supporting documents now, and we know that's a realized $1 million savings. That's very easy for us to manage moving forward, but it's the going backward part that I think that we have concerns in. So how do we know that the $288 million was overstated?
Because it was a gross line versus a net line. So it was a new report, and from Workday, she just picked the wrong column. Staff picked the wrong column, comparison-wise. to prior year.
So I understand y'all reached out to Kirschneck like July 21st, right? And
Yes.
you sent it to him saying you've realized that you've overstated your commitments.
Right.
And so you caught it and you sent it to him and you said, hey, we overstated our commitments. Let us know if we need to make a change. And he took about a week and got back to you and said, yes, this is material. You need to send me the new data.
And we did.
Okay. And then, like a week after, it's 27th, 28th, whatever, he says, get me this. And so you guys got it to him last week, and he's now, is that right? When did you get
No,
it to
I
him?
mean, it was days after we acknowledged, and it turned around the same day that he asked for it.
So end of
So,
July, you guys
yeah.
turned around the revised commitments with the note, with the request to the auditor to amend his audit.
Right.
And then he's asked you, or has he not asked you, how do we know that these were overstated commitments?
We've presented all of the data to him.
What does that look like? How many projects?
I haven't looked at the data to know, to be
So
with-
somebody presented all of the data? Would you-
Which, actually looked at all of it as well.
And when you present the data to him, he's going to go back through all of that, and he's going to verify and maybe sample and look at those to see, okay, you actually did overstate your commitment here.
You're going to have to help come answer this question.
I just
because
don't want to take
There's
200.
not a whole lot of work to be done. It's just a different column that's being pulled
Well,
on the data.
let me say it as a citizen and as a representative of a citizen, right? So those people seated behind you and watching online, their concern and my concern would be that we have $288 million worth of commitments that we've told them we will take their money and go and appropriate into their town. We can't arbitrarily come back and just hit a delete button and say, we're going to change that number to 207. We would never do that. What we could have done is we could have said, we didn't factor the 288 correctly. It's actually 207, and here's all the supporting documents. Now, how we, citizens, get comfortable with that is it goes to CLA, who did a great job on the audit, and they look at all that data. They give their stamp of approval. Then we move forward with the 207. So how does he know that? What does his process look like? Neil, you probably tell us that.
Okay, so what we did is we gave him that report, the updated report, and the supporting line items that were affected. So we listed the projects that was changed, that need to be changed, and showed him the support as to, okay, how did we get that number? So he was comfortable with that, and he's getting it QA reviewed as we speak. So.
Okay. So we'll get all that amended in the ACFR, and then it'll reflect that in Note 12 moving forward.
Correct.
So
Yes.
we should assume we still have $207 million sitting in the accounts to go and do all the projects that are already underway, and that we haven't removed any projects. That doesn't
Yeah.
take any
Yeah.
of the projects.
No
we will
money
still
is
get.
missing, no money disappeared. I mean, the numbers are the numbers at the end of the day. And so what we have is what we have. And so there's no missing money somewhere.
But having to know that was 9/30/25, so any since then that we have closed out and brought to you, like the ones from Tuesday, are
Yeah.
part of that 207.
That is just the 9/30 end of year FY25. Okay. So to make sure, every number that I'm looking at the top of this center column here, where you're giving me my projected year end, is from a calculation that you've done as staff, not to be tied to my ACFR.
It is tied to the ACFR, and that's the process we showed today. And so there's a calculation that goes from the ACFR to the cash flow.
But you have to back out those commitments in order to get to that number at the beginning of the year.
It's a calculation.
Yes,
so.
you have to back
Yeah.
out the commitments.
Okay. And so we are not going to have any line item deductions in the middle of the expenditures like we represented on Tuesday, if you do that.
If we update Note 12, that's correct.
And if it's ready by September, otherwise it'll still show how we presented it.
But again, at the end of the day, what we're doing is fiscal year 26-27.
Okay. Go to that general fund calculation, if you would. You explain the 6.7 million on that front page and where that breaks down. Could you give us that breakdown again?
It's in the middle
There
of
we
the
go.
screen.
So if you
Yeah.
look at your general fund summary, there's 5.5 million in general construction, right? There we go, that's the one. Right above that, you see the general construction line item for 5.57? Why would you deduct that twice?
You're actually backing it out, so you're
So
backing it out.
You're listing 5.5 as general construction as an expenditure. So I'm on page 11.
And we're just backing it out so you don't overextend your reserve. You don't need to reserve more because those are one-time expenditures.
Yeah, but I'm just looking at page 11. I understand the breakdown. So you're telling me the $6.7 million at the bottom, the breakdown of that is it includes 5.5 million of general construction. Ms. Katrina?
That is correct. It's also up in the middle area in your
Okay, so
expenditures. So
it's-
you're
it's-
taking it out of your,
It's listed as an expenditure.
it is.
Are any of these other items listed as expenditures up in the expenditure column?
Well, they would all be payments out, so, other than the Parks E&I.
So everything that is included in the 6.7 is already considered in all of your expenditures that add up to the $287 million. Okay, then we take our reserve out of the 287 for the 55 million. And, I'm sorry, say again?
It's out of the 281. So we deduct that so you can calculate reserve off the 281.
Well, and so I'm just trying to be very simplistic. We're going to take our total revenues over our total expenditures, and then we're going to have a balance. Then the only math problem that we, the simpletons, need to figure is we should have a 90-day operating reserve. That's 55 million roughly. Okay, so total revenues, as you've got them, right, over total expenditures, with the back out of the 55 million available funds that are needed, then we have an additional one-time expenditure item. It says less one-time expenditures. Am I misinterpreting the word less? Does it mean minus?
It means minus.
So
Yes.
it's a deduction, so we're going to take that down another 6.7, even though we've already calculated that 6.7 in all of our expenditures.
It's the difference between calculating your expenditures versus calculating your reserve.
Yeah, you're doing two different things on this page here. Up there, the total expenditure is showing how much you have to spend. The bottom third down there is your calculation of reserve. That's a separate thing from the above there. So that is just showing you what we need for reserves right there.
So we take the 287, that includes all of the expenditures. Then we deduct another 6.7 million off of that to pull that out to show that those are one-time expenditures.
Yeah, because you don't include that as part of your reserve calculation.
Then it wouldn't factor at all if we didn't list it separately.
You're just getting to the 90-day reserves to see if you're over budget or under budget, or if you're balanced.
So
down
it's
at the bottom.
it's very confusing if you're reading this
Absolutely.
list, right?
Absolutely.
So if you're reading the list, you see your total resources, right? $343 million total. Started the year with 62 million, bring in 271. We're going to move that number up a little in our projections. Then you've got grant income, then you've got transfers coming in, and we know where some of those are coming from now. Then you back out, or that's your total revenues plus your starting position, 343, right? Then you go down and you list all your general operating, and then you break down everything, including the breakdown of construction for 5.5. So we back all that out, and we end up with transfers, which we can talk about later. But that's going to cost us 287, which nets us the balance there, available funds of 55 million.
55.3,
Right.
correct.
Okay.
And so then we compare that number to what a 3-month reserve is needed. And so we do the calculation. Then below that 55.3, you do the calculation and see, okay, 287, pull out the 6.7 because it's one-time expenditure to see what our you get 281. Then your 3-month reserve 55.8. So then we show you that 55.8 is what you need for reserve. So we are $523,000 under our reserve. But for us, we're comfortable with that.
Okay.
Because that's close enough.
Okay. Thank you for walking that all the way, the long way around. Like, I know that is very difficult in explaining to the public who sees it listed this way. All they see is a one-time expenditure over here with no discussion next to it. And so, like, we get those questions.
Yeah.
Y'all probably don't. Like, why'd you take another $6 million off? Here you go again. You're this or that. So, like,
Yeah, it could be in the future. I mean,
is there a reason that you do that?
We could put like a big black bar across there to almost say like this is this, and we can put it on a separate page if we needed to. It's all just here because that's how cash flows work, and so. But yeah, it is two different things here. It's comparing your 3-month reserve to your available funds in the end of the year, and that's what we as staff. When we see that available cash flow over under, when it's way, way off, that's when we go backwards before coming to you with, okay, if it said like negative 30 million, I'm really in trouble for reserves. And so that's when we go back to, okay, we got to go back up here and figure out, okay, what do I cut so I make sure I have enough reserve at the end of the year. So again, what we're saying is 523,000 over is comfortable for us. Given 55 million is a number, 523,000 is a small number compared to that.
Okay.
And I do want to add, that is total ongoing expenditures, so your ongoing reserves. So you need to back out your one time to get your ongoing reserves.
Ongoing reserve, yes.
Yes.
Okay.
Because we don't need to reserve a one time because it's a one time.
So here's my last question, and then we'll move forward. General fund, new one-time cash funds available, 11.9 million. But I'm tying it back to, now I see general construction costs of 5.5. So I don't understand where we come up with the 11.9 here versus we're listing it at 5.5. So if I'm just looking at page 11, I'm going to expect to have CIP money of 5.5. But then when I go back to what you're showing me here, you've identified 11, almost 12 million there. How do we identify that? Because this page 11 is now comprehensive. It's got all the numbers calculated in it.
I think we need to bring up the 4,000 tab on the CIP piece because I think there's some realized available funds that 5.5 is basically new CIP, and then we also do this calculation in our general construction fund as well. So we're getting an available funds calculation there. So there is some savings that were realized there. So where we're bringing it back to you. So there's that 5.5 plus less the 11.9 million. So you got 6.4 that we've realized that are available to you on top of that. That 5.5 would be new, plus the available funds calculation that showed us we had some realized savings that's being brought back to you that's available.
That's capturing those general fund closed out projects and savings.
And why that's so difficult is we only now are looking at the 207 as closed out by 25. You identified in those closed out projects $43 million. But then what you're doing is you're running your projects through 26, and you're finding at the end of 26, we've built in enough money for the next year's budget in our new revenues, plus you've got an additional $6 million that you've captured during current year.
Yeah, some of it will be current year that rolls over. And it's a little different than our utility funds because they're all within their one fund. General construction does have its own bucket that once a project's closed out, it goes to that, and it has to be carried over to be
I just want to make sure that as we walk this out, when we're bringing projects back, we didn't consider some monies here that, like municipal court's a good example. We felt good voting for that because we've identified that money. So you spend it within the current year, but somehow in here we're adding another $6 million. But you only have closed out projects and ongoing projects, and we're really trying to change over to the new format, and it's getting even more confusing in this, especially with the Note 12 change.
Understood. Yep. So with this, council, with our available time remaining, I recommend that we proceed with the submittal and CIP conversations, and so we can get some started, because we do need to get some direction from council on how to dedicate these funds.
Well, I would like to, if it wouldn't mind, just as direction from council, can I just, on the very last page, can I just ask a couple of questions?
Yeah,
on that?
last page of what?
the presentation that we just did.
Okay, yep.
So what you're saying, in the general fund, we have 6.2, potentially $7.2 million that is available for recurring expenses that is not currently identified in the budget.
Correct.
And then, so we have a list, I'm sure you have a list of things, we would have a list of things to consider for
About
that.
19 million worth, yes.
And then the same with the water and the sewer and the rest of it.
Yes.
And then the one-time cash funds available for new CIPs, this is the result of, after going through, closing out the projects, and then looking at the cash flow analysis and putting, and doing the compliance with the reserves, this is the amount of money that was freed up in these particular areas to do capital projects.
On top of excess revenue over expenditures, that all comes together for that calculation, yes.
Okay. Well, I would like to, and I brought this up at the end of the very meeting, because I think it's part of the direction that you would need from council, in addition to not only how we're going to spend it, but I do want to go back to the property tax rate. And maybe where we would stand. My position would be, I'd like to see us do a no new tax revenue rate, about 700,000, I guess. And then I guess my other question was to further help on mitigating the tax increase for the citizens. What those one-time expenses that are in the general fund, are those some things that we can identify to use part of this 11.9 million for?
Yeah, and I apologize. We didn't get a chance yesterday to
that's
work
fine.
through
I
those
know.
numbers. Yes, and so
Well, I don't need to know the specifics of
Yes.
it, but I mean, there is some potential for that in there. We don't know how much it could
Yeah,
be.
and so we did have a brief conversation. There's not, I mean, in ongoing, there's not a lot of true one time, because again, a lot of our purchases are ongoing purchases we do every year. So we dedicate those to your CIPs. So I think my recommendation will ultimately be, and not to cut to the end, but my recommendation would ultimately be that if we're looking at the property tax relief, we just look at the no new revenue rate as being, or we even, if the council wished to even subtract, even go back further on the tax rate, we focus on the ongoing recurring side of things.
Well, I would just like to be able to look at as much as we possibly can. I mean, as I
Sure.
look at other taxing entities, they are all appearing to go up. We have some flexibility. We have some money that the taxpayers entrusted with us over the years, and it was inoperational at one time. And I understand, kind of the part of not wanting to do that. But I would just push for as much property tax relief as we can get on the M&O side.
Yeah, so I think it'd be good now, because it's a good point. We should talk as a council, the VATR, the voter approval tax rate versus NNR rate. If that's what the council wishes to do, that's a good conversation to have right now, because that does change a lot of what we've got to do the rest of the day. But if the council decides to continue with it, then I think that's the direction we need as well. So.
Well, the other thing, just to keep in mind, and again, when I'm looking at the property taxes, I look at wholly what our taxpayers are paying. Mm-hmm. So that's on the INS side, and it's on the M&O side. And we've already set the INS side. We can't provide any relief on that side. Mm-hmm. But on the M&O side, we still have the availability to do that. And the other thing to keep in mind is, again, when we get into next year, we're going to have a lot of INS debt running off, correct? I'd say a lot. It's going to be
Yes.
going to be significant.
Yes.
And depending on what we do with that subsequent debt, we could decide to issue debt, or next year we could reclaim what we did not claim this year on M&O, the tax rate, if we wanted to come back and get it.
Yes, that is correct.
So I mean, it's a flexibility. So if we look at what we can do, I'm just looking at, I think we have a couple years here where we can at least try to mitigate the property tax increases as much as possible without costing, I think, hopefully the city a lot, and just being able to do that. So that's what I would like to consider, but I don't know what everybody else
What Councilor Simpson is saying, just to make sure the whole council, in the truth and taxation forms, you do have the ability, if you choose this 26-27 to not raise your tax rate, you do have the ability a year from now to go back and capture that then. Now, you have a 3-year window. So if you wait 4 years, you've lost it forever. And so you do have the ability to go back. But then the council a year from now will be looking at 3.5 plus more. So they'll be faced with that question on, do we want to be the council that raises it 3.5 plus more at that point? So this is an ongoing forecasting effort for budgets.
And what I would add, to that is, if we run those calculations, like what Councilman Simpson's asking, is what does that save? Like if we take some of these monies, like he's saying, and apply it to some things in the budget, so that we can remove that cost, what does that equate to savings? And I would hope that would be part of the discussion, because I think that's exactly what he's getting at, is if we take this and pay for some of the things that are in here, what does that alleviate to the taxpayer? That's what you're looking at, right?
Exactly, because I think, again, because we have this opportunity to be able to look at it. I guess when it comes to the official rate that we had to vote on, because at some point we had to vote on what rate, even before we complete the budget. Is that not correct?
Yes.
So at that point, we would have to decide, are we going to vote on no new tax? Or are we going to vote on the voter approved, which I guess is what is in here right now? Or, we may already be past the deadline to vote for a voter approved. I can't remember what that
we are.
is. But we'll have to vote on one of those two tax rates at that point.
Yes, yeah, either the voter approval tax rate, the no new revenue rate, or some rate in between those two numbers. And again, as your manager, I always advise you could always drop the rate even further. I don't recommend that because we have services to provide, but you could always go below the no new revenue rate. So as well.
I understand that. Again, I just think as cognizant as we can be of financial pressures that are on many families in the community, whatever we can do to help them out. And it looks like, when I look at, what was in here, even if we lower the rate, not all citizens may get a tax reduction because their appraised value has gone up, and I understand that. But just looking at Randall County, it looks like most people, when you look at that median, it's a good chance of even at that rate that some people are going to be able to maintain or maybe even get a little bit of a tax break out of that. I don't want to do anything to harm the city, but citizens have had to tighten their belts because of a lot of things going on, and I'd just like for us to be cognizant of that as well as we're kind of figuring out what we're going to do and what we're going to need.
Absolutely.
Can I step in with a quick clarification just on the process part? Because you're right, Councilmember Simpson, we will bring an item to discuss and approve the maximum not to exceed tax rate before you actually approve your tax rate. So if you do set that at a higher rate, council can still come in when you actually adopt your tax rate and adopt lower. So on August 25th is when we're planning to discuss and consider the not to exceed tax rate. And so if you do go higher on that date, you can still decide to adopt a lower tax rate.
I did want to go back to the CIP just for a second. We had a typo. Solid waste funds amount was listed twice as $3 million.
Exactly.
Water and sewer is actually $13 million. So the overall, when you add all those up, is $36.4 million.
So it's I was going to ask you that question. It's to the dollar amount the exact same. I'm like, there's no way.
Yeah, it's not right. It's $13 million.
So
You can
water
tell
and
we did
sewer
this
is
last
actually
night.
13?
13. Yes, sir.
Okay.
Which matches the other documents I sent you from Friday.
Okay. So this is not the right one then?
No. It's
We
double
do
twice.
need to understand, are we looking at a tax rate increase, potential that revenue's $700K, after we've understood that each penny would represent $1.6 million in additional revenues. So how do we arrive at that 700?
Yeah, so the truth in taxation form, let me get it over here. So, and again, I don't know if you guys have that, but it's a 10-page calculation. So just to summarize the whole thing, because I don't recommend we go line by line. We won't get that accomplished. And so just to begin with, Randall County first does the calculation, and then our staff double checks the calculation. So you have to understand that I know citizens think that it's simple. It's revenue times 1.035. It's not that. The no new revenue rates and the voter approval tax rates, they go through dozens of sequential adjustments before the 3.5% is even taken into consideration. The legislation put into account that before we even get to the 3.5, it looks at tax ceilings. It looks at court-ordered and ARB appeal adjustments. It looks at new exemptions granted this year. It looks at agricultural, timber, special appraisal changes. It looks at tax increment finance changes. It looks at properties under protest or not yet certified. It looks at annexed territories and new improvements. It it looks at unused increment rate, and it looks at debt rate. All those things go into the calculation. So so you look at when you do all those 10 pages of calculations, at the end of the day, that's what gets you your $700,000. And so it's not a simple 1.6 to 1.6. You have to take into account all these exemptions and exceptions that legislation requires us to go through. And we just had a relatively flat year when it came to values. And so, and you mix in different protests, you mix in different court orders, you mix in different exemptions, all of that nets out to get you your final number. So that's how it works in a summary. I know the council wants to have a summarized version. It's a very complicated calculation. But again, Randall County did it, our staff reviewed it, and so the numbers appear to be what the numbers are. So
Grayson, if you'll bottom line it for us, your proposed budget over here has a total revenue, right, operating income of $271,379.
Yes.
That calculation is at 44 cents per 100.
Yeah, it includes that, yes.
Okay. Reduce that down to 42 cents per 100, which would be the no new revenue rate. And bottom line it, tell me what that number will be. Is it 700,000 less than the 271?
You basically, you just eliminate $700,000 in property taxes. Is that right, Lola?
Right. Yeah, so we have other components of the property tax account. We have the current year levy, we have the prior year tax levy, as well as penalties and interest payments. So that all gets factored into finding the difference between our last year's collections for M&O and current year M&O taxes.
Bottom line, Councilman Simpson is saying that the council could provide property tax relief to its citizens and hold the no new revenue rate at 42 cents, whatever that number actually is, and it will only change my revenues $700,000 in your budget.
And then I think it'll impact the tiers around 200,000.
Yes,
so
yeah.
it's more like
Yeah.
900,000.
We'll run
okay.
the numbers for you.
Okay.
That's for the 2 cents. It's only it's $900,000 for the 2 pennies.
After you calculate everything out and you get the extra revenue based on all this calculation, yeah, it's just that. Yeah.
Doesn't seem right.
I know that's why it's a very complicated.
I get it.
Yeah,
I don't want to know the complicated.
I
just want to know.
I wish I could tell you 1 + 1 + 1
No,
= 2
I
in
don't
this
need
situation.
that. I just need the simple 2 cents means $900,000. 200,000 tiers, 700,000.
So drop into the no new revenue rate gets you down to that 700,000.
Let's drive here real quick. Council, are you guys good to consider moving forward as you entertain requests? Let's intend to hold to the no new revenue rate, so taxes will stay flat, not going to increase taxes at all. That'll cost us in the general fund $700,000, and we are comfortable with considering an additional $1 million projected in sales tax, which was super conservative to hold it flat to what the current year will be.
Well, it's
in
flat
increase.
plus 3%.
Oh, well.
It's estimated actuals plus 3%.
But
is what we're shooting for.
so it's 26 projections, right, that are still coming in
Which we have
strong.
one more month of estimation.
And then you added 3%
on
for
top
next
of
year.
that. Yes.
Oh, okay. So $1 million additional revenue projection
So
would
if you drop-
offset that on sales
So
tax.
if you drop
which-
the property tax down to, you'll have 5.5, add back the million, brings your number to 6.5 million available.
Okay, so council, we keep saying, hey, all of our services provide services for far more people and businesses than pay taxes here. So just our property tax payers, like they got to pay for all of it? No, let's figure out a way to increase sales tax. Let's figure out a way to increase economic stimulus, bring business to town. Let's have different methods. These are working, right? So all we're doing is what we intended to do. If we push that sales tax number over and rely on that just a little bit, and we relieve some of the burden to pay for police, fire, services, core, all your amenities. Can we go that direction for the rest of the conversation? Councilman?
I'd just like to ask a question of staff. If we do this no new taxes, what is that going to do to the potential increase in salaries and in wages for city employees?
Well, obviously, you're working with less money. And so as, again, if the city council in today's conversations because you have about $20 million worth of supplemental pay, and part of that is general employees, police and fire, and so I believe the total number of that, and we're kind of jumping ahead here, I think we need about $4 million for the COLA for all employees. Is that right, Andrew?
One more time.
For the COLA for all employees, 3%, is that about $4 to $5 million?
In general fund?
In general fund?
Much less than that.
Oh, much less than that?
Yeah, it's less than $2 million.
Okay, so you should be able to do COLAs for all employees with what you've got working with.
3% civilians, 2.1 million.
But what about with police and fire as well?
4.6.
Okay, 4.6, yes. So you would still have the ability to do all that. You would then just be cutting into your ability to pay for, if you want to add, like, again, example, another AMW officer or tasers for police or those kind of things. Again, it just comes down to you have less revenue to work with for the pool of submittals you have in front of you.
But if we don't budget, but we just found $1 million, I'm not found, which I actually think, I don't have a problem budgeting sales tax conservative. I think there are just too many factors that can come into play that you cannot predict on a dime that could protect it. But just say, for example, instead of saying $1 million, we got 700,000. Well, we just switched that from our taxpayers to the sales taxpayers. I mean, that would net out the same. There would be no difference if we added that back in there. Again, I'd just like to see what else we can do without causing havoc or problems to, again, look at, the 11.9 million, how much of that, can we use, and then how much of it, are there somewhere where we could use part of that so we don't have to issue debt on some type of project? I mean, if we've got the cash sitting there, I mean, we look at, our goal is to invest X number of dollars in streets every year. That was about 12 million and 14 million a year. I mean, again, looking at somewhere that can save us money on issuing debt. Again, that's something that can save taxpayers money in the future.
So I'll say real quick, I've got a whole room of department heads here. I'd like to ask everyone in the room here to be today, I need answers by this afternoon. Look at your budgets and let me know if you have any ongoing, any one-time expenses in your operating that could be funded by one time. So you guys know your budgets better than I do. So be thinking about your budgets, and I need answers by this afternoon. If you guys have any things that's in your operating that is a one-time, to Councilor Simpson's point, that we can then apply one-time money towards. So, and then we can bring the information back to you tomorrow. So,
well, thanks for doing that. I really appreciate it. And council may not want to go along those lines. I don't know. But I think just knowing what the option is for this.
Yes, and I think what I've got, I think Councilor Tips even talked about that. I think you guys want to know what is available to do that. So that's why I need their help to help me, because thousands of lines, we're going to divide and conquer to figure it out, so we can bring information back to you tomorrow. But I think for right now's purposes, I think step one is no new revenue versus voter approval tax rate. I think I'm hearing potentially, Mayor, maybe no new revenue rate. And then to Councilor Prescott's question, what does that do? It just means you have less money to work with. That's what it comes down to. And so when you have the whole pool of 20 million roughly supplementals, you have $700,000 less to work with towards that list. That's all it really means. And then what it ultimately means is if future councils do not elect to capture that again, that's lost forever. So we have 3 years to capture that back. So a future council would have to take the 3.5% plus what we left over this year to bring that back. Because once it's gone for good after 3 years.
With the caveat that's based on current law and they have a new session coming up.
Yes.
So it could change.
Yeah.
And it may still go away. I mean, property taxes is hot topic for legislation. I know Governor Abbott, I know Mayor's been approached by Congressman Fairley about what's our thoughts on Governor Abbott's property tax ideas. They are troubling for us. And so, but right now, this is what we have to work with today.
Yeah. I just heard before, and I've heard people in the community, and said, "Wow, our taxes are not high enough." That's the problem. And then we look at other rates. Of course, I appreciated the other day when we looked at where our property tax is relative to others. But we are fortunate if you put the sales tax up on some of those same cities, we are fortunate to be able to have that, and our taxpayers are fortunate to be able to do that. But I just think just being cognizant of being able to provide the services we're able to provide, because the property tax may go away,
Yeah, and I just want to add this piece as something to be thinking of. In our financial policy, we have a section that talks about whenever sales tax is in danger each year. So we have if we are doing forecasts for, in mid-year, if we're seeing sales tax coming under projections, I then have instructions of the policy to start saying, staff, cut this, cut that, step 2, cut this, cut that. So the reason that exists is because sales tax is volatile. Unlike property tax, which is known, sales tax is the one that we are forecasting, but we have no idea what will actually happen next year. So if we put too many eggs in one basket, I may have to take some eggs out next year if sales tax comes in under. That's just the risk we play when it comes to sales tax. That's why property tax is so reliable for cities, because it's set. I know it's unpopular, but because it's required. Sales tax isn't required. People can just not shop. Property tax, you don't have that choice. But as a city, I have fixed base costs to provide services. So again, I just make that as an illustration. Again, that's why sales tax, it's exciting, it's attractive, we like it, we hope that it grows, but there's always potential that it could go the other direction as well.
Yeah. And the other thing I was going to say about the taxes being low, I mean, we have raised taxes, I think, for a good reason, but it's not been on the M&O side. It's been to issue debt on things that we've looked at. So we have raised taxes to be able to invest on that. So I think we're looking at being able to be wise on that investment. But in the future, I just think it's I think we need to be as cognizant as we can of from the taxpayer standpoint.
Absolutely.
How much are we going to save if we keep it flat? $700,000?
Yeah.
That's the number we're going to save.
Yeah, and total for the city, yes. Now,
And what does that mean per citizen? Is what I'm asking for because that's what Les is driving at.
It depends on the citizen, but I think the example we had Tuesday was like $5 to $10 a month. I think it's minimal.
Yeah.
So, like I said, it depends on the citizen because the median house and all the things. But you're looking at about $10, $5 to $10 a month.
The ones that would see the savings, some it may not make a difference based on their values.
Okay.
I mean, if you looked at the value, again, Potter County, I mean, some people may see a tax benefit out of this, where their taxes could be lower. It looks in Randall County with the median, that could be, but it's all based on property value. So some still may pay more, but they would not pay as much. And, $5 or $10, I mean, for some people, that could be something that's helpful. And so I just think as much as we can look at that without hurting our services in a way that we don't want to do, I think would be beneficial.
So we do have one other line item here. So just in going back on the potential of keeping the no new revenue rate, if you look at your property taxes of $60.5 million, your total budget of 271, your property taxes equate to roughly 22% of your total revenues.
that sounds about right.
I know everybody thinks that we run the city on property taxes. We don't. We run maybe a couple of our real significant departments on property taxes. Everything else is volatile. It's all subject to market, and it's all subject to spend. So if you look at most of your projections, you've got intergovernmental revenue, which is still an item I want to go back for. So in 2025, we weren't able to realize that 6.6 in that. It had to come into this 26 budget. So we should finish the year 6.6 million higher. And I know you're factoring that into your costs, so I'm not trying to argue about it. But, we've projected in our 2027 budget to have 6 million in intergovernmental revenue. If you change that one line item to pull forward the amount, if we don't spend it in this current year, then we could see a bump of 6.6. But then if you flip the page and you go over to your non-business license and permits, I mean, we're at 6.1 million in 26, and you've lowered that down to 5.2 in the budget. So there's $1 million deduct right there from a flat. And so we don't see business slowing down. So we have another $1 million there. You've taken operating transfers in down from 11.4 to 5.4. We don't understand what operating transfers in is.
That's those one-time dollars that we got from interest earnings or departments being above their reserves and had some excess. We're not seeing as much of that this year.
Yeah, so interest earnings, are they broken out separate, or are they included in that?
Well, they're broken out separate, but when you see the benefit of it, it's a transfer back to the general fund, so the general fund can spend it, basically.
Well, we've got $207 million in existing CIPs. We've added $100 million in 26.
A lot of that's debt funded and restricted on what we can use interest for.
Okay, so that interest isn't calculated in
It
here.
wouldn't be for general fund purposes. It'd have to be restricted to
Okay.
those CIP projects.
So in this, not to mention our solid waste for the additional fees that you guys are recommending, like, it's easy to look through there and find, several $1 million in the way we run the city. So, I just find it difficult to continue to advocate for a property tax increase when you're talking about $700,000 and we've just arbitrarily lowered our projections $1 million on business licenses and fees.
No, they're not
I wouldn't say
arbitrary.
they're arbitrary.
Not
No.
arbitrary, because
How did we lower it?
Staff go through, the month trends, they go through the last year's, the revised estimates. I go through, in fact, I know Justin can attest to this, I sent him numerous questions on many of these line items, because you're seeing the summarized version. You have to go into here to find all the things that add up to that number there. And so when we go line by line, working with individual departments here, this is the number we came up with. And there were a lot that I questioned, and that they provided me justification. So, but as a council, these are budgeted numbers, and so if you wish to just make 5.2 a 6.2, you can do that. That would be arbitrary because you don't have the data in front of you.
Yeah.
And so we brought it to you. This is our recommendation for it to put in that budget line there. We scrubbed as far as we feel we can scrub.
Well, I appreciate the information on that. Let me retract my statement and apologize to staff for their well-spent time of thoroughly investigating that number. So I apologize for the word arbitrary. I think on paper here, it looks attainable to consider business overall in the city to be on the uptrend.
Sure.
And this is a downtrend. So for whatever reason you guys have arrived at that, we as council just need to give direction. Are we comfortable considering this at no new revenue rate?
I think a consideration is valid, but not an affirmation until we look at the entire budget and see what we need to do. We need to continue to move forward. It is my opinion that we do need to provide relief, but while sales tax is up and we're entering a season of growth in this city, that we need to move forward. And for so many years, we've been behind the curve on getting infrastructure projects taken care of. For example, the wastewater treatment plant. There are a lot of things that we need to do in this city, and while we have the higher sales taxes, we need to invest in our city for the next 30 to 40 years.
Yeah, I think the discussion is important, and to look at those things before we make a decision. I don't feel comfortable just saying, yeah, we're going to adopt that right now until we see all of the information that's there. And there's actually three numbers to play that you can play with when you look at this, right? It's the tax rate that's proposed. There's a no new revenue, and the current year, because you could stay at the current year. So there's a couple of options that we have. Isn't that correct?
A middle ground option, yes,
Right.
yes. Yeah, you don't, it is not just all or 3.5%. You can do somewhere in between all that too.
Yeah, I would agree. I think, Councilman Simpson, you made this comment, I don't know, a few meetings ago, that the citizens want all these nice things, but they don't want to pay for them, right? So I think the goal of the budget.
I don't know if I said that.
Oh, I thought you did.
I don't.
Well, if that wasn't you, the statement was made. All I'm saying is, I think that's the benefit of going through the budget, is we've got to see where we are. And I think being creative and trying to find the sources that we have to be good stewards and to use them to offset whatever we can offset. I think we owe that to the citizens. but I think committing to a tax rate right now, I think is a little bit premature.
And I think what you're saying, what Councilor Reed, I think what I'm saying is very valid, and I want to retract what I said earlier. It's good to discuss it right now, but you don't have to decide right now. I think what we can do now is move into the supplemental CIPs, see what's in front of you, and then if you guys decide, I need that $700,000 because I want X, Y, and Z, then you do. But if you think, you know what, I've got what I need here, we can work with that 700,000, then you can decide that.
So you want direction on like how to proceed based on what we're feeling now, but we can always change that later.
You can,
we don't
yes.
have to.
Yes, and so I think Andrew's got a long presentation today to go over supplementals and CIPs, and then you guys can see what are your priorities, and then from there, if the math works out, you don't have to use 700,000, then it works out. But if you decide I've got to have these 30 things, and that requires the 700,000, then you can decide at that point. Does that make it?
Yeah. No, I agree, and I think it does come down to priority. I mean, of like what, if it comes down to services offered, quality of life, whatever, we have to make that decision. Mm-hmm. So
I would just say I don't think tightening the belt a little bit is going to set us back decades on infrastructure. All I'm saying is, unfortunately, our citizens don't have a chance to say, you know what, we need more money. I'm just going to tell my boss I need more money. This is kind of where we are. I mean, we determine the rate. It's in our determination to do that. And I just hope at this one time that we could look and provide as much of that as we can. I don't think it's at a budget as large as we are. I mean, we've already figured revenue. But while it may not be a whole lot of money for us in the grand scheme of things, being able to save people money where we can, still provide the services, I think is very valuable. Thank you.
So what we can bring back to y'all tomorrow is my staff right now are thinking through, is there anything in the ongoing budget that's one time that we can talk about the one-time money? We can bring it back to y'all tomorrow. But otherwise, for the time being, you can consider you have about 7.2 to work with because you have the $1 million in sales tax. But I think that right now is just, we put that aside because we're going to decide that maybe tomorrow, and we move into supplementals and CIPs to start working through those things and then getting some guidance on where that lands. Because I think that's going to ultimately drive that answer of 700,000 voter approval tax rate or no new revenue rate.
Okay. And just for my brain, I just want to make sure the recurring funds available for allocation, if we go with the 7.2, which is the extra million there, we're at about 10.6. That column added up.
Between all funds?
Between all funds. 10.6. I added it up, so I'll just tell you.
Yes.
So if we're looking at COLA and the police and fire requests, 4.6 of that would be eaten up immediately.
6.2.
Yeah.
7.2.
What did you say, 6.2
It'll
or
be 7.2 if you, let's say 7.2.
So what he's saying is that if you consider and that's one thing, we're again jumping ahead a little bit, but if we were to do the COLA for police, fire, and civilian in the general fund, you need about 4 and some change to do that.
Right.
So at 7.2, subtract the 4 and some, that's your difference.
If you're capturing property tax and the new 1 million in sales tax estimated. So it's 7.2 with property tax and sales tax. Because we've adjusted it today based on yesterday's data.
I think we're jumping ahead a little bit, and so.
Okay. Well, I just need my brain. I need to look. To keep it simple to look at and go, okay, what do we have to work with?
Until y'all change the rate and say, don't raise it 3.5%, it's 7.2.
Oh, this change goes from
7.2.
10.6 to 7.2.
Yeah, 6.2 to 7.2.
Oh, that's just
general fund.
The extra million in
Yeah, it
sales
goes
tax.
into that number. Yes, 7.2.
7.2. But if we add all these up, we're at 10.6, 10.65.
For all the funds.
All funds.
All
Which
funds.
we've got calculations
But we
for
can
each
only-
one of those funds for 3% raises.
Okay, so we can only, like what you're saying is, yes, we have that for the recurring, but for general fund, the raises have got to come out of the 7.2.
Correct.
That's got to come from.
Correct.
Okay.
Yes.
Okay, thanks.
Yeah. And what we can be doing is we can, like we've done in prior years, we can have a little Excel sheet on the side that we can do, again, assuming 7.2, and then if you say, council says, we want to do a COLA, subtract out this, now you got this balance, and then now we want to add this, and let's subtract that. Same thing for water and sewer, same for airport, we can do those kind of things. So, and, yeah. So with this, are we good to move into supplementals and CIP conversations? So is 9:47? Do we want to get started? I know Councilor Prescott has to leave, and so do we have enough we can get started with for the next 13 minutes?
Yeah, Lola's got the kind of introductory slides before we get into details.
So, thank you. I'll be starting off with a budget summary for 2026-2027.
Do we have those?
Yes, sir, and it's
Should be original
the
slides.
original slides.
Starting on slide 38. So,
Okay. So over here, we have shown our various funds budgets for 2026 and 2027. So the general fund operating budget for FY 2026-2027 is $287.9 million, which represents a 4.6 increase from the FY 2025-2026 general fund operating budget of $275.2 million. The water and sewer operating budget for FY 2026-27 comes up at $85.3 million, which is 15% more than the FY 25-26 budget of $74.1 million. Next, we have our capital improvement projects for 26-27. We're requesting $165.8 million in capital improvement projects, which is 52.3% higher than the CIP budget for FY 25-26, which rounded up at $108.9 million. Our special revenue operating budgets, it's similar between the 2 years. For FY 26-27, we're requesting $36.8 million, which is 2.7% lower than the level for FY 25-26, which was $37.9 million. For our fleet services operating budget, our proposed budget for FY 26-27 is $21.3 million, which is 23.1% lower than the FY 25-26 budget of $27.7 million. Our other budgets include in terms of our major budgets, the airport budgets. It's for FY 26-27, we are proposing $17.5 million, which is 7.4% lower than the FY 25-26 budget of $16.3 million. Also, the drainage budget is $6.3 million. For FY 26-27, IT's budget is $11.3 million for FY 26-27, and our interfund transfers for FY 26-27 comes up at $149.9 million compared to the FY 25-26 transfers of $118.7 million. Our total budget for FY 26-27 is $616.2 million, which is 10.6% higher than the FY 25-26 budget level of $557 million. We have some proposed fee changes for FY 2026-27. As staff went through our various departments and put in consideration service costs, fee increases to deliver our services to our residents, we also considered our cost recovery exercise from the pre-budget workshop to come up with the proposed fee increases for FY 26-27. We are proposing a 3% increase for our solid waste, residential and commercial rates, and we propose that will generate about $1 million in revenues for the two residential and commercial sectors in our solid waste division. We are also proposing a 24.08% in solid waste in general to derive $1.2 million in additional revenue for our solid waste efforts. Our other divisions have some cost recovery proposed fee increases, we have the city marshal, animal management, planning, environmental health, golf, as well as our athletics division. And there are various increases that have been proposed for cost recovery. And we have cost recovery revenues ranging from $9,000 all the way to $357,343 for a golf division.
So can I ask a question here? When you have cost recovery listed, that's the reason for the increase, is just pushing towards cost recovery?
It's just new revenue
Yes,
coming
sir.
in.
Just new revenue because of our direction to say, hey, we want to work towards cost recovery.
Right.
Okay.
Now, on the flip side, when we get to supplementals, a lot of those with cost recovery also said we could use that money on new things in our department. So is it really cost recovery? Is it just new services?
Right.
Yeah.
Okay.
So we'll talk through that as well.
Well, I think the other way of looking at it is it's subsidizing property tax. So, because a lot of these departments are heavily subsidized with property tax, it just subsidizes that amount going there. So again, it's one pool of funds. So while I may not be able to track it dollar to dollar, it does impact the department by bringing it into it.
Can I ask a question going back to the previous one with the solid waste? So we're looking at the residential and commercial 3% increase, but what's the 24% increase?
That's tipping.
Yeah, it's for tipping fees to landfill.
Okay. And so tell me a little bit more about the reason for the increase, and I mean, that's a pretty large amount, I guess.
It is,
there,
and we've not had a significant rate increase over the past few years for tipping fees to the landfill. That's generally a pretty small number. So it's about a $10 increase per ton in the tipping fee. I don't have the exact numbers in front of
If
me.
you look at page 24 of your budget book, you'll get the breakdown of the various line items.
Yeah, and that's for ongoing construction projects, improvements, things like that out there. But we also did rate checks around the area, existing landfills, what that was, not only here but elsewhere, and we're about $10 lower than everybody else is too.
And when was the last time we did an increase on the tipping fee?
I would have to go back and look. We've done some minimal increases over the past few years, but they've been very small. You know, $1 here, $1.50 there. But we've really fallen behind. There's others that have raised it $5, $6 per ton each year. So, and reasons for doing that is really just the cost of doing business for one, and then we do have some improvements we need to make as well.
Okay, thank you.
Other proposed fee increases, we have our fire as well as our fire marshal, various proposed increases for cost recovery, $90,000 between the two divisions. We also propose 8% for water operating to derive about $6 million in additional revenue. And we're proposing a 3% increase for debt service for the new TWDB loan we obtained, which should generate about $2.6 million to service the loan. We're also proposing the same rates for sewer, 8% for operating and 3% for debt for sewer, and will generate $2.6 million for operating in additional revenue and $1.1 million in additional debt service fees to service the TWDB debt for sewer. We are proposing 3% in drainage for operating costs, which will yield about $333,000 in revenue. And we are proposing 5% for debt service for drainage to yield just under $500,000. Here we show our budgeted revenues for FY 26-27. And as we discussed earlier, our sales tax constitutes the highest portion of our general fund revenues at 33.3%. Next is the property tax as the second highest revenue generator for the city at 22.7%. We also have other parts of revenue, such as the gross receipts for business taxes, solid waste, city fees, hotel taxes, miscellaneous and administrative charges, etc. Here we show our general fund revenue changes between the adopted budget for 25-26 and the proposed budget for 2026-2027. At the adopted budget for 25, we had $272.2 million in our revenues. We are proposing a change of $8.6 million to arrive at $280.8 million for FY 26-27. We show the significant changes that constitute the $8.6 million difference, which range from property taxes, sales taxes, solid waste fees, hotel occupancy taxes, and other changes to the budget.
And no, this does not include that additional 1 million sales tax just yet, so.
Can we identify the deduction there? It said miscellaneous government revenues, deduction of 7.4 million?
Yes, we can provide the breakdown, just other general
Do you
accounts.
know what that is?
Justin? you could
Really,
probably-
I'd be looking
Yeah.
for the reason that we're not, like, what changed?
A good
Was it
chunk was lowering our estimated state participation for the fire department. Safer grant was $800,000 of lost revenue. That was the multi-year grant we received for firefighters. So those are some examples. It looks like we also lost additional transit operation revenue, less than we have in previous years, about $187,000. The participation revenue, we dropped $500,000. That's the firefighter state assignments. The 823 participation or revenue from other agencies, that's a safer grant. And then I'll see if Justin has more to add.
So these are all grant revenues?
Yeah, it's either other government agencies paying it or grants. Yes.
Yeah, we'll get the list and get it to
Yeah.
you. So-
And also the fleet transfer that we're not proposing for 26-27,
Okay.
about $5 million.
Oh, so we had to deduct what we had previous years, so we don't have as much to transfer
For-
in this year. So it's
yes.
also departmental transfers into the general fund.
Thank you.
Here we show our general fund expenditures by our various divisions and departments within the general fund. The highest expenditure for the general fund departments is for our public safety division, which constitutes 50% of the general fund expenditures. And then we have other departments at 10% for leisure services. We have transportation at 9%. So we have distribution across the other general fund departments, including our general fund transfers at 9%. Here we show the general fund expenditure changes between 2025, 2026 approved budget and the FY 2026-2027 proposed budget. As of the 2025-2026 approved budget, our total expenditures summed up to $275.2 million, and we show a change of $12.7 million to arrive at the $287.9 million in the proposed FY 2026-2027 budget. Significant changes include our police fire step request of $1.1 million, raise and cost of living options at $4.5 million. We have the fleet at $1.7 million and other sources including IT, insurance, leases, etc., summing up to $5.4 million, and that gives us the $12.7 million difference between the FY 25-26 budget and the FY 26-27 proposed budget.
Quick question, so fleet is its own fund, right?
Yes.
But it's included,
But it's paid by charges to other departments. So we have to bill the other departments to fund fleet. Basically, rental rates, rental charges, those sorts of things. It doesn't create any of its own revenue. It brings in from the other departments.
So example, your trash trucks that are in general fund, they pay rent to your fleet department.
right? But that expenditure is picked up in that department, so are we picking it up again in fleet when we're looking at the additional cost to run the city?
This is additional charges that are being paid to fleet. And so this is a total of all the departments across the general fund that are paying those fees. Is that correct?
Yes, that's correct. Fleet collects the revenue, so the general fund through the departments get charged the expenditures, and then it comes into fleet as
Yeah.
revenue.
That's exactly my question. That's a revenue, but it's being listed here as an expenditure. So like, I'm curious, if we are charging for those services, we're moving our revenues up, which is good, but then those expenditures wouldn't come in on that line item because they're already calculated in the other department expense.
It's an expense for the general fund, it's a revenue for the fleet.
Right.
Okay.
To pay
So
that
you're
cost.
just listing out those additional expenditures broken down as 1.7 total that goes to fleet all across any general fund department?
Yes.
Yes.
Okay.
And a lot of it was a course correction of things we've already committed to, and we've run revised estimates of what we owe on the lease payments. So this dollar amount doesn't mean we're adding new fleet in the tune of 1.7 million. It's making sure we're paying our bills with what we've purchased so far for the most part. Right.
Yeah, that's correct.
Hey, just a simple question. When we look at general fund revenue changes, we're looking at an increase of, or total of $280.8 million.
Good.
Looking at fund expenses, fund expenses, we're looking at 287.9, so we're $7 million more on expenses than we are revenue. What do we, let's just keep it simple. That's a problem, right?
Well, that goes back to your available cash, those resources there to help make up that difference for those kind of expenses.
Particularly one-time capital. You won't have to have a equal amount.
An ongoing revenue for that. Yeah, this is
Okay.
just your ongoing revenue expenses there.
Right. Okay, but we're 7 million short, but that's where you're saying this when we come back to that other to come make that up.
The cash flow sheet, available cash, has resources, yes.
Okay, thank you.
So here we show our total debt by funding source. Our highest level of debt is for our water and sewer revenue debt at 44.8% of our total debt, and that's $234.6 million in water and sewer debt. The next highest source of debt is our property tax supported debt, and that sits at $179.6 million, or 27.8% of our debt sources. So we have other debts illustrated. We have our drainage revenue, fleet services, special assessments, hot tax, supported debt, and other debt sources. Over here, we show our property tax supported debt. Again, this number is $179.6 million. And we show this across the different general obligations CO series through the years, as well as our PPFCOs. So we see the breakdown by year and type of debt that is property tax supported. Here we show our annual debt service, and for between fiscal year 25 and fiscal year 26-27, our debt service went up from 10.7% as a percentage of the budget to 10.8% in 26-27.
Okay, so we're going to transition now that you have what your current available to allocate is. This is where we move into what the requests are. At a very high level, this is what was provided to you Tuesday in printouts, emailed to you on Friday to start doing some homework, seeing what you want your priorities to be. We have approximately 157 requests and 19.8 million just for the general fund. So this time around, compared to previous budget years, especially for those that have been here a few cycles, we're trying to show it all this time. Usually we would come forward with a much smaller list because we know there's not 19 million to go around. So we've already kind of gone through some thought process of how we'd reduce this down to immediate needs. Some are the easy ones. We know, like, for example, general fund needs to start paying for their share of Workday software. That's about $600,000. We don't really have a choice for that. It needs to be paid for. It's our financial software. We just had the ongoing expense we now have to build in on the general fund side. But a lot of these requests are going to be, some are capital outlay. It's a new piece of equipment for the police department, drones for the fire marshal's office, just some of those examples. But this is just the general fund piece.
And this is outside the budget. It's not included in any of this.
It is not baked in yet. This has to come out of the 7.2 million. So this currently says 6.2, add $1 million to it because of the increased sales tax.
That's
that you
before
would have to
considering raises.
Yes, exactly. Yeah, that 7.2 has to go toward 19 million here and $4+ million on the raise side. As far as the other departments, we've got 6 requests for hotel occupancy tax projects for the Civic Center, around 140,000. Municipal court technology fund, 100,000. Court security, 15. Public health, 8. And then airport, 433,000 worth of ongoing recurring supplemental type requests. They have 620,000, so they're actually, I think we can take care of most of those. What we'll show you, we've got the breakdown out of that 620,000. We have to be able to pay for any raise that might be approved across the board because we know what general fund is. We have to divvy it up against all the other funds because it's not general fund paying for theirs. IT fund, 668,000. Right now, we've only got the 135, which that is their exact need for a 3% raise. So for IT in particular, we do have a lot of needs. They serve everybody, public safety. If you're going to increase that, you're basically going to have to use your general fund allocation, transfer it over to IT to cover those needs. So keep that in mind when you look through their requests. Water and sewer, about 4.3 million. They had 2.5 million available to go toward 92 different requests in those departments. Drainage, just
Can
one
I ask
request.
a quick question?
Yes, sir.
So in considering all this, these additional requests for water and sewer, right? So that's an easy one to pick on.
Yeah.
We've got our budget, which is an enterprise, total revenues, total expenditures. You would increase those expenditures by 4.3 million if you fulfilled all these requests.
Which we don't have capacity for. We've got capacity for 2.5.
And we don't have capacity for that 4.3 million because we do work from the depreciation of the 17 million that is on that net starting position, right? So we do take that 17 million cash away before we calculate this request. So I want to make sure you're not comparing that 4.3 million to, no, that's after we've
It's after everything.
plugged the depreciation in.
Yeah.
You've already removed that
It's already
depreciation.
removed out. Non-cash is removed out. This is just cash needed to continue operating. And a lot of their requests are little line item supplies here, different purchases here that they've just seen increased costs across the board to run those plants.
So in a disagreement of how we finish the year at, what's cash and what's not, we've never said what we do with that $17 million worth of depreciation, right? We take it off the page.
We do nothing with it. We just track it.
It just
doesn't
sits in the
exist.
account, right?
It's not in an account. It's just a number we have to track as a value. It's not real
It's
money.
not a cash value.
Yeah.
Okay, so there is no deduction
No,
then?
we spend cash in 1 year, you spent 10 million, that's your value, and then you just pencil
Yeah.
it out the rest of the
All
time.
that cash flow she is saying, again, we write these terms as less depreciation. All that it's doing is telling people that depreciation is not included in this. This is just your expenses. Depreciation is not a number we calculate in this process.
Yeah.
So for an accountant looking at that cash flow, they're going to, okay, good. This number does not include depreciation. That's a whole different thing.
Yeah, so can we go back, not right now, we'll continue through this, but when we get to like water and sewer and being able to fulfill these requests, can we go back and do a cash flow statement so that the public can see that again? Because all they've heard me say is like, well, the cash flow doesn't agree to the ACFR, and so the ACFR shows that there's more money sitting in that account, and so I want to bring greater clarity to that. So can we run an actual cash statement for last year, the FY25, since we have it in the ACFR, and we don't have to project this one? Or can we run an actual cash statement this year to a point in time and then show these are the balances? Because that's still something that's not clear.
Yeah, let us regroup on that and talk about what that looks like. So,
Okay.
yeah, we can talk about that. So,
No modified accrual, none of that stuff, just an actual cash. If we run $100 million cash through that enterprise, how much was the total labor, total material contractor, whatever's the net amount left at the end of that year.
Yeah.
So that we can take care of these employees.
That is the cash flow
Yeah,
statement.
I'm thinking
that we
that's
went
already
over.
been done,
Yeah.
but we can circle back to
We'll
make sure
bring
we
it
get you a
back
good
up.
answer, so.
Great, thank you.
And I will go back to the general fund topic. So that 7.2 million we're talking about, that is that cost recovery. When you look through your spreadsheet, you're going to see requests, and some departments are putting in offsetting revenue. If those are approved, it's taking out of that money as well. And they basically have created plans of, if golf brings in new revenue, well, we want to spend it on X, Y, Z. So that's part of the consideration. So there are some things in here that it might make sense to just, it's a net wash because the golf operating budget is paying for this, so the expense should stay there is part of the conversation. But the way we package it is everybody's supporting the general fund, and if you want to spend it all on raises, we basically have to find a way to do that. So just to keep that in mind as you're going through that spreadsheet.
So will these be broken down in any way? I mean, it's easier to say, for
So that's from my handout on Tuesday.
Okay.
It's a very.
So hopefully
yeah, you
they've
can-
prioritized or
Yes.
this, okay.
So really probably just based on timing, and no, we're not going to have all y'all today. Probably homework is to read this
Yes.
tonight, come back and tell us what your priorities are. But we also, we'll get to it in a second, is once you tell us what your priority on personnel, the pie gets smaller, less to prioritize. Once you focus in, you can only spread it around so much.
Okay.
So.
Yep, one thing we might throw in there too, I know there was a lot of meetings that we had last year or during this year where council has told us we need to know what the departments need to operate. What do you need? And Parks was a good example for that in conversations we had. Well, we don't know if we don't know. So a lot of those requests that are in supplementals are based on those conversations.
Yeah, we want to make sure we weren't holding back this year as far as this is their true need of requests, knowing you can't fund all these. But in the past, we would not show this to you.
Let me pause here real quick and just check with City Secretary. Did you get Councilman logged in and uploaded?
We will need to take a break to get him connected to make sure that we've got him on the screen and everything.
Okay.
So-
You're doing an overview, right?
Yeah, this is high-low overview.
And then I saw you go back to kind of general fund. So is that a good stopping point, or do you have a few things you need
Yeah,
to
we
cover
can stop
before
here.
we do that?
Yeah.
Okay.
We can take
If
a
we
break.
could, I'd like to take a 10-minute recess, come back. That way we can get Prescott back in. Thank you. Get going. Are we getting a lot of feedback? Freeman, are you up again? Okay.
Oh, yeah, it did. Well, I'll just pretend we can read it. Thanks, Ebony. I think we're good. So just to kind of recap where we left off, we're going over the summaries of the departmental supplemental requests. This was the general fund, 157 total requests, 19 million. There we go. Yes, sir.
Are any of these for personnel as far as requests?
Yes, some could be for personnel.
Okay.
Yeah, they could be supplemental requests for software, supplies, new additions to staff.
Is there a breakdown of what these are?
That's in your other handout from Tuesday. So they tally up to this one. It's about
What's the front
So
cover?
to get us started,
33 pages. Yeah.
to get us started on the right foot, do these supplemental requests acknowledge budget amendments? Or do these supplemental requests go back to their previous budget?
You go back to your previous budget.
Yeah, so some of these have been, so like if I'm looking at a large one here, say APD, 5 million, we've done a budget amendment that covered that cost.
In 1 year, not moving forward. You have to
Right,
you have to-
understood, but like in that, they're going back, this is not a request of 5 million over the amended budget, it's the
Base budget.
previously base budget, okay,
Yes,
correct,
that's correct. That's correct.
thank you.
So we had went through the hot tax, municipal court, IT. Get my other- On this one, just a quick correction, the drainage, the 1,059,000, that's actually fleet related to that landfill tipping fee is what we believe that number is for. We had a typo on that one. And that's not currently, this is the fee increase tipping that we would like to recommend that'll bring in a little over $1 million dedicated to solid waste landfill purchases. So that completed the recurring supplemental overview. These next few slides go over the department CIP request. So this is based on the 11.9 million available for general fund. We have approximately 51 requests totaling a cash amount of 73 million. And then on the right column, wherever we are proposing debt funded purchases, those are showing up in that column there, which I will cover for you. So we're showing 48 million in debt service for the general fund. The 6.2 is a continuation of the fire truck rotating purchases over a 13-year cycle, so continuing that plan. The 42.5 is related to streets. One of the discussion items, we'll need feedback when the time comes for that discussion. We have annual arterial reconstruction at 30 million and various street resurface at 12.5. So where you're seeing the increase is on the annual and arterial side. We have Osage and Coulter reaching the point in design that basically both are ready at this point. So you have the opportunity, you could go ahead and debt fund those, knowing the payment's going to be when we're trying to absorb debt rolling off. So you might have the capacity to increase tax rate just for what you're usually raising, and then the extra could cover that new arterial that was not previously in the rolling cycle of annual debt funding. And then you move on down to solid waste. There are 4 requests for $3,055,000. They basically have enough to fund all their requests under that category. Utilities, water and sewer fund, approximately $13 million. We were hoping we'd have a little bit more from that. We've been growing our rates and using it for one-time capital until we need it for either debt service for the wastewater plant or other operational needs. Well, based on your discussion with CrimLaw, entering into the MOU, we have started funding more toward CrimLaw, which eats some of that capacity of the rate increases that we have seen. I think the new annual impact's about $5 million.
Yes, around $5 million, correct.
That we now have to pay CrimLaw for their future planning for CrimLaw 2. And then we do have the $60 million debt amount. That is a TWDB loan that's been approved. Now we have to issue the debt and start making payments on that piece. Drainage has 3 requests. They have $800,000, basically setting that one up as an E&I account and then come back with projects. That is also what we're proposing in the water and sewer with the $13 million, similar to how we structured it this year. It was water and wastewater. What we're proposing is just to make it a utilities E&I, and we bring forward the projects with the latest saying that either needs to be replaced or improved as they continue to try and operate the plants while we're fixing those.
Andrew, if I can, I believe Councilmember Prescott has a question.
Yes, sir.
David, did you have a question or comment?
Can you hear me?
Yes.
Yes. Can you hear me?
Yes, we can.
We can.
I think you just muted yourself again.
Muted yourself again.
He appears to have frozen up.
So.
Mayor, I think I recommend we just keep going, and we can try to get him back. And but he looks like he must have hit a dead spot or something. So.
So that brings us to fleet services. Basically, it's just a one request, $8.5 million debt, but this is funded by operation and maintenance to cover. That's our capacity of what all the departments are paying into fleet. We have the ability to spend $8.5 million of debt for it, which Donnie does have a list of those projects if you want to hear which vehicles we'd be replacing, but we can provide that later.
Yeah, y'all had asked that or on Tuesday, so we do have a list ready for you.
We can bring a printout tomorrow.
Okay.
Yeah. As far as Civic Center, on the next slide there, we've got 6 requests totaling 1.3. They actually have some capacity up to 1.9, so we're going to work with Christopher, see what else we could do with those funds to make improvements to the Civic Center. And then the airport, we actually have an older number on here. Their new requests, we'll get you copies of this. We're totaling up to $5.2 million in requests under review for airport, and they've got 5.7 capacity. So we're still fine-tuning those numbers as well. And then just a snapshot I had on this slide, just so you'd have it handy. These are the debt that is rolling off. We'll have our last payment in this budget and capacity available the following budget if y'all were to approve projects in 26-27, because we wouldn't pay it till the following year. So you have that GO Series 2017, Tax Note Series 2020, and Tax Note Series 2022. And then on the Tax Note 2022, that was actually City Hall, so half the payment was coming from utility rate. So we're going to have $2.5 million in capacity on the utility rate side for future debt needs. So that portion could go to fund a portion of the TWDB loan payment. And then here is the raised cost of living, general fund only scenarios. So we've got 3%, 2%, and 1% calculations. That 3% we've touched on already. It'd be 4.6 million impact to the general fund. The 2% would be 3.1 million, and 1% would be 1.5 million. Again, this has to come out of the 7.2 million that's available. And at the bottom, I've got some new numbers for you. What you're seeing there is 3.4 million for the compensation study. That's across the board, all funds. What the general fund impact would be 1.9 million. And then the next phase approach for the general fund would be 445,000. So keep that in mind as well. I lost my clicker, Stephanie. Thank you. And then I just wanted to remind everybody of what the original meet and confer requests are. We had police raises 3% across all ranks, and then fire raises were 10 to 22%, depending on the rank, for a total of 7.4 million. They also requested some reclasses or step adjustments. Police were requesting the officer rank, instead of being 5 steps, it would go up to 10 steps. That would be approximately $630,000 a year for first year impact. Fire reclass will be 6 drivers and 6 lieutenants. Basically, we've been having a historical pattern of out of class bump up pay, and they believe this number would kind of right size the ranks to limit some of that out of class pay situation. So a total of 1 million. Keeping in mind, once you add more steps, that's an ongoing annual that we have to build in. Just like this year, we have 1.1 million we've already had to build in for required police and fire steps moving into that next classification. And then we had certificate type pay. This is your certification pay. This is if you've got a bachelor's or master's degree. So adjustments to those between the two departments will be 605,000. The combined total request between police and fire for meet and confer is 9.1 million. So the last slide I'll cover, and then we can circle back to getting your feedback on personnel. So that'll be our starting point before we know what we could still bring back as far as focus areas for remaining supplementals. Talking through future budget priorities, just forecasting what comes next after this year. Still dealing with aging city infrastructure, streets, water, sewer, drainage, and other city facilities is still going to be front of mind. Plan for expansion of city services to address growth. As we move forward, we continue to annex new areas. Is that going to require a new fire station, multiple fire stations? Because we also have gaps in our coverage now before even adding additional acreage. Adding new police staff. I think our current numbers say over the next 5 years we need to add somewhere in the 40 officer range to really have acceptable coverage across the city and time for them to do their jobs proactively. Addressing staffing, recruitment, and retention, public safety, and across the board in all departments citywide as we continue to grow and trying to remain competitive. And then that last one, don't need to discuss it now, but part of why we brought our full list of requests of supplemental CIP, so you can kind of see where things are heading, is continue that discussion of when do we get to the point of having to go to the voters to request above 3.5%, knowing if we have to add 15 officers in an upcoming budget, there's not going to be a way to absorb that with new revenue. So eventually we'll come to the point we're going to need direction of how we build that out and plan for that, knowing if we're going to go that route, you have to bump up your budget cycle because you have to be able to call an election in early August. So that's something we can get feedback from you today or tomorrow or in the future. So with that said, that really wraps up the slideshow, and then we can kind of go back to the general fund cost of living scenario and discuss what y'all's thoughts are on personnel.
So with this, council, our recommendation is that, again, having talked to you all the last several months, the pre-budget workshop and everything, I think given your largest expense as a city is personnel, I think that should be where we start first and decide, are we looking at COLAs, civilian, police, fire, 1, 2, 3. We got several scenarios there on that slide 53 there to look at. So I'd recommend we start there. And then that will then impact your remaining available balances in all the funds. I mean, whether, because again, if you were to give, let's say, a COLA to the civilian employees, that would also impact utility fund, it would impact airport fund, and impact the other funds because they have employees in those funds. And so that's where I recommend we start today. So is there what's the council's desire when it comes to COLAs for the employees?
I think that we've been making good progress over the last couple of years, especially on the law enforcement and fire side. Our non-sworn civilian personnel, I think we really need to look at that, not only at police and fire at this time. I think that's an important thing. That's the heartbeat of our city is our employees. So I think that's a very important area, and the better we can do for them, the better it is for the city.
Yes. Yep, I agree.
Yeah, I would agree. I would second that as well. But we keep talking about COLA, but we're to a merit-based system, correct?
We can do either, so we can do either.
Well, I mean, I would say that we just continue down that path. I think we did that last year. We set the evals up and everything's done. I think that, again, just to reiterate, I just don't think a COLA across the board is great. I think it disenfranchises your harder working individuals that should probably see a greater raise. And then those that are not maybe meeting expectations maybe don't see a raise.
I think my recommendation would be 3% COLA and do another bucket for high performers.
Why?
If you still want to do merit, just because 3% it's really not.
Well, I get it,
high
but
performer.
if we have employees that are not, to me, you're just accepting mediocrity. You're accepting maybe not even mediocrity. You're accepting. I mean, and I hate to say this, but I mean, because everybody out there is great, but I mean, we all hear the things of like a government employee and that type of deal. And again, I'm open to everybody up here what their opinion is. I just feel like when you can reward those higher performing individuals, it makes sense and it insulates them from being picked from the public sector. If they're like, well, I can leave the city and go make more money. I mean, they're really good employees, so they leave. So I think those people need to be rewarded more, but I think those that probably need improvement. I mean, I don't know because I'm not in the daily operations. So I'm coming from a much higher level view, so I may be wrong. But those that are not maybe meeting expectations, I would like that they get a message of like, you're not getting a raise.
And I can tell you, we've the work that Mr. Norman has been doing in HR, we've got a process now. We do annual evaluations, and employees are rated excellent, okay, whatever. But also those who are underperforming, they go through a process. It's a PIP process, and so they're given a chance to improve. And if they don't do it, they are let go.
So why would we? Obviously, we have very limited resources, and I agree with Councilman Reed. We've got to get our staff paid. I mean, they've got to see raises. I agree 100%. But why would we? I don't know what the right term is. I don't want to say waste, but why would we reward those low-performing individuals with even a 3% raise? Because
you're still trying to keep up with the market for that position. So when they do not perform anymore and we're replacing them, we can hire someone back at a competitive wage.
So you're saying that we want to keep that
it's the role,
that pay, but don't we have for each position, for each stage, whatever, we have
a pay scale and a grade, yes, and that's part of the compensation study piece of it. So you could potentially do it that way, put more into the compensation study and not as much into COLA. So there's a couple different ways you could go about it.
And I think the only people that don't want to hear this conversation are the ones that just are low performing.
The ones that are low performing, we're not keeping in the organization.
Well, I would hope not.
Yeah.
I mean, okay.
Yeah.
I mean, I'm going to just say you guys know better because you're running the organization, but from a higher level view, I don't want to reward those that are not performing well. And if you're saying, hey, we're getting rid of those, we're culling those already, well, that's great. I mean, that's what needs to happen. But
then you have your average employee. They're not high performing, they're not low performing. That's kind of the COLA.
Yeah.
And then another bucket would be your high performers, maybe here's another 2%, something like that.
Okay,
But
well-
it could go many different ways.
And some of the feedback we got from some of the directors too is that it's really difficult in some of these jobs that are just, you have one job to do all day long and there's really not a way that you can grade what they do. And I'm not going to get into the specifics of, what they are, but your job is to go from point A to point B every day and that's what you do. It's really difficult to figure out whether they're performing high or they're performing low because it's the same job across the board. But we are, as Andrew said, I think it's, if you find someone that's not doing their job, then we're taking care of those. And those are not in the organization anymore.
I just don't love everybody gets the same raise. I do not like that at all.
Well, you have the other challenge of police and fire get that.
Yeah.
So you're saying police and fire, it's okay for you, but it's not okay for your.
Right.
Well, I get that, and I mean, and I hear that, but I think that those are sworn, it's a little bit different. And I think that, I mean, it's just, they're just different, they're different jobs, in my opinion.
Sure.
But I do feel like that, anyway, that's just my opinion. I don't know how everybody else feels. I don't love giving everybody the same raise because it doesn't reward those guys, because even the guys that are going from point A to point B every day, their attitude, some of them's attitude can be different. I mean, where you're like, hey, this person's going to move out of here. Like, they're good. Like, their attitude's good. They come, they're positive. They do a little extra. Hey, while I was on route, I saw this. Can we fix this? You're like, well, that person's really paying attention. He's an asset. She's an asset.
And I think we'd probably be supportive if it was merit, if we were talking 5% or 6%.
Yeah, something that was bigger than 3
If
because
you're just
cost of
starting
living
with 3,
changes.
it's.
Well, I agree. I mean, I would love to give everybody a lot more, but when we're looking at, limited resources, when I hear COLA, I just don't love it. I don't love everybody getting the same raise, and no matter how I perform, I know I'm going to get that raise. Or even if I'm mediocre, I know that I'm getting the same raise as the person that's showing up early and staying late and doing the extra, and I don't love that. I just don't like that. I don't think it really sets the other person apart. The higher performing individual doesn't set them apart. Just my opinion. And again, I don't know how these guys feel, but I would like to see that if possible, but I'll leave it to y'all.
I know, Grayson, when you first came on, we did a study to see, and we made some changes there because we were not competitive for some areas. And again, really, obviously there's two purposes for any kind of salary adjustment. One is to reward good behavior. I mean, not good behavior, but good performance. And the other is to remain competitive. Are there any areas, because I can't remember, are there other areas that we still need to study?
Yes.
We have
to determine?
3.4 million of our current study that are still.
Because we were not able to implement the full study last year. Budget was limited, and so we did like a phase one approach. We were able to target some very low positions, but we were not able to implement the entire study last year. So we do have a phase two option in this next, as a supplemental opportunity, I think. Is that
Which
right,
general
Andrew?
fund is 445,000. The whole study would be 1.9 million.
Okay.
So I'm hearing you say that we could save a large study fee if we went with a COLA, because you wouldn't calculate the study if you're just saying, well, as an organization, the entire organization matters. The approach this year is we're going to try to build in the COLA.
Yes, that is one option, yes. And so we have the funds. We could do a COLA and still do part of the pay study. That's an option, I think, right, isn't it?
And we've also, in the past, when we've done, like last year, or current year is 2%, you have to budget 2% for everybody. Not everybody gets it, so we have an excess, and that's what we did, up to 5% for high performers.
Agreed.
So you like that approach a little bit more?
I do. I mean, I like that, and I agree with. I agree with allocating that much money for all the staff.
Because you don't know how they'll rate until they rate.
That's exactly right. I'm all for allocating that and just putting more on the merit side of it than just everybody gets the same. So yeah, a budget across the board for every single employee, the 2, the 3, whatever % we can do, but then how it's allocated could be different.
Yes, can you hear me?
Yes.
Yes. I'd just like to weigh in on this topic of the raises across the board. We're not ever going to be able to know exactly how all of the staff members are performing in the organization. So we have to rely on management for that. We know that we're going to have continued compression in employees or available workforce with the astronomical growth we're seeing in the region. If we do not keep up with that, we're going to fall woefully behind. And it's ultimately going to come down to a decision. Are we going to have the positions, or are we going to have to subcontract out the services? So we have to trust management to get the best teams that they have, and we have to pay the individuals. And if we don't, we're going to have to look at subcontracting out the services to be able to perform in the city. And that's just the reality. We have higher sales taxes. Things are increasing, but also we're seeing an increase in wages almost quarterly right now in industry. And so we have to stay ahead of that. But once we fall behind on that and we get the discontent, then it's going to be a really hard task to catch up on.
How does what's the overall of the department heads, directors, when you look at a general COLA versus a merit? Can we put a percentage on it? Do we find it 50-50 across the departments that some of those directors liked that option? Is it far less than that, more of an 80-20?
I would say that it probably 80 that did not like that approach.
Okay, so
Or more.
majority of directors didn't find the merit to be helpful.
Correct.
And we didn't do merit for our 3 largest departments, I guess, 2 really largest departments in all of public safety.
Their biggest struggle in my departments, at least, has been keeping up with, which is like Mr. Prescott said, keeping up with the going wages. We lose people to fast food. They're performing services for us because it pays much better than ours do. So keeping employees, retaining them is a big focus that we've had in our departments. That comes along with training, making them better at what they do, giving them better opportunities to promote through the organization. And I think that's the approach that our directors like better, working with those employees, making them better at what they do, and giving them opportunities.
And sometimes that today the mediocre employee, in time with training and guidance, they become a stellar employee. But it takes time. And so a lot of our concern is we lose them before we have that time with them. We lose them before because we can't keep up with the costs in the private sector. And so before we can make them into a stellar employee, they're gone because our rates aren't keeping up. So that's the thought that I've been hearing from departments. Now, again, if council prefers, Mayor, we can do that. I at least wanted to relay to you what we're hearing from the department heads.
Do we have a program of bonuses and incentives?
We're not allowed to do bonuses in public government. So now we have the ability to do like incentive pay. Like if a person is let's say they're in the finance department and they achieve their accounting degree. Okay, excellent. I'm gonna pay you a little more because you achieved a degree that benefits the taxpayers in that role. So we do have those opportunities. If you get a significant certification that took years of preparation, we do that. I don't do if you went to one training and get one little pay, but you don't get paid for that. But when you achieve a higher education, a higher training, we do those options. Licenses, yes, yeah, we do that opportunity. So that's available, but again, not every position has that option. So.
Yeah, the only thing closed is our discretionary retention pay, which is for years of service. That's that one annual payment that's built into your cash flows.
Our CDL program is a good example of that as well. Putting them through a CDL program, they earn their CDL, they become a driver, they get more pay for having that CDL.
And for our really achieving employees, there are times when we reclassify them. So because you know what, you are now doing twice the workload, you shouldn't be paid for the same pay you're making before. And so those positions, we do reclassify them and give more money because they're now doing more work because they're stellar employees. So yeah, we do make those changes. We recognize those employees that way as well.
The positions that we dealt with in the first study, the salary study, and I know that's probably, I guess we're maybe in year 2 of implementing this, but have we seen less turnover in those positions, or do we know kind of how that investment in doing that study maybe has turned out for us to do what we want to?
I'm going to turn over to my specialist here.
Council, I can't speak with empirical data as to whether or not we have, seen a slowdown in turnover in those positions, but to some of the credit what Donnie, Mr. Hooper, and Mr. Freeman have stated, it's helped put us in a position to be more competitive with positions. I do recognize that, but I'd have to do some deeper studies to see if we've seen any benefit from it.
Yeah. Well, I would want to consider if we thought we got value out of that first study that could help us complete looking at the organization to do that. And, I think at the end of the day, council can decide on how much we want to give for increases, as we should. But I'd really trust staff to figure out, okay, and what, and I'm a person that kind of supports the merit raise as well. But you guys know your organization better. I mean, I think I would be comfortable with us saying, okay, here's at the end of the day, here's how much money we have. If it's 3% across the board, if you guys can figure out between salary adjustments or remaining competitive, if we do a study, to be able to use that pot of money whichever way you think is best in order to achieve it. And it could be a mix of merit. It could be a mix of, wait a minute, we're not paying enough in those areas, that we need to raise those. So, I think looking at the total that we would be comfortable with putting in the budget, and then you guys figuring out the best way to execute that.
I think we have Councilor Prescott who wants to say something.
Did you hear me, Stephanie?
Yes.
Yeah, I just like to add, just for comparison right now, we're seeing general laborers roust about 17 to 18, CDL drivers anywhere from 30 to 40, depending on experience and with certifications. The entire market at mechanics, welders, the entire market in the top 26 counties is severely strained right now, and we're going to see a lot of continued erosion if we do not keep up.
And in comparison to that, our CDL drivers start at 19.
You can try again.
In comparison to that, our CDL drivers start at 19. And the other range we was talking about, laborers, $13, $14 an hour.
I noticed when we were looking at the requests that were coming from police and fire. I mean, fire was about 4 times as much. What kind of walk me through? What were the differences between those two?
So theirs is based on, they took the 5 largest communities and 5 smaller communities and averaged them out, and it's trying to meet that average of those communities by raising the wages. So that's the comparison that they made. Doesn't factor in cost of labor, cost of living. It's just what someone can make doing the same job in those cities.
And so that totaled up to a $9 million request, or?
Stephanie, can you click it for me? I think it's around 6 was fire's portion. 6 million.
Oh, total 6.
Yeah, 6 million to get that request.
6.8 versus 2.3.
Yeah.
Okay.
Yeah, and the 6.8 includes the reclass of a few positions and certification pay adjustments.
So those two numbers represent what percentage? Police's percentage?
So police only asked for the 3%.
So police
plus
meet and
steps.
confer is the steps and the 3%, and that is what you have built into your budget.
Nothing is built in. This would all have to come out of the 7.2 million. The step, well, these are new steps. So police currently has a 5-year step. They want to add another 5 to the officer level. So we'd have to figure out if someone's already got 10 years experience, they'd move to step 10. So they'd see a significant increase that we don't have factored in currently in our budget. Right now, it's only, we've estimated the 1.1 million to cover at current pay, bumping up next year to their next step. We've got that built in.
So the consideration, you've got 7.2 million sitting off to the side and kind of on a general overview so far. And you don't have any of the increases built into the base budget that is less than that 7.2.
Right, correct. Everything on this list and the previous slide is not built in.
What about additional positions requested, built in or not built in?
No, that would be under supplemental at 19 million. Some of those are new positions. Not really in I think fire had some, police didn't have any new positions in theirs. But you could go to AMW, they've got, I believe, 2 new officers, facilities, 6 more custodians. There's a wide range of requests throughout.
What's the average on the fire side if you take their, because I mean, I guess if you're looking at other cities, what does that calculate to here as a percentage pay increase?
Oh, it's at 10 to 22%, depending on ranks. Some of the ranks will get a 22% increase, some will get 10% and fall in between. Yeah.
Okay. Total pay increase for police and fire, and we also did some other departments that were badged officers over the last, 4 years, 5 years? Is it 25% total? Current?
Between the last 2 years of increases?
I think the 1 year of the $10,000 equated to 16%.
Yeah, it was kind of average 16, and then this current year, PD, I think, got 4 and fire got 3. Yeah. PD got 4%, fire got 3%, and then civilians got 2%. Merit.
Okay. Council, any other comments, remarks on, we got one for Prescott.
I just want to make sure that, I know we talk about civilian and badged, but when we start talking about civilian, what are we doing for like professional engineers? What are we doing for CPAs? What are we doing for the degreed professionals that are critical for our city? What are we doing for the IT guys? All those other spots that are critical for the internal infrastructure, we have to be looking at that as well.
All would have to come out of the same bucket.
And that would kind of get towards your comparable pay study option as well. So again, I don't know which of those positions are still need to be impacted, but that your pay study would go towards.
I would say minimal on the professional side. I think most of it was in the lower level type positions.
Okay, all right. So otherwise, I guess, Councilman Prescott, it'd go back to what you would authorize, whether a COLA or a merit for the civilian employees, because the civilian employees include your professional employees.
It's almost impossible to get engineers right now. We can't lose any of them.
What's the average salary for our employees? Minus our executive end. Do we have a number on that?
No, I don't think we have that. We could work on something, but that's kind of a hard number to, because we have 2,500 employees, wide range of the duties and responsibilities, and so we could come with a number, but we can come with a number.
Right. Because somebody's making $100,000, that's a $3,000 raise, which comes to $250 a month.
Mm-hmm.
So it's really not that large an increase for individuals.
And that's kind of why we're talking COLA versus merit. It's not much.
And that's where some of the department heads were like, for some of our lower paid positions, having a 2% merit was not well accepted by a lot of our employees. And so, because they knew that, well, it all depends on the supervisor and how they grade the person, and we try to have some consistency across the board, but there's not any way to, when it comes to performance evaluations, not really a way to have every department head evaluate a person on the same mindset, because they're all different positions as well. You would grade a street worker differently than you would grade a librarian.
Right.
Or if you take someone that's repairing a water leak, it would be a good example. I mean, they're out there for 12 hours in the middle of the cold, in the middle of the winter. They're going to have a bad attitude, but they're not dealing with the public at that time. They're just dealing with a problem. And that is different than dealing with someone that's public facing. And if you take his numbers that he said, $15 an hour employees getting a 30-cent an hour raise at 2%.
Right. And these increases, it's everybody, all city employees from upper management to our lowest employee?
It would be all ranges, yes. I mean, yes.
So, Councilman, keep going on that one. We have director level and above. Then we have kind of director level below in some other conversations where we address different things. In the past, I think we've had buy-in from executive staff that's, like, we are compensated pretty well compared to other municipalities, but your $52,000 new hire is $20,000 below. So, 3% raise on $200,000 is significant. But when we added all those up, I don't know if it even totaled $500,000. It may have been more towards morale, but then are you proposing to look at levels? That is one way that you could do it in trying to target. Several years ago, we were trying to target a lot of our entry-level positions as the lowest paid, more underpaid, harder to fill. We didn't see quite as much on the higher end. And so do you have an interest in looking at that as a direction to staff?
Well, I think everything has to, at this point, before we make decisions on where we go with the budget, everything has to be on the table. And, when you say somebody who's making $15 an hour, that's not a large increase, 3%. Whereas somebody who is salaried, not the hourly rate, that might be making 200, 250, 300,000, that's a substantial increase. And I kind of get it, but I think it's a conversation we have to have as we talk about raises and where we are with salaries.
Certainly, and again, all I can offer there is that, all your positions are at risk of being lost. And so, the one thing about your executives, they're being headhunted all the time. I hear about it all the time. And so they're the ones that you as a council depend on the most. And so they're the hardest to fill. They're the ones that have the most responsibility, accountability. They're the ones that are scrutinized the most. So there is a burden placed on them that comes with the pay they get. And so all positions are important, but each one is important for different reasons. And when you step into a higher role as department head or executive, you take on a mantle that sometimes the money's not even worth it, honestly. So it's not even enough to keep up with what you have to take on. So
it's kind of like being on city council.
Yes. Yeah.
We need to give some level of direction for what we'd like to see coming back. We have a couple opportunities to help differentiate priorities. We're not really speaking to those right now. We're just kind of overall trying to figure out what we would like to do on personnel. The balance in this budget probably comes down to, before I say this, I guess I would say, I greatly appreciate the attempt and the improvement to make it more about public service than just the financial piece. So pay raises matter, right? And you've got to be able to take home a paycheck to your family and provide. But what we've also seen is the morale increase across the board, I would say. And that is a lot due to the executive level and director level of appreciation and building teams and making people have value and understand their value to the organization and the community at large. So I really appreciate how much better you guys have done at that. Now, that said, I think our role as council is probably to help identify a priority for a direction. We can prioritize production and the product for whatever department that is for you over personnel, and we can push monies that direction. Or we can prioritize personnel over the product, and that looks a little different. And that would be a directive to you guys in, where this money comes from in finding that $10 million, $12 million, whatever that is, in order to prioritize personnel in the form of pay increase or additional positions or shoring up the organization. If you can't find it in additional revenues, and you can't find it in, monies that are coming forward or identifying existing funds that haven't been utilized, then you're left to find it in efficiencies. Or you're left to find it in some of the other budgets that you carry forward that have to do with facilities maintenance and things like that. So, council, in splitting those apart, where do you want to? I hear Councilman Prescott. He seems to be really heavy on the personnel side. Like I'm hearing a lot of value on paying personnel over new tires on trucks, so to speak. would ask for a little feedback from council on helping to balance that budget. Which is the most important need of the city that you're seeing?
Well, it's the people that we have. I mean, that's what runs our programs and does the work. So I think that's where the concentration has to be.
Yeah, if we don't have humans, we don't have anybody to drive the truck. So it doesn't matter what kind of tires we've got on it.
Well, I would say, what are our goals? I mean, when we look at the compensation part, what goals are we trying to achieve out of this?
A lot of it is obviously retention and attraction.
Okay.
And so that's ultimately the goal when it comes to a pay study or your pay range, is to be able to attract a talented employee and then keep that talented employee. And then also on the flip side, obviously, whenever as part of the evaluation process, if we have an underperforming employee, either get them up to speed or assist them on exiting the entity. And so, but ultimately, the goal for a good pay range is to attract and keep.
And that's what I would agree with that too. But again, I just it goes back to, I mean, I look around and I think there's a lot of areas that we are attracting good employees. I mean, and I'm just trying to figure out where the weakness is that we need to supplement this, because we do have employees that have been here for a while.
Yeah.
Our salaries may not be as competitive, but we have other benefits that city employees may get that you can't get elsewhere. But I'm just wondering, where are our weaknesses? Is it an overall weakness, or where are our weaknesses on the hiring, the attracting and retaining?
What I can probably give you is maybe a little anecdotal. Every 2 weeks, I'm part of the new hire orientation process, and so every 2 weeks we go through a process where we're onboarding employees, and so I get to shake everyone's hand, and that's one thing I've done since I've been here. I try to shake every new employee's hand physically when they walk in. I want them to have that from the city manager. Then I give them an orientation, just a welcome little piece, and then either Andrew or Donnie or the other ACM position, they then do a piece. What I'll say with this is that every 2 weeks, I'm seeing 20 to 40 new faces. I got 2,500 employees. You add it up, and again, this is every 2 weeks. You add it up, we have a lot of turnover happening throughout the entity. So I'm losing people all the time. Now, some is retirement, but I know a lot of it's not. So a lot of it is I'm losing. And this is not just a street issue or a park. I get the opportunity every 2 weeks to look at the list on every department, and I see consistently most departments are represented at every 2 weeks. So we've got issues throughout the entity about trying to retain. Now, obviously, our bigger entity, our bigger departments, I see more of them because they're bigger. But I've seen WIC, I've seen vital statistics, I've seen CP and DE, so we see them coming through. So so just anecdotally, what I tell you is I see a need across the entity almost relatively equal for all the departments.
And to add to that, some of those employees that are coming to the orientation that we see are the result of job fairs that the departments themselves have said, hey, we want to have a job fair, and they work with HR and they put those together. I've attended a few of those recently, and they had a really, really good turnout at those. Because they're desperate to continue to keep employees. And once we get them, we want to retain them, and that's the hardest part of it. And that's all the way across the board, really.
And I've seen instances where employees have left and gone somewhere else and come back.
Yes. Yeah. Well,
so I mean,
yeah.
Well, yeah. So anyway, but I mean, if we're going to use and I understand the income, but I want to make sure that we're strategic in being able to do this, so that we look at, because I don't know if we look more than anecdotally. I just wonder if there would be a trend or some area. I mean, because we've already identified some of those areas.
And that's part of the pay study process. And so when we did phase one of the pay study, the task I gave HR, given we only had so much funds to work with, was look at the ones that are truly struggling. And so that's what Mitch and the team did, is they looked at those. If we were to do a phase two, we would then go to the next tier, the ones we didn't get the first time. And so, there are certainly positions that struggle more than others. The pay study helps with that. The COLA or merit, whichever way we go, helps me citywide try to keep up. While I'm hopefully doing both COLA, merit, or whatever we want to do, and pay study at the same time, the COLA keeps us going, while the pay study allows us to target those specific ones. So my recommendation is to do both. My recommendation is to do a COLA and part of the pay study.
Well, I don't know. I guess when we put this budget together, there will be X amount of dollars there. And that's what we have to figure out.
Mm-hmm.
Again, I would go, I mean, maybe we don't get, I mean, I guess it would then be up to you to how to best allocate that, or your organization to best allocate that money. I don't know if we've got enough, or if at the end of the day we'll stay enough to do the 3% and the, the study, but if the study's important, again, I think our job is going to be to figure out how much money do we have, do we want to be able to implement
Yes.
to you using that in whatever way you want to help meet the challenges of attracting and retaining.
Absolutely. And so, yeah, we could, so the council could just give me a budget, a $5 million personnel item kind of thing. And then you leave it to me to decide COLA, merit, pay study, mixture kind of thing. You can do that. And when it comes to pay study, we will, as management, try to target those rough positions that are still struggling. We can do that. So we could do that, or you can tell me, we want a 3% COLA or merit, plus we're going to give you $700,000 for the next alternative phase approach for that. So,
well, and not all turnover is bad. I mean, sometimes turnover
yes.
is good.
Yes.
And then other times there are going to be people that advance their careers, that they want to do something else, or they want compensation elsewhere. So, I mean, I wouldn't want to say we want to hold those people back
Nope.
either. But
Nope.
I agree with looking at where we are to be competitive in the marketplace, to be able to do that.
Yeah, absolutely. Not all turnover is bad. Some turnover is actually healthy for the entity. But then that goes back to the attraction part.
Yeah.
So make sure that I can attract the next person.
But I do think it would be, if there's a way that we can kind of quantify when we're making this type of investment, to make sure that it's achieving what we're achieving, that we're making gains on turnover. Because that's what we're saying we're wanting to do, is to attract good people, which I think we already do that. I think we have a lot of people that come here are really good at what they do, but retaining them is part of it, and to make sure, to measure how are we retaining the people that, like Councilmember Prescott says, that we want to be able to attract and keep.
Yep.
So just speaking general fund, and I know it will impact others, but I think if you kind of implement a protocol or the template for general fund, I think maybe it could flow through the others, and it would be practical. If we're saying, as an organization and from leadership and execs, we find that the entire health of the organization is important. We've built a team. We're all in a team here. We don't really like being departmented, so to speak, and each thing evaluated separate. Then I find it to be healthy if you say, okay, our goal is to give a 3% increase in pay across the board. I find it helpful to put everything into that same bucket of contribution. And so what we've seen in the past is we keep the fund balances separate. We don't necessarily volunteer those until recently. So we may have some savings that are realized in different areas. They're not coming back to the entirety of the team, but then when we speak to a pay adjustment increase, we want to address the team as a whole. So in being able to do this, if 3% is $10 million, then what we saw with Katrina's previous presentation several months ago was overall we're under budget, so many millions in the general fund. And then here's the itemized areas where we need to do budget amendments for where we've had cost overruns, right? So can we set a goal of what we would like to do for all of the employees in the entire organization, right? But then also take the compartmentalization away and put it all into the way the general fund operates, and look at that as what does that net out? Because we would still have in these budgets that are represented some efficiencies that are not being recognized. Like, we didn't go through the budget and lower any department that I'm aware of, based on even if that department did have an existing fund balance at the end of the year. So do you follow what I'm saying in trying to look at just efficiencies or overall? Because go ahead.
Well, I think sometimes a lot of our, given we are so heavy personnel in the budget, a lot of your opportunity to amend the budget is because we've had turnover, and we've lost positions, we have vacant positions. So that's a natural thing in an entity the size. And so I think when you see a lot of your potential efficiencies, well, it's not really an efficiency. It's just we just had turnover. And so and if my goal would be to keep 100% of my employees 100% of the year. It doesn't happen. And so we have inevitably an amount left over. Now, my goal, to Councilor Simpson's point, is to keep working on strategies to stop losing employees. Now, obviously, if people retire, good for them. Someday I hope to do that myself. And if people, they know a better opportunity, or they're moving because their spouse got a job in Houston, we get that. But I want to stop the bleed on, I got a better job at Fermi, or I got a better job at Walmart, I got a better job at something like that. That's what I'm trying to stop. And so, you're not going to stop at 100%. And sometimes people just, this isn't my speed. I don't like filling potholes every day, or I don't like catching dogs every day. So some of that happens too. But I want to do what I can as an organization, through our environment, through our culture, through our pay structure, through our communication strategy, through all these things play into a good atmosphere. Pay's one of those. And so I want to build that to where they want to stay.
So in the ACFR that we've got in 25, we made some budget amendments. What we saw in 25 was overall we're under budget $18 million. Then departmentally we have cost overruns for a number of reasons. Some of it I think was even like wildland or doing things, fighting fires on behalf of other people. But then, we had $8 million in cost overruns. We netted a $10 million efficiency at the end of that year, just as a very simple look back, right? Then we look at revenues and we go, okay, we projected revenues at 270, we revenued 275, so we bring that 5 million in. And so you put those two together, and we walked into 2026, let's say, with a $15 million net positive position. Now we're working through 2026. We're trying to create a budget for 27. What this council, I think, would be greatly benefited by would be if we could see what do you feel like those budget amendments could be at the end of this year. Are we going to see the same level? I mean, we're projecting revenues. We can see that those are over. But at the same time, we're not projecting our net position with these departments are over, these departments are under. So overall, I just would like to see if you guys could bring us back a number that represents that efficiency. That would then help us set a goal, because everything we're seeing so far all has to do with increase in revenues. We're not necessarily looking at anything that shows, okay, we're expecting to have spent 5 or 10 million less in the general fund.
No, that is part of your revised estimates, your actuals, and I know they did and I did. We went line by line by line, and Justin can attest to this. I sent him many questions about looking at those trends, looking at the last 3-year actuals, looking at the revised estimate, and so again, not focusing on the budget number, looking at the trends, and you're going to see plenty of examples of pluses and minuses. Last year we were here, now we're going here, or now we're going here, and so this whole budget is built around that principle of capturing the efficiencies using trends. So
I do want to, and let's just take fire, for example, because it's the one that I can remember in my head. I want to say that when we did the budget amendment, it was 52 million, and then now they're budgeting, say, 49 million, right? So can fire operations perform everything that they needed to at the 49, or do we need to anticipate, like, well, we ended up moving that up in a budget amendment last year, you should anticipate that again?
And that's always a challenge, because we could take this 7.2 million available and put it all towards police and overtime to fix your budget, but then you can't afford your other needs. Or you just go ahead and count on those efficiencies, turnover, and excess revenue, hopefully above the 3% above actuals and sales tax to come in next year to pay for the overtime and software and other costs.
I'm hearing what you're saying, and I'm also factoring in the 18 million worth of cost savings that we saw. So in the anticipation of these budgets are built on previous 26 originals, not the amended, right, of 25.
But then we throw in the expected new revenue. So you're capturing that revenue, but where you allocate it, do you put it in that police and fire, or do you do it toward raises?
Yeah, and your cash flow sheet shows our adjusted, where we think we're going to end this current year. So that does that for you, I believe. And so it doesn't go by department, but again, as a fund, we've done the work to say, okay, we believe when you add it all up, the library, the vital, the street, all of them added up, this is where we're going to end up at. And so then that gives you your new available balance for this year.
Okay.
So yeah, we're trying to find those efficiencies.
So in trying to stay in our lane, if we were to give a directive of, we believe there could be 10 million in efficiencies overall that we're looking for, we would like to set a goal of 3% across the board. Go and look at those actuals coming in 26 versus the revenues that we're having in 26. Not anticipating additional revenues in 27, but capture both of those and bring us back a number to tell us how far away from that 3% we are. Is that a good directive?
We've already done that. I mean, that's what you have in front of you. So we've done the work to go through, and I know I personally went through it. I went line by line and looked at those things, and so trying to find, okay, the trend shows me here versus here. So we've done that work.
Okay.
So I think we would need from the council, we want you to specifically look here or cut this service back. So I think I would need that, guys, because I don't really have something I can give to you myself. I would need you to tell me, we want to cut X department.
Okay. So just looking at page 11 again, we have our total expenditures here. Just the round number of 275 is where we thought we would end in 26. And we're saying we're going to end at 281 is the revised projection. So we're spending more than what we budgeted. If we go to our ACFR, was it page 32 maybe? If we go to our ACFR, general fund, Katrina, you'll have to help me in finding the correlation. All I'm trying to do is see what is our trend. Did we go up in 25 from our projections?
Well, you have to go back and towards the back that has the budget in that general fund.
159.
Thank you.
Yeah, 159. Okay. So expenditures after transfers, 247, and the actuals were 263. Am I seeing that right? Revenues were 260, projected at 247, but then expenditures were projected at 247 and actualized at 263 on this, which that was because we had several budget amendments. We had projected again at 252. So should we assume that we finished the year in the general fund at 263 in actuals? We should, right?
For 24, 25?
25, yes.
Yes.
So now we would be looking at our actuals in 26. We're going to say that our total actual spend in 26 is now looking like 275.
That's the budget for 26, 25, 26. And we're estimating that we'll spend 281 million in 25, 26.
So what I'm seeing here is the budget was 268, and we think we're going to spend 274. So actuals to actuals is very helpful here. So in 26, we're saying we think we're going to spend 274. And in 25, we know we spent 263. So $11 million increase in current year from last year. That's all I'm trying to get to in best guess.
No, we're saying we're going to spend 281 in 26, 25, 26.
Where's the 281
That's
at?
the middle column, the revised
Oh,
estimate.
my fault. Yeah,
Yes,
you're
sir.
correct. Yeah, I was down below that on the, I don't even know what line I was on. So, yeah, we're saying 281 is our actual. And so let's do that again because I confused myself. 263 is our actuals from 25, in the general fund.
Yes.
281 is our actuals in current years, best guess.
Estimated, yes.
Okay, 18 million over budget?
Estimated, yes. Budget of 275, and we're
that's-
estimating 281.
Yeah, so just above the 275, you're comparing it to how we ended last year. So it's year budget to budget, not, we're only projecting to be over by 6 million from
In the
original
general
budget.
fund?
In the general fund. Yeah.
From the estimated amount, right?
Estimated the budgeted plan of 275.
Yeah, so is it a bad question to ask for those efficiencies that we saw? Like, because in 25, we saw efficiencies in lots of departments. And then we saw large cost overruns in a few areas, so we want to true up and write up those budgets, right? Get them higher, but then
The only way you could do that is if you cut positions in those departments that just had turnover. That's the efficiency Grayson's
I'm just
talking
saying
about.
the difference in running the organization is roughly 18 million from 25 to 26. Cost increase. 281 from 263. So additional 18 million in costs to the general fund to run the.
You should really be looking at the 263. That's more the operation. Everything else is transferred out for other funds. So if you're looking personnel, it's really
So-
the operating budget request, 263.
Let's go to, what was the operating budget request then?
Budget was 257.
And-
We're projecting 263.
Well, look at 25 on that page 159. What line item would that be? Transfers, you just subtract that number?
Transfers is down in the other financing sources, so it's not necessarily in your budget numbers, they apples to apples.
Yeah. And I don't know, I mean, that's where we really get lost in transfers. So I'm just looking overall, you know, the organization needs to spend $18 million more this current year than it did last year. And then we're projecting, you know, an additional amount and trying to factor in raises. So what I'm asking is if council agrees, like, let's go look at this 18 million in current year expenditures and see, do we have anything that's going to pull forward that will help us achieve, you know, an increase in salary?
Well, again, those would be one time, because anything you have left over from this year will be applied to a one-time for the next year. So, again, your right column there is showing your ongoing revenues and expenditures. That's the column there for that. And so, but anything we have for efficiency that we captured this year would be a one-time that you can use in the next budget process when we do that calculation.
Can I add on your cash flow, you have the 263, the operating budget. To your operating budget in your ACFR, you are 263. You're within hundreds of thousands between.
In 25.
In 25, compared to 26. To this middle column,
Okay.
you're
So
looking
it's-
at operating budget request, revised estimate of 263, 235.
So it's pretty flat, it sounds like.
Right.
Okay.
And again, we've done the exercise. Again, the council requested revised estimates. So we did the exercise as part of the process to determine, we use revised estimates in our estimation for the 26-27 budget. And so when you go line by line by line, you're going to see examples of that. And again, and then sometimes it's off because we know of something. We know that, okay, this is going to come. This is why we work with department heads to determine, okay, what do you know we don't know? Well, I'm going to have this big expense next year. So there's that. So we've done the exercise of trying to determine efficiency by using revised estimates.
Yeah, I am seeing your 263 on your operating budget requests at the top, right? And then that correlates down to the 263 in 2025 of 263. So when you're saying all of the other grants and projects and everything else is all pulled out of there, then
That's
so
in the
we
transfers.
those are transfers.
Transfers, so you have to, on your ACFR, go to the other financing sources down at the bottom, that 19 million. Those compare apples to
Yeah, and
apples.
I love the ACFR because it really helps you see it. So
Sure.
in looking at the ACFR, total expenditures in 25 actual amounts is 263,
Operating wise, yes.
operating wise, up from the budgeted amount of 247.
Correct.
So we were over the budget during that year. But then this one, you're saying go up to that operating budget request of 263 is your actuals for 2026.
Right.
So are you saying you've ran the organization, the general fund, basically in 25, the same amount that you're running in 26 in operating?
That's what it's kind of turning out to be. Again, these are our forecasted numbers, and so it's basically turning out to look the same. So again, turnover or cutting back in buying of seed or fuel prices have been good. It's just we've continued to operate status quo. Again, and I know because I was here last year for that budget process, the goal was keep things status quo as much as possible. So we gave some raises for police and fire, a little bit of merit for civilians, but otherwise we've kind of kept things operating the way we've done for years. And that's kind of what we're proposing for next year. Status quo unless you allow for some supplementals.
So if it costs us 263 to run the organization this next year, right, and we wanted to give $10 million worth of raises and prioritize that, we'd be 273 plus the other requests, right?
Well, again, the general fund doesn't need the 10 million. The general fund needs like the 5 or so.
Right,
So,
sorry.
yes.
So
Yeah,
just general fund.
across the funds, probably 10, I guess. And so, yes, so that would be all your cash flows.
Council, we're going to need to pick. We're going to go look at revenues, or we're going to go look at expenditures in order to accomplish the reprioritization or continued prioritization of personnel. And so I think that's where we probably need some direction from you guys in where do you want staff to look first, second, and third to bring you back something in a month that gets us as close to the goal as possible of meeting those priorities.
I don't think we have a month to do that. We need to approve a
2
budget.
weeks.
We need to approve a budget by the end of August. And again, my recommendation is we've done the efficiency look, and so I don't know what I can bring back to you unless you tell me, go and cut this department. My request is you got about $7.2 million to work with for ongoing general fund, whether we do property tax or not. Utilize that towards the personnel.
Councilman?
Just going back to this page 11 real quick. If I were to simplify this, I guess the throwing out the grant income, transfer from other funds, and the expenses, I mean, really throwing that out, we projected $256 million in income into the general fund. I mean, that's from taxes, sales tax, all those income the budget was that in this year. And our operating budget was $257 million. So we were right there. We were spending a little bit more than we were taking in, but it's all good. But it looks like we took in $267 million in revenue, which is sales tax and other things that we're projecting, and our expenses go up to $263 million. I'm just from the 257 to the 263. What constituted that increased spending? Was it related to revenue, or is it employee expenses or overtime expenses? Do we know kind of what?
It'd be all the above. I mean, it's probably going to be a lot of overtime, but there's a whole mixture of things that play into that, and so it's a whole many pages there worth of.
Well, but can we adapt? I mean, but I would gotta think there's probably a few major drivers in that.
Personnel.
I mean, pencils have not cost us millions of dollars. I would be interested in kind of knowing what that was. And
I can speak to that a little bit.
Yes.
We did do a little bit of a reconciliation to see what the differences were. Your biggest driver was obviously overtime. That was about 3.5 million of that jump, and then there was some obligations for leased computer software, some contracts and stuff like that that increased due to costs, and software costs are just skyrocketing at this point. So that was about 1.1 million, and then some of the deliveries we had in fleet that were not included in those original numbers. Those deliveries that increased those costs was about 1.5. So that brings you to about your $6.1 million variance right there. Those are your big drivers.
And then when we look at, and so next year we're projecting revenue right now at 271. and where expenses are going from 263 to 268, do you have kind of what the high-level increase is for the expenses? Because that's another $5 million, kind of what's driving that.
That's a police and fire automatic step increases, fire station 14, firefighter reclass, lease computer software, IT charges, fleet charges, and insurance and bonds. It's about 5.5 million.
Okay.
Yes, sir.
But then we're saying to look at the 3% across the board. If we want to look at that's coming out of the 7.2 million.
The
whatever that
7.2
is.
million.
Okay.
Yes, sir.
So I do want to go back one more time just because I've got it wrong in my head. I thought we brought in, a total under budget, from the previous year of like 18 million. And then we had those budget amendments of $10 million, and we had a net difference of like 8 million. Is that roughly correct in 25, end of 25? That would help you finish the year with $6.5 million more in your
And it also helps us
in
with
your
the
fund.
general fund CIP projects.
Right. So, I think those monies that we came in under budget, right?
One-time
What
money.
do you mean one-time
Well,
spend?
again, it goes to the CIP for this next year. So because the money the efficiencies we captured one time. So we can then put that towards your calculation for the CIPs. I don't know if I'm going to have the same efficiencies this year. I don't know. We hope so, but we don't know that yet. I don't know if it's going to be 6 million or 4 million or 24 million. Don't know. We've given you our estimate here, but I still have another month and a half to go, and so.
So if we, and we'll sit on this one for just a quick minute and then we'll do lunch. But if we realized 18 million worth of savings total, and then we realized 10 million worth of cost overruns, we brought back $10 million worth of budget amendments, right? And those were one-time budget amendments? Those weren't ongoing budget amendments?
Yeah, a budget amendment is what you do for that one budget, that 1 year.
Right. So then that additional 10 million is built into the next year's budget, right? That's what you're saying?
It depends on how we budgeted per line based off revised estimates. And so, no, we don't just take the amendment and work from that. We're working off revised estimates and actuals and so forth. Yeah, we're not really going off of budget to budget. We're going off of, we're trying to more go actuals, revised estimate to budget. That's what we're trying to do.
So where that gets difficult is like we do the budget amendment for 25 to close that out. Then in current 26, we still have that budget amendment, kind of reference point. So we consider that to be, reoccurring costs. And so all 18 million could have been spent for reoccurring costs, and we'd have still ran a balanced budget. We didn't have to have a net savings to go to CIP. Then we're hearing that, you've got $40+ million worth of monies unspent in existing CIP. So I think we were thinking in order to try to prioritize personnel, we should be under budget for what we are actually spending in 26. So we could increase the budget in 27.
So that's all been taken into account in your cash flows with your revised estimates.
You're saying you
everything.
push that over to CIP.
Well, again, if any one time, because that's one-time dollars that we raised. That little dollar bill I collected, it's a one-time dollar bill. So we've got it. We'll put it towards CIPs. Again, I don't know if I'm gonna have the same exact efficiencies because those efficiencies are based off of this one position was vacant and that one project didn't happen. Well, I don't know if that one position is going to be vacant again this next year. Sure. I hope not, but it could be. And so every year is a year-by-year process.
Yes, sir. I see that we have a proposed budget of total revenues of 280 million one-time dollars is what I heard. They're all one-time dollars. So we need to appropriate how much of that 280 one-time dollars this next year go to the one-time spend for this next year. We call them one-time CIP projects because they they're just finished and then that one closes, hopefully. But then in utilizing some of those monies to go to personnel, I'm trying to explain and listen to council, see if those monies need to be allocated or appropriated for personnel costs in order to achieve the greater health of the city and the organization versus the CIP program.
Again, the challenge is you'll be applying one time to an ongoing expense. Because if you put it towards a pay raise, that pay raise shouldn't go away unless you get rid of the position in the future year. So that's why you base your personnel decisions off of ongoing revenue. Again, every year you can make the decision, I'm going to cut 15 positions. And so that is a year-by-year snapshot. That you can make those one-time decisions kind of a thing. But barring that, and saying you don't cut positions or whatever, you need an ongoing revenue dedicated, because if position A is going to be there for the next 10 years, I got to make sure I can fund it for the next 10 years. If you do one-time money towards that, well, in 2 years, you'll be scrambling to figure out how am I going to pay for it now.
Just like the SAFER grant, we had to plan, we got that grant for all those firefighters, it's run out. So we have to build it in now.
And now the transit as well. Now that we've lost the grant money for the transit, we're having to now allocate ongoing revenue towards that. So that's how budgets work.
Okay, well, I appreciate the explanation on that. So is the recommendation from staff right now to keep the one-time monies going over to CIP and not give raises to the staff?
My recommendation is never to use one-time money for pay raises, because in 2 years, that council will be like, how am I going to pay for this now? That one-time dollar went away. My recommendation is to do a 3% COLA for all the employees, plus a little bit of money towards the pay study phase 2, and then using ongoing revenue that we show in the cash flow to do that, which is your 6.2 plus $1 million in sales tax to go towards that. And again, that trickles out across all the funds for all the departments. So that's my recommendation.
Okay, and I misheard earlier. I thought Mr. Freeman said that wasn't considered in the total, that we wouldn't have that amount of money, but we do have the amount of money to afford the 3% increase?
That is in there as a placeholder. 7.2 million is in a placeholder for y'all to assign. We haven't assigned it to any departments. It's sitting in a couple of line items to be spread where y'all direct us to.
So if you say, yes, 3% COLA, we then take that number and put it in a little bit in the library, a little bit in CP&D, a little bit in streets, a little bit in wherever. So we then put it out across there.
And it basically stays in finance until decisions are made this budget year, and then next year it flows out into the department budgets as a snapshot.
So what you're saying is the 268, all of it is accounted for except the 7.2.
Correct.
Because that's the amount that we have to work with.
Well, $1 million less, but yes, it's built in there, waiting for y'all to tell us where to place it. Okay. It's at 2 line items in the finance department budget right now.
Councilman? You're good. Any direction from council? We still got Prescott. He's still listening?
Thumbs up.
If it helps, for an example, 5.1 million would give you flexibility to figure out up to 3% merit versus COLA, combination, high performers, and the next phase of the general fund pay study, leaving 2.1 million to go toward one-time CIP. Or not, supplemental, of the 19 million requests in supplemental.
That's not all one time. Some of it is ongoing.
Some of it's ongoing, some of it's one time.
Yeah.
Mm-hmm.
Yeah. Council, how much would you guys like to direct, and how much would you like to just allocate and allow to be directed by staff? So like in the 19 million supplemental, if we just said, here's 2 million left, you guys are going to be able to direct, these are our recommendations, or we would be able to go through that process today, tomorrow, I guess. So council, do you have any interest in trying to do that, or are we still on the 3% piece that we need to consider further?
I'm thinking, I'm with the city manager's request of the 3% and then the study. With the right to reserve, maybe tomorrow we take a look at it, but then going through this list of supplementals of the 2.1. At the end of the day, maybe something on that supplemental list says, wait a minute, we got to have that or something. But I'd like to shoot for setting us up for success on the compensation by doing that, and At the end of the day, you'll have X amount of money, and you guys go make it happen.
And I agree with that approach. I think we have to look at what you're requesting for the employees at the 3%, and then whatever's left, let them allocate.
I didn't have him up to the mic, but Councilmember Prescott agrees as well.
We should probably have him say that just for the record. So I'm sorry. I trust you, Stephanie, but let's have just for the audience listening.
I agree with that. Did you hear that, Stephanie?
Yes, sir.
We got you. Can you bring back confirmation and maybe a little high-level clarity so that we're looking at a lot of different numbers here? We're throwing out a lot of things. We're in 25. We're talking 26. This is speaking to 27. Summarize what we're getting here, just like you normally do. If we were to vote this in, we're going to walk out there and maybe give the media the highlights. So bring us those highlights of, organization can run, provide all these services based on these projected revenues. Here's the total, that we would like to see that total, what that looks like. And then that includes 3% raises across the board. And that includes these recommended, supplemental requests. Then I think, not in that high level overview, but we should at least have a conversation of what it doesn't include, right? So, hey, we still have these things that fire wanted that we couldn't get to. We still have these things that APD wanted. We still have all these supplementals. We prioritize per your direction. This is what we're bringing back if it's personnel driven. And then council would be able to hear that again on a clean slate. And really, I would say, I don't want to lose or I don't want to lose the conversation about existing CIPs being able to go back prior from 23 and find savings to get to those supplemental requests, and being able to look at what's currently closed in 26 and will close in 27 and see where we're at on those. So I think we should be able to have some confidence that we will get to more work than just what's already been appropriated. It's based on the historical record of what we've seen over the last couple of years. Now, I'm still lost in how the fund balance has been done, so I would have a personal request. I'd like to see that calculation. So, like, we need to pick, I could do that just with staff, but we need to pick a couple funds, and I'd like to be able to see, how does council give oversight to that? If we don't see it on the ACFR and we can't tie it through easily, then like, how would we explain it to our constituents? So can I get an offline education on how you're coming up with, if I thought it was 12 million coming into the year and it's really 10, what did I not have that I had to take out?
Sure, yeah, we can have Lola and Katrina work with you parallel to all this and on that effort. So, yeah, and we can work on a cleaned up version based off of what we got so far today. Andrew, do you have what you need for that? And
Yes, we're good on the personnel and the supplemental recurring. And I think after lunch, we can talk a little bit more on CIP and debt, and then we can basically do the same thing on the CIP side, bring back recommendations tomorrow of how we recommend narrowing it down based on the request.
And we as staff, we can bring back to you our recommendation for supplementals, if that's what you like. It's a big list. We can, now that we've got your guidance on the pay, on the personnel, that allows us to kind of know, I've only got this much to work with supplementals, so that helps us prioritize that list. We can work on that this afternoon after we break around 2 or so today or so to get that going. So
I just want to add some thank yous on the new budget format, and particularly, and I know we've done a hard work on the projections. To me, that is so valuable in setting up next year's budget, is really digging in and having those actuals. So, forecasting and doing that, I know it takes a lot of time, but I can tell that a lot of time was spent on that, and it just makes our job of that so much easier. And then also the new format, I don't know if it's beneficial to everybody else, but just having those percentage changes on those 3-year period to kind of see trends and kind of where that is, I think, very helpful for me, and hopefully that's providing some value, or to you look at things quickly as you're kind of going through the budget. But I appreciate those
Major
changes.
kudos to Justin and his budget
Very good.
analysts
Thank
for
you.
all the time they spent on
They've
that
done a
book.
lot of work,
Yeah.
and they made that happen, so thank you all. for
And I
doing that.
know we worked on the FTEs and all that type of stuff to get that in there, so I appreciate it.
Freeman, can you also, when you bring that back, speak to, we had budget amendments previously, and so we identified those as cost overruns, that those are covered in current year, right, because of our increased revenues, so that nobody's operating currently with a surprise to come later, right? So what we want to do is we want to look forward to 27 and go, okay, well, we can afford these 3% increases, and that was an actual amount that we spent, or we knew we were going to spend in 26. We didn't have an actual that was over, and we're trying to figure that out. So back to that point of overs and unders, now that we've got them departmentally broken down, are we overall going to hit those actual numbers the way we've projected them at the 263, basically?
That's our goal. We won't know till we audit the books. You still could find that we need a budget amendment because of police overtime or software costs in police. It's too early to tell in that sense. And we know we're not increasing overtime in police or fire budget going into next year. So there's always going to be the potential that it goes over. You just hope other line items or other departments with turnover in staff that it nets zero, and hopefully we increase over our sales tax 3% estimate, and that helps with those overruns. But
Then-
there's always going to be the potential for that overrun in public safety.
Then let's speak to that. Let's carve out some time here before we get out to bring in, our largest departments that are going to impact that the most. Not favoring any department, just saying it's the most impactful.
That's 50% of the general fund.
Over 50% of your actuals, right? So let's speak to, okay, we had a budget that we were working under and we've exceeded that. You guys amended that previously. Here's our current year budget. Here's where we believe we're going to land. This new calculation with the 3% increase across the board has to consider those additional, projections of an actuals, whether they're in budget, over budget. So if we're going to say, okay, this 3% would be in addition, but then we've given no consideration for whatever we're going to come back and ask for later, that's not a healthy budget in my opinion. So I would want to make sure those costs are included, and I'm still not super clear on that.
Because we're not increasing overtime, and if you give everybody in police and fire 3%, overtime's going to go up just by default because they're getting paid more. And that's just the way it's structured, because we can't pay for the new and build up overtime.
But there are some operational changes being done by Chief Hover, and that's it's hard to budget for today because he's still doing that. But he's already made some. He's making more changes that's going to impact that dramatically. So
I'd like to hear, if I'm okay with it, I'd love to hear from chiefs, both of them.
Yep.
And how that's going to impact them, make sure we have their comfort, they understand. Maybe it's not today, maybe you guys need to do some more
Or we
homework.
could, I think they could talk on it after lunch, just kind of high level what they're working on, but they're tracking it much more closely. But there's always minimum staffing, training, coverage for training, those things that they have to account for.
And if the council felt more comfortable, we could, whatever the difference in the supplemental after the personnel, we could apply some of that toward those overtime lines as well, to start making up that gap over time, put a little bit back in the budget, a little bit back in the budget to get that hole there. And so, I mean, we're going to have efficiency, because as a city, our staff every day look for efficiencies, and they're always working to come in under budget, and so that's always a goal. So we're gonna find a way to make that work next year. And so, but we can start chipping away at that budget line a little bit through supplemental increases. We could do that.
Okay. On the other enterprises, we don't have the same considerations, right? We're healthy. Sewer and water can afford the 3% increase, and they're not scrutinized quite as diligently.
Yeah, they've got it. We've got their supplemental. A portion of their supplemental can cover the 3%. We'll
Okay.
bring that back to you as well.
I think if we could take those enterprise funds and be more aggressive in the CIPs as they're broken out, based on their rate pay for a lot of them. We do have grant opportunities, and then we have bond monies, and we still have open CIPs. So that consideration looks a little different as long as we can prioritize personnel. But then back over in general fund, if we prioritize personnel, what this looks like, council, is, your 5.5 million in general construction. If we need $1 million in overtime, do we deduct that? And that's a 4.5 million budget item.
No, it just, at the end of the year, it's the balance of everything. It's the departments that have gone under, departments that have gone over, and then revenue coming in is usually what covers. We haven't reached that crossing point of where we're not able to cover the budget amendments at this point. But
we're chipping away at it. We're making changes operationally, and we can do changes in supplemental budget. We can start chipping away at that. It's going to take a while to get there.
Okay.
At a high level, I mean, because I don't think we have this break, but for personnel costs across the general fund, are we finishing over budget in that because of the overtime? And you can look at that, and we can bring this back up when we.
Yeah, we can look at that and bring it back to you. So,
or talk about it maybe in the overtime discussion.
Yeah, we can do that. So.
Yeah, it's about even. We had 25-26 budget, 175 million for personnel services, forecasting 175 million, just under the budgeted amount. So it's fairly close overall.
In that case, where it's the open positions throughout the whole year that is covering the overtime, which could be a worse scenario. You could not have enough to cover.
But the only way to ensure it is we'd have to go in and cut those positions, but we do need those positions when they're filled.
But if we continue to fill them and we're successful in that, it's going to put more pressure on there if the overtime doesn't come down.
It's a feathering process over the next several years, and so trying to balance filling vacant positions while still having the ability to pay for overtime you haven't budgeted for. This council will be setting the next council up for success by chipping away a little bit of that overtime with a little bit of supplemental there.
Good. Thank you.
We have Councilmember Prescott with a comment.
I would like to understand why can we not calculate overtime? I mean, I know it's not going to be exact, but year on year, we have an overtime, cost. Why can we not build that into the budget? Why does it have to be an unknown?
Because we never know when there's going to be an emergency situation that we have to put 20 people out there for extra hours. We have a base level of overtime we can calculate. If we know we'll have this many people out on leave, so you got to fill the position. You also have mandatory training they have to go to, and minimum staffing. But on top of that, it's just however many emergency situations come up.
Some of it's even based on weather.
And weather, yeah.
Well, at the end of the day, also, we're not budgeting vacancies. I mean, really, it's 6 of one, half a dozen of another. I mean, but at the end of the day, because you could budget 0 for overtime, but at the end of the day, we're also not budgeting vacancies because we don't know what that's going to look like either. And right now, we're just fortunate that the vacancies are paying for the overtime.
Yeah, and it's ultimately my job, Andrew's job, Donnie's, Lola's. It's ultimately our job as the year progresses, as we're monitoring revenue coming in, expenditures going out, overtime, vacancies. Do we have the ability to pay our bills? And do we have the ability to stay within budget? If not, do I have the ability to even amend it with available revenue? So that's our job, to keep working on that. Is if this is rising, how do I lower this over here? That's what we try to do on a daily basis.
Do we have any numbers on the overtime if we were looking at a 5-year period? Just to see if what the average is. I mean, are they close over the last 5 years?
Yeah, and so just to start off with, I mean, your sheets show actuals for about 3 years worth, and so you have at least 3 years right there. We can get you more if you like, and so, but you can look at per department the trend on what they're actually landing on overtime each year, and we can show that to you as well.
I would like to see that. I mean, if we can predict, with 80% certainty over a 5-year period, at least, I mean, we have it as 0 right now, 0 overtimes in our budget, and then we just accept the run, whatever it is. Is that how it works right now?
No, we don't budget 0. There are definitely lines budgeted for overtime. It just hasn't been enough. We haven't budgeted enough towards that. And again, we're trying to chip away at that over time. I guess over years, it got away from councils and management over years, so we're trying to chip away at that number over time.
But if we budget that and don't budget but we don't budget the vacancies, then I mean, how much over we were up $1.5 million in overtime over budget? I mean, that in the budget, that's going to have to be $1.5 million that comes somewhere else if we're going to budget the full amounts and not budget vacancies.
Right.
Prescott had something.
Yeah, I was just curious, what do other cities, what is the industry or municipal standard for calculating overtime? Because for as many years as we've been doing this, we know we have the historical track record. We surely can get some kind of a delta in there and then adjust as needed. I understand things happen. You know, there's big events, weather, acts of God, things like that. But how do we get it closer to being in the budget and also having a metric that we can keep track of it?
I'd say I think we do track it well, and we probably can predict what it's going to be. The challenge has been that's not been the priority to allocate our new revenue to. It's been new services, raises, those sorts of things versus truing up our overtime because we've been able to absorb it.
We have it every year, right? It happens every year.
It does. So we could not do $5 million worth of raises, and we could fix it this year.
Gotcha.
Anything else, Councilman? Okay, pretty good stopping point. Let's break for lunch. We take 30 minutes, that's okay, 40, come back at 1. ourselves back into session. I know we got Prescott back online, so I think audio, video's all good. Miss City Secretary, you good over there? Thumbs up. Grayson, you want to take off with this, or Andrew, if you can lead us back into it?
Yeah, I think we're on Andrew still.
So the remainder, at least from staff side of the agenda, is to get some high-level feedback. We touched on personnel and supplementals. We're going to bring back staff recommendation tomorrow. We'd like to do the same for CIP, but want to get your thoughts, priorities of what you'd like to see, if there's anything we need to know about as we're vetting all these projects, knowing that we have $73 million in general fund, for example, with only about $12 million to work with. So if there's a particular project you want us to cover or highlight, we can touch on general fund. That's the one that's got the most flexibility of where it can go and what it can fund. And then get your continued input and support, hopefully, on our other funds, utilities, drainage, solid waste. Those are the more bucket of money that we're going to bring back projects as they come and get approval from council with a contract, and that's deducted from that $13 million. So you basically, in utilities, you'd have a $13 million project with sub-projects that get approved underneath. So getting some feedback from that perspective, and then just from the debt-funded perspective of the CIPs, what level of support we have to continue the fire apparatus purchases, and what level of support there is for the street debt amount. Because typically we'd be in the 20 million range. We're asking for 42 million, so we can do those two major Coulter and Osage reconstructions. So happy to go in whichever direction you want to go first, but that's kind of the feedback we're wanting next.
Well, I heard earlier we might want to do police, fire, so while we've got the chiefs here. Now I'm hearing we do want to talk high level overall CIP. I mean, the thing that jumps off that page is 29 million in police, and that's just CIP.
Yeah, and the big thing about police, it was a proposal for take-home vehicles. It's more challenging and probably won't be on the recommendation this cycle because, yeah, we won't be able to cash fund it. You could consider debt funding a take-home vehicle, and that covers your payment to purchase it, but it doesn't cover the multi-million operation and maintenance to fuel and maintain that vehicle. So that one's probably going to be a future discussion than being able to accommodate in this year's budget. Knowing that we only have $2 million in supplementals, that would all have to go toward maintenance and operations of debt-funded police cars.
So to our city managers, if we look at this category and we take these top four, and they're just the top because they're the most expensive, right? We go police, fire, streets, and parks to understand maybe what are the almost have-tos, like we really need to get to this on these items. And then on the debt funding side, honestly, I'm not concerned. I wouldn't be trying to address, like, are we looking at debt funding streets or not? Like, that's a conversation we had 3 years ago, right?
Just what level?
I would rather get through our overall budget. I'd rather get our priorities and then allow council months later to decide, once we have some projects heading our way, how much is this project actually going to forecast for? What does the return look like? What does that look like by the time we actually start paying for it? Because you're going to have engineering or whatnot, or you may already have it. So all of that is much lengthier conversation, not really a high level. So if I could stay off of the debt side and just stay over on hearing the priorities and then give some feedback. Council, what are your thoughts on just taking those four for this?
Yeah, I like that approach. Kind of narrows it down a little bit for us right now.
Just kind of walk through a sampling of what the requests are for police, fire, streets. Okay. So as far as police, they actually have
I like that idea.
All right. So as far as police goes, if you take away the take-home car program, there were lease and purchase options in there, so that made up about 27 million of it. The other projects in there, there's a police courts building master plan for $1.5 million. That's really trying to do a needs analysis of the current police department and municipal court for future needs, because we've expanded into the floors that we can, remodeled. They're about basically at capacity now, so planning for the future, 5 to 10 years out, is additional buildings needed? What kind of improvements can be made? Does municipal court need to move out so police can take over more of the building? Some of those conversations would be covered in that $1.5 million if it's approved. The other police item is police radio encryption, $688,000. Right now, our radio traffic is open to whoever wants to listen to it, which is challenging. So paying for this would keep it encrypted so the people committing the crimes can't listen in on the police that are responding to the crimes. So that covers police. As far as fire is concerned, we've got EMS cardiac monitors, $55,000. That's a pretty normal recurring purchase. Fire apparatus equipment purchases, $139,000. That's also more of a reoccurring CIP. And then we've got, I'll stay with the lower amounts first. Building improvements, $500,000. That would be like an E&I account to do improvements to their existing fire stations. Driveway and parking lot improvements, $400,000 for a similar purpose. $63,000 for facilities maintenance improvements. And then we have a larger conversation that'll have to take place for our portable radios. They are becoming end of life, not just in the fire department, but citywide. So that's probably going to be a future conversation, similar to take-home vehicles, of how we fund that moving forward. Is it a lease model, an outright purchase model? That is 2.4 just for fire department's share. And then some of the larger items, Fire Station 6 rebuild would be $9.1 million. That would be one that would be a potential debt conversation. And then Fire Station land, $735. That was going to be basically a placeholder. They've completed their master plan for future fire station sites, but we need the capital to go out and purchase them ahead of time. So $735 allocated for that. And then I'll do one carryover that's a higher priority for them that's not on this list, but it's on your smaller packet of the 5-year plan. It's the fire training facility classroom, which would be about $2.5 million. That would be building a new facility out on the airport fire station training grounds, because they're in a couple of single wide trailers and their maximum seating only allows for a certain number in their academies. It could be a mixed-use training facility for police, fire, OE&M, AUCC to use for training classroom space as well. So that's 2.5. That is the total 1-year options at this point. We haven't prioritized anything from a staff perspective, but that's your year one of police, fire. And as far as streets, we've got annual arterial reconstruction, $30 million debt issuance, with $12,500,000 for street resurface, for a total of $42.5 million. That would be debt funded. And then we still continue to cash fund $2.5 million for other street maintenance needs throughout the year.
So the streets 2.5 is budgeted in my general fund?
Yes,
Is
sir.
that right?
Yeah, that's that transfer out that you see on your cash flows that go to the street specifically.
And the 12.5 resurfacing, we've already done that 3 years running now, right?
Yes, that's our normal, and then we've done another 2 years.
2 years, this would be our third year coming up.
And then we've also done around the same amount for the annual arterial reconstruction. But this time we're proposing to bring the reconstruction up to $30 million instead.
Could we get a little feedback on like what the difference is, so that 30, the problem that we see with streets when you talk about a Coulter or an Osage is you can't just reach for a little. And I know that's the tendency here. Well, let's take 6 out of the 12, and allocate it over to Coulter, and then let's go borrow 10 and get it done. Well, does that work, in any of these? Or sewer and water, some of the other monies, drainage, things like that. Could we get a little feedback on if this could be bite-sized at all? Because that's just an overall large amount. Or if it can't be bite-sized, how How long does it take to walk into that? Because I do think we want to be mindful as to adding to the INS side. What does that look like in debt service?
So let me walk you through the two projects. So Osage and Coulter would be the two reconstruction projects. There was 1 year when we were doing this, the first year, that we didn't have any reconstruction projects at all. It was just maintenance. So, but knowing that, and we had Coulter and Osage both coming up, the design is over 90% complete for both of those projects. So the cost estimates that we have, opinion and probable cost, is very accurate on that. So we know what those are now. Those are pretty much shovel-ready and needed. Both of those projects, we know Osage, we've been talking about that for 2 or 3 years now. Coulter's an expansion as well. So they're ready to go. It'll be up to you guys as to whether you want to push forward with that or not, but design is, am I right, Jerry, 95% complete on that, so they're ready to go in the ground. Did you want to talk about utilities separate from that, or do you want to talk about, continue to talk about streets, or what questions would you have about it?
It probably would be helpful for us to touch on the drainage piece coming.
Oh, the drainage piece, yeah. So there's a piece in drainage that has to go with that for both of those streets, and that's where
that $10 million.
That's where you see the same money on the other side of that for both drainage projects to make those complete.
I think we, and meaning council, previous council has seen that in a proposition that put forward, well, let's vote for these separate. We didn't get the vote that we needed for both pieces, and so you really couldn't do it. So that's good to represent it that way. So technically, you're looking at two large, main arterials, Osage being one of the worst conditions, existing conditions. And so altogether, they're $40 million for both.
30.
But with the drainage piece, you got 10.
Yeah, if you add that for the drainage piece, absolutely 40, yeah.
Okay. And in the debt service for that, you got the drainage rate, but then you also have, streets is on your INS side.
Right.
Do you have any capacity, according to bond counsel, on either one of those? Or do we not know?
Yeah.
That would be something we could bring back, I guess.
Yes, yeah, we can bring back, because we're looking at that drop-off here, because when these debts would take effect, you start paying them, it will be in the next fiscal year, and that's when we have the drop-off. So I saw some emails from Stephen Adams here. Did it address that? Okay, yeah, so we can bring that back to you guys tomorrow. So,
okay. High level, council, if you're hearing that, the goal that I'm pushing for is to maintain that 10-year program that will cycle itself around. So if we continue on the streets resurfacing, the $12 million borrow with what is a smaller debt service for our organization, then every year we do that, not only are we catching up for asphalt maintenance and repair and improving the street condition, we're prolonging the life of existing pavement that's out there so that future councils won't be behind the 8 ball like this one was. And then when we're talking about debt rolling off in 27 from another borrow, they would have a reoccurring every year service that's built into that existing rate with no tax increase. And so I would just prioritize that as a good plan. We sat up here with a strategic plan and we said, what's your strategic plan? We got a great strategic plan when we asked for one. When we said, look, we want a strategic plan on streets. How are we going to catch up? And when we get there, how are we going to maintain it? Now we need to keep the implementation of that. Our role is to make sure we back it. And then we are selling it a little bit. We need to sell it to the future for future councils to see the benefit in keeping that plan. Now the main, additions to that, I don't know that we need to do it all at once. If you had to pick one or the other, just because volume matters. And I think when we do start looking at the costs, it might be interesting to hear staff like, well, you really need to go east before you go west or vice versa.
And I think once we bring back the debt schedule forecast, you can see what would these three look like rolled into that. Does it stay flat? Does a little bit increase? If it's a little bit increase, you can decide, let's knock off one of those streets. And so that we can look at that tomorrow for sure.
I don't want to leave that topic either without saying this. You talked about the plan when we originally started that. It was going to take us some time to get on track with the plan where we were moving through our processes better. We are now at the point where you're getting a project that is shovel ready That was not happening before. We were getting projects that, well, we think it's going to cost this much, and so we would add engineering, we'd add construction, and we'd come up with a number that was usually on the low side. Now we have a really good number in front of you of what we think those projects are going to cost, and CP&DE has really been stepping up in that. Alan Harder in Public Works as well, working together so that when we bring you something like this at budget time, you know that that's going to be. Here's the caveat to that, though. Anything you push off, you can probably count on the projects still need to be done, whether it's this year or next year, however you want to do that. But you're talking about that 6 or 7% increase you're going to see probably in the cost of construction for the same project that you would maybe push a year out to do. So you have to consider that as well.
Only other reference would just be in talking kind of overall monies and how CIPs worked. At one time, we had $38 million, 34 recognized with another 4 in interest. We've now allocated and moved and pushed. We've done repairs, plus you have Georgia. So if you could forecast through Georgia, are you hitting that budget? Are you bringing it in below budget? And if so, what would that look like? Because I think those amounts could be very valuable in us looking at, like, what all do we want to go get?
Are you talking about Georgia Street itself, whether we're coming in over, under?
Yes, sir.
I think we're right on track right now, but it's probably projecting that it may be a little bit over. And Jerry, correct me if I'm wrong, but we're projecting it could be a little bit over.
So I think that's good for us to know, just eyes wide open, you know, are we getting stuff done at that value? And then how much is the increased cost? So by the time we get to this next one, what's the percentage increase? And then what does this look like 5 years from now?
Yeah, and a lot of that, I want to clarify that it's not because we've done something that would cause the project to be over. It's just the length of time it takes to do that project and cost of goods as you're building that out too. So.
Okay, well, I hope you're hearing support and
Yes,
an
sir.
intention for us to move forward, but then a need to know how big are these bites that we got to take off.
Sure.
So one thing just refresh me when we talk about Coulter redo, or what part of Coulter is that?
Yeah, this is Coulter that's between Sundown and
The Loop.
Hollywood. Yeah.
Okay, and then Osage is from?
34th to 58th.
Okay, good. Well, when we come back to discuss this, tomorrow, what I'd like to see is we kind of discuss this. If we can get a refresher on what our debt schedule is for the next several years, not just next year, but, okay, how much debt are we having rolling off years after that? Because I would like to, again, as you're talking about, you know, keep in mind the taxpayer, and if we do, the good thing is we're fortunate that we do have some of it rolling off to be able to say, okay, how can we, you know, if we don't do it this year, when, you know, or it's too much this year, it's going to raise taxes, you know, what can we do the subsequent years based on the amount of debt rolling off?
Yeah, this schedule this schedule shows all existing debt in perpetuity until each one's completed, yes.
Yeah. Well, I guess just given that, and it's probably in those presentations somewhere, but maybe just saying over the next several years, how much debt do we have rolling off each of those
Yes.
years that we have capacity? Yeah. And then on the drainage part, the $9.5 million in debt, do we have capacity on that, or would that require another rate increase?
That would require a rate increase and potentially waiting for the rates to be established long enough to issue the debt.
Okay.
Yes.
But that's tied directly to the Coulter Osage.
Yes.
So
Yes.
we're going to
Yes.
have to have that.
Correct.
Okay.
All right. So as far as other year one in here, we've got Office of Emergency Management, 50,000 outdoor warning siren system improvements. That's the normal investments into our siren system. So that's pretty much a recurring request. And then we have a 70,000 special event equipment and planning software. We've had some recent special events that I know some of y'all are familiar with that maybe got caught up in our process. This would actually be to get a new software to help track that and do a better job on coordinating those larger special events that impact multiple departments. Animal management and welfare, we've got $480,000 for another phase of the kennels project, and then the E&I $250,000. We have been combining the two of those at times to bring projects forward. We actually are planning to bring a project here in the next month or so for a phase of the kennel projects that will eat into the E&I from this year's budget. So this will be a continuation for the full kennel renovation. We're looking at closer, I think, to 1.5 if we did the rest of it, or just this allocation. Okay, so this would help finish out the kennel renovation project. As far as planning and development services, continuation of $250,000 business improvement grant program. This is a matching, so we'll invest into a dilapidated property, facade improvements, those improvements, and it's a matching grant program. And then $500,000 proposed as grant matching funds for any city departments. Our planning department has the grant management staff, and it applies for grants. Typically, there's a match. If you don't have it budgeted somewhere, you can't apply for the grant. So that's a fairly new proposal. Moving on to facilities, we've got their typical E&I account, $720,000. There are building automation, multiple city buildings and police department, totals about $1.2 million. Elevator upgrade for Sims Building, $432,000. Fleet services, double knuckle bucket truck, $180,000. New forklift, $45,000. New scissor lift, $35,000. Security camera and server upgrades, $96,000. And then 3 half-ton 4x4 pickups for $120,000. So that's that 2.7 facilities request. We touched on streets, so moving to traffic, their overall is $1.4 million. That's made up of arterial street lights, $62,000. LED traffic signal display replacement, $130,000. New traffic signal construction, $600,000. Pavement marking, $65,000. And traffic signal E&I account is $600,000. As far as parks maintenance, large $22 million number. A good chunk of it is artificial turf for Southwest, Southeast, and Martin Road softball complex as a proposal. That would be one that you would likely have to consider debt for in the future if it were to move forward. There's also a placeholder for aquatic facility replacement, $2.5 million. And then there's various throughout there of improvements to playgrounds. We got pump stations and a central control system. That's all related to irrigation and parks, which has been a big discussion point. Removal of park restrooms, the older facilities, $250,000. Replacing park restroom facilities, $500,000. An update to the Parks and Rec master plan, $150,000. Their typical E&I account that is funded, $922,000, so that's already covered. And then 4 replacements of playgrounds, $200,000 apiece, and one is $500,000. Thompson Park irrigation, $200,000. Warford Pool replastering, $500,000, and another replacement of a playground, Memorial Park, $250,000. So that would be one. We would bring back recommendations with the $11.9 million and select options from those. Solid Waste and Improvement Fund, this is the one that's got their own dedicated funding, so they actually have the capacity to fund all their requests, which is citizen convenience centers. This is actually taking the roll-offs away from the libraries, developing a couple of convenience centers that are staffed certain hours so we don't have the mess and the illegal dumping that takes place around those roll-offs that have been successful, but we just need a little more control around it. Residential dumpster replacement program, this is the continuous funding to replace dumpsters, 1.5. Solid waste E&I, 800,000, and then landfill engineering services, 275,000. Water and sewer, we've touched on that one, the 60 million bond proceeds from the Water Development Board, and then the available cash, 13 million that we would bring sub-projects depending on what the latest priority is or if something is needing repaired. Drainage utility, touched on that as well, but they also have 800,000 for E&I for those projects that come up. Fleet services, 8.5 million, that's the debt funded by the O&M charges to departments. We will provide, I think, just an email list of those, just so y'all have them, of what is on the rolling cycle for replacement. Convention Center, they've got a little capacity to spend a little more than this 1.3, but currently they have asphalt replacement for the administration lot, chair replacement, 180,000, ice plant repairs, 42,000. That's another recurring line item. New Coliseum sound system, 300,000. Water main to provide a backup main. Currently, if one of our mains go out, we don't have water to the building, so this would provide another access point, 400,000. And then component upgrades to the sound for the Globe News Center auditorium at 160,000. Keep going. We got one more. Airport fund, currently at 3.9. We're still evaluating their list. We've got a new one that I'll email out to you. It's up to 5.2 million now. We've got multiple that are tied to grant with federal aid. The one I know y'all will be curious about is a Part 150 noise study. That's related to some of those projects going in around the airport and updating our contours. So that gets us going on the first phase of that. There's a fire station study, GIS implementation, civil construction for the ARF simulator for the fire department, and then various things, carpet replacement, mowing tractor with deck, preferred campies in the preferred lot for covered parking, and then various heavy equipment, forklift, cooling tower, and then there's the Albers $300,000 grant for electric improvements for their facility, and then $160,000 toward demolishing buildings. So lots of requests that we can bring back recommendations for council to consider tomorrow, but if there's something in particular that you're not seeing on this list that you want to make sure is included in that process, I know we do have an update, at least a high-level number on the Williams Group request that's been out there.
We do. Yeah, we received that number, I believe on Friday is when we received that. And this would be for the sewer main extension that they requested we participate in. That number came in at just shy of $3 million for that. But again, if you look at the entire list that utilities has, and $13 million to use for that, it's a pretty extensive list that we have. Close to, if you look out over the 5-year look of projects that have been identified, it's close to $500 million. And that's not including wastewater treatment plants.
Council, I'll ask, do any of you have any projects that you are aware of in the CIP or you've been working on or approached underneath that you need to bring forward? Anything you'd like to discuss? Okay, so I think the clarity needs to come back to differentiating of funds. And then we need to identify potentials. Some of these are borrowed. I think that's easy enough for us to understand the rate and the impact. But then the others are cash funded. And so if we are going to get some feedback from you guys on, we prioritize personnel, we're looking here, we've got these actuals with projections, here's what we can do. Here's the amount of money that we're recommending go towards these funds, general fund or whatever. Shorten this list to where it's more clear on what you guys are prioritizing.
Yes, sir. And a constraint list to those dollar amounts, like 11.9 million, will bring you just 11.9 million of requests for general fund, for example.
Okay. We would like to see department chief, people like that, recommendations, your recommendations. Then we would also like to see counsel from you guys, like, is there a goal to get more done and stretch the dollars and get a bunch of the smaller ones kind of wiped off, or do we pick one in the list of 20 because it's the most expensive and it gets one thing done? So just in how you're trying to move the city forward, parks is a good example. You can pick one park project and spend the same amount as if you probably did 10 of the other smaller projects. So there may be a need for council to help direct. If you guys have any direction on that, it'd be good for staff to hear that. Otherwise, I think we're really just relying on your director. So if Kashuba feels like the best thing for him is to get to 10 different areas of town for the same amount of money versus, well, let's get this one item out of the way, we'll listen to that. But then I would like to know if council wants to try to direct any of it.
I wouldn't mind doing something about these bathrooms if we're never going to reopen them again, just saying.
Make sure
Not a
that's
whole
on the
lot of
list,
money,
yeah.
but let's just, if we're the ones we need to do, let's do. If we've got the money to take care of those, not a whole lot, but let's just take something off the table.
Yeah. That has been a popular topic, so is irrigation in parks. So yeah, we'll keep those in mind.
Yeah, the reason the parks list is so extensive is because that was really requested from council. Let's see it all. Let's see what all you have in front of you and what all needs to be done. Well, that's the 22 million that needs to be done.
And we can basically, we'll do a cash constraint, and then you can still go through the list, and once we have the debt roll-off discussion, maybe there's capacity to do another project. We can have that discussion as well.
Am I correct in remembering with parks, we moved $2 million over there, and that was debt capacity?
They've been using some of their capacity for debt that comes from the O&M side, and then they have $922,000 left for one-time cash capital.
There you know.
So that $900,000 that's over there doesn't go towards debt?
No, it is in
E&I.
there, and that's the one where they bring sub-projects back depending on what the needs are.
So that amount of money that's been built in that was pushed forward for that debt service in order to get to a lot of parks projects, it's at capacity now?
Yes.
Okay.
Yes, sir.
Anything further on the high level?
Actually, David texted me from his route, I guess, instead of trying to get back on the speaker. But and his question was about, whether space at City Hall could be converted for a training room for fire. But also do we have any other plans in the future for civics, the space in this building? Or is that still, you can answer his great question first, but.
No, we actually have capacity to develop the space. It's actually, City Hall is built for that kind of an expansion. The challenge for training for fire department, we don't have the parking for fire trucks to be staged around here. That would be the challenge in that scenario.
And they do all their field exercises in the training tower, so it just works to put the facility out there.
Yeah.
Great question, David. There's your answer.
Now, as far as City Hall, I think right now the work we're doing right now is related to the second floor front space for internal audit.
That's correct. We're currently in the design on that. Should have that done here within the next month, and then construction on that starting shortly thereafter.
But no additional plans at this time to request funding to finish out another space.
Okay. Anything else? All right, so while we're here, we've got, still kind of the police and fire topic. We're listening to some of the requests. What we didn't give any time to is the take-home vehicles. Would like to hear more about that. What's the benefit? Where would we see the ROI there? And then I think over on the fire side, fleet gets confusing. There's been debt service that's been put in that's already budgeted in the future in the current rate. Then there's additional debt service that would be required on top of that.
This next year, I believe, is 4 more trucks, and then we will have a 2-year break of not issuing debt, and then we'll start back up again.
Yeah, and just to refresh on the fleet apparatus, that's a great thing to bring up is the way that we structured that was we basically take each year's loan and balloon it up front. And so you have a big payment, and then it goes to smaller payment in the next several years. So this year 2, big payment for the next loan, then small payments going forward. So we've already basically set our rate for apparatuses. Now, obviously, if costs go up, we'll have to maybe increment go up, but you're not having to step up new rates, because you built it all up front. So it was a very good way of doing this.
I agree. And so just in this, was it $7 million or $8 million that was requested? Is that built into the rate, or would that be an additional rate?
You'll have that. The fire debt schedule plan. Does anybody have? We may have to bring that back tomorrow.
Okay.
We'll have to pull it up.
Do we want to, let's shift into public safety here for a minute if we could, if we can, get our chief up here, start with police, maybe hear some of their priorities, some of the things that they need to keep it front and center.
Where would you like me to start?
Well, let's start with the expensive one. So
You're interested in the CIP discussion?
yeah, I would. I would like to go with that, and then I would like to transition from there to your other requests that, and then really if I can finish, depending on how this conversation navigates, I'd like to hear your overall budget discussion, comfort in knowing what you've got to spend over there versus what the reality looks like in running a crime-fighting organization.
So yeah, the take-home vehicles is a very, very large purchase. Historically, it's hard to start that because of such a big chunk of change up front. But every organization that I've seen do it, they don't go back. And the reason is because of cost savings they see longevity-wise, whether it's 5 or 10 years on top of that. There's a lot of different studies that are out there. The first one is out of Tacoma, Washington. That was back in 2012. And there's been some others since then. I spoke with our neighbors to the south in Lubbock, who I think it was about maybe 6 or 7 years ago, they went that direction as well. And the cost savings that they're seeing is on the maintenance side, the stretching out of the item itself. You're going from a patrol car that usually lasts maybe about 3 years, based upon how constantly we run those things, up to about 7, maybe even 8 years, kind of depending upon how often it's used. Same thing with the other vehicles. You might get some of our CID vehicles or some of our admin vehicles from a 4 or 5 year all the way up to about a 10-year. The other cost savings that's in there is the stuff that goes in those cars, right? Because the models change, because the things change, whether it's the cage that's inside the vehicle or the extra equipment that's in there, those are cost savings too that you're not repeating every year, every time you get a new vehicle, because we're constantly using those things. There's also an additional cost savings 2 different ways. One is, on average, some of the information that I was received was 13 days. So an officer gets ready for their shift. They go out to their car. They got to inspect it. They got to put their stuff in the car, and then they're ready to go. On average, what they're saying is each year an officer spends 13 of their days, their 10-hour shifts, so 130 hours of doing that each year. So there's some cost savings there by the effectiveness and the efficiency of just getting in their car, going to that call for service. The other one is the longevity part of it. When you look at diversifying a fleet like that, you're moving it from one central location and you're spreading it out. So when we have some of our natural disasters that happen here, whether it's fire or the other hail damages or tornadoes, you expand your fleet by putting in different locations. You're not all putting your eggs in one basket and hoping that one area doesn't get hit. So there's a potential of challenges when some of those natural disasters happen. And then really, this is more of the soft side of it. It's about a feeling, right? You're seeing more squad cars. You're seeing that fear of crime. When people see more cars out there, they don't, whether they're on duty or off duty, that's another opportunity for us to have a presence, have a visible presence that's just not naturally there when we're trading cars constantly. It's a big cost. But every one of the chiefs that I've talked to, whether it's Lubbock or our other neighbor in Round Rock, all those have gone to those. They haven't gone back in there because they're seeing the cost savings.
Couple questions on that. Do you see that smaller departments are really the ones that are able to implement this?
Yeah.
The big hurdle is we're such a large department that if you hadn't built it up from kind of times past, it's really hard to buy the farm. Does this number represent the majority of like what we would have, or is this a small amount of what we would be getting into? So there's really $29 million, or I'm sorry, 27. 24 of it would be doing how much of it?
The purchase option here shows 24.1. I think that was everything, but we do have it broken down where it could be phased. It's just figuring out how we fund the O&M side if we were to do a debt issuance.
And that's everything that's in the car as well.
Do we have any capacity in our structure for our fleet purchases where we were buying police vehicles? We don't. So that's taking care of other vehicles, other fleet.
Yes.
So right now, would we still be cash funding police vehicles moving forward?
Yeah, and the last cycle we did were lease payment with O&M side to pay for it, and we built into the lease the maintenance and fuel piece of it. So there would be a shift too of how many we go with, because we've got new vehicles that we need to phase out, so you really don't need to replace them all at the same time moving forward, because you do have existing fleet currently that you need to cycle through.
So right now, there's no identified payment right? There's no funding available.
No, sir. No, this one, if you're doing the purchase, it'd be like the fire trucks, a PPFCO type debt issuance. And then finding out. The fuel, we need to still run some numbers. Right now, the vehicles are still using the same amount of fuel driving around town. The only additional would be driving it home and wherever they drive it when they're off duty. But it's figuring out the maintenance, which, like you said, should be lower, but you still need to budget a level of maintenance for 150 new cars. Just the routine maintenance, tires, oil changes, those sorts of things.
So the 24 million reflects 150 new vehicles?
I'm not sure what the actual total
175.
was. 175.
175.
Yeah.
And that would be in addition to the current fleet?
Yes, sir.
In order to give everybody like what they would take home?
It's not just the fleet, but you also have some specialty vehicles, whether it's undercover vehicles or armor, motorcycles, and some other ones.
So my last question on this would be, is there any small area where you could implement this, where it's kind of isolated and it would be affordable? We could look for funding for that, and you could grow it from there? Or is it an all or none?
No, I think you can absolutely do it over the course of time. If you wanted to do something like that, we can start small and work with different groups to get that started. The patrol is the largest bulk of what it is, but patrol would also be the largest cost savings as well.
So I'm looking at fire apparatus, let's say, as we have those ones that are coming on. We already factor in some additional cost increases, and so a lot of what your debt ratio is per your debt service amount, it's pretty small when you're looking at like, well, if we borrowed 7 million versus 8 million, that amount of impact in the debt service for this. So would there be a way to do a public safety issuance and start kind of, bite-sizing that piece into what we would be doing on that other?
I think that's a good idea.
CO.
I think we could work with our financial advisors to see, I think police vehicles are allowed in that PPFCO.
Yes, I believe so.
So yeah, we could, if we're going to be issuing debt every year anyways for fire, we could add a number of police cars to that, and then as we're replacing apparatuses, we're also replacing police cars, get into a rotation program. Now we have to figure out the rotation because police cars don't last as long as fire apparatuses. So we have to kind of figure that piece out with financial advisors because, again, it goes back to what we've said before. You don't want your debt, you're only paying debt on a car you got rid of 2 years ago. So we got to make sure we get that revolving schedule figured out, but that could be a possibility.
So council, we can shut it down and we can say, let's just not look at it. Let's just continue forward with the way we've been going. But what I would entertain is if you're looking at one penny that's going to equate to 1.6 million, that 1.6 million would be a debt service piece. And that would buy, I don't know, maybe that in this scenario, it'd be $10, $12 million worth of buying power. So if you were going to have to increase, say, 9/10 of a penny to afford everything on say what you needed for the fire apparatus, and you would go ahead and push that from 9/10 up to the full penny, and you'd be able to start walking your way into this. Is that money well spent? It could be in some cost savings in the future.
And the nice thing, if we go that route, you don't have to decide that in this right today because we're going to bring that back to you in like a February bond issuance for the next fiscal year. And so,
well, and that's also how you can grow into your O&M because we wouldn't get these vehicles right away. So it could be next year's budget where you build in the O&M side.
We had hoped that what we would see is we would take a penny from and add to the INS side. That would equate to $1.5 million, right, worth of paying power. So we could have debt service of $1.5 million. We were hoping we would see a savings out of capital outlay for those departments of the same $1.5 million, where it's like, oh, well, I don't have to go buy all those now. And so we didn't really see that. If we can get closer to that, I think it allows council to stretch a little bit further with this plan. Questions?
So just going back to the plan itself. So what you're doing is you're allowing a single officer to have their own car, and other people, I guess, within the organization. And so instead of a car running 2 or 3 shifts a day,
24 hours, yeah.
They're running one shift. And does that allow a car to operate more shifts longer than, so there should be a savings on that part of it and being able to last longer. So, and I see the other benefits of having the visibility and I guess officer also would take pride in it because it's his car or her car to be able to use it. And where are we currently, so now the cars that we usually purchase, how are we, or lease, where's that being paid out of?
Yeah, it would come from the fleet, transfer from general fund to the fleet. Some of it was a lease payment model that we shifted to. The rest was cash outright purchase.
So that's coming out of?
All out of general fund.
All out, but if we switch it to purchasing the cars on the debt part of it, INS.
It frees up that piece.
Okay.
Yes.
But it's kind of but it frees up that piece, but then we find more to spend on it. And
then we still have to maintain it, and we'll have more cars to maintain, but hopefully they're taken better care of, so they don't need as much maintenance.
So theoretically, it doesn't save us money. It just gives us that money to spend somewhere else.
Yes.
Yeah, you can now get more stuff done. So.
Yeah. Okay. Yeah, it was kind of like we got the electronic water meters, and then but we didn't wind up really saving anything there. I guess we just transferred.
We reassigned the people resources. Yes.
Yeah.
Okay, any other questions on the patrol vehicles? So your request list outside of your general budget, you want to pick a few, tell us kind of what your big needs are, where you really need us to focus and look for some monies.
Yeah, I'll hit the two that are already on the, because I kind of have a little bit of overlap that are on the CIP, but they go also on my supplemental. The first one is radio encryption. It's an officer safety deal. In 2025, you had 90 officers that were ambushed. In 2024, it was 67. Those numbers are continuing to increase. And why is radio encryption important? It's just for that. Not only is that information getting broadcast of their officers' locations, but those conversations are happening. I watched recently a body-worn camera just on a normal review that we have to do, and one of the comments that was made by a citizen concerned about some vehicles that were doing bad behavior, doing spin out or doing burnouts in a certain spot, as well as shooting guns in the air. They said they know when you're coming. They're listening to the radio. In fact, I can even hear them having that radio play and knowing exactly when they leave, when we get dispatched to those calls. Now that's just a good getaway, right? But it can obviously be used for very negative actions against the officers on when they make their approach to things and when they're not prepared. And so it's a huge challenge for me to have those radio channels that are wide open. The other one is just the misinformation. When the information is being broadcast by AI, right? You have your community members that have AI attached to those radio channels, and they're pushing that information out. Whether it's the text that's not always correct when their AI captures that information, or just the voice itself. Things change during a call for service. The suspect vehicle changes. The suspect vehicle identification changes based upon the original radio broadcast or from the actual witness. And so those cause a lot of concern for citizens when we're not chasing the right car, or they're chasing a car that's involved just because they hear it and it has nothing to do with it. Those are some of the challenges that we're faced with the radio encryption. Moving a little bit further, talking about what the future of the organization looks like, and I'm referring to the infrastructure. There's some challenges. Over about a month ago, I guess, is when we had our power go out, and then the big generator kicked in that failed very quickly because it overheated. That generator is extremely old. But the other challenge is that generator isn't set up to run that building in a necessary way for us to function if we lost power. It's not wired correctly. There's some other areas that are not covered by that generator when it kicks off. And we're concerned also about losing the space that we have for our driving pad. Right, we share that with the airport, and of course we want them to build out and get a good tenant in there that's making money, but that affects our training location. So there's some things like that I really need to start focusing on overall as the infrastructure. And the other one is the firing range or shooting range that has a lot of updates that it needs to have. That's why I think the master plan for making sure we understand what it looks like for the next 5 years, maybe even longer. Our building itself is aging. There are some challenges that are associated with it, and we haven't quite finished all of the updates that need to happen. So that's another big ask, because I just don't know how challenging that building is to maintain, and what does that look like for the future. Going into some of the other ones, wellness, myself as well as Fire Chief Mays have some combined efforts as far as our public safety wellness. I have the opportunity next week to apply for a grant for 2 clinicians for public safety. Those clinicians will cover everyone who wears a badge, as well as communications. The purpose behind that is to give back to our employees and keep our employees operating at that optimal level. And in doing so, one of the other things you'll see on there is a car, basically 2 cars for those if we were able to get those employees so they can move in and around the public safety and provide those things. It's a 2-year pilot program is what I've applied for. The first year is really about logistics, about getting set up. It's the second year is where they can start to help the men and women who wear the badge and have to deal with the stress on a regular basis. But part of that also is a shared vision, myself and Chief Mays, with the protein tactical. I put $75,000 on my budget, as well as Chief Mays. Basically, that's what it's a physical therapist. I think it's going to have a ripple effect on cost savings for workers' comp claims. If we move all of our officers and our firefighters over to this location, 1, it happens fast. They don't have to sit there and wait for an appointment. 2, they build those relationships with the doctors. So we hope to improve the speed at which our people are down or injured, that they can get back to work faster. So while it's only $150,000, I expect that to be cost savings on the workers' comp side, as well as some other employee injuries, as well as overtime, having to pay for the other off-duty that the other overtime to cover those shifts when those folks get injured. Those have been my main priorities. I could continue to talk about. What you saw on there was a list of about 30 different options, or 30 different things. My goal when I first got here is looking at what I refer to as PETS. It's people or personnel, equipment, T is training, and then the S is software. Looking at what our capabilities are in every one of those areas, and that's why I wanted to stress just the equipment side of it. What am I looking at? That's armor. The 2 different armored cars. We got one that's aging very, very well. It's well past its prime. And then you look at some other challenges, such as the Rook. We have challenges here in Amarillo because we got a bunch of stuff in the way when we have to serve these warrants, these high-risk warrants. And a Rook is basically just an armored tractor, if you will, to move things out of the way so we can properly assess the situation and get our personnel there to the location they need a little bit faster and a little bit safer. But yeah, you'll see the laundry list of stuff on there. I don't expect all of that, obviously. It's just there to show you over time we're going to start having to address some of those things. But the priorities, what I've seen, are those ones that I just mentioned, those top 5 things.
Questions, council?
The grant program that you talked about for the 2 person, is that for mental health?
Yes, sir.
Yes, okay, good, thank you.
The radio encryption would be your number 1 priority, right?
It is.
Okay.
Besides cars. Cars is a challenge, too.
Well,
we're having
it's
to
a
double up in
challenge,
cars
but
and-
I think the departments across the country that have gone there have shown the cost savings. It doesn't take a couple of years till you start seeing the savings. So.
And I think we just lost David, Councilor Prescott, so.
Can if we're ready to go to one other topic, I just wanted to ask you about, because we talked about it, which is the overtime.
Yes, sir.
Can you kind of walk through kind of where you are, what we're trying to do to kind of manage that?
Yeah, so I've dived pretty deep into that, right, because it has been one of the biggest challenges when I walked in the door as far as that money is concerned. And that's one inclination of being understaffed in a spot. The other one is looking at how often our officers are responding to calls for service, and what does their day-to-day activity mean? How much of their time is occupied? And so when I looked at the overtime, I looked at it hours. Hours is easier to translate than it is on money, because I don't know what hourly rate each one's making. So it's a little bit easier just to talk about the hours itself, and we'll get down to the bottom level as far as the pay is concerned. But I looked at the time between October 1 and the end of April of this year, and it was about 29,000 hours, which equates to about 14.5 officers. The opportunity, that's an indication to me, that's just on staffing, minimum staffing requirements. So that's 50% of our overall overtime is used just to get up to the minimum level of staffing to cover our beats and to cover our normal patrol activities. That's not extra, that's just to get them to the baseline. And of that, if you did some simple math, which is just talking about hours, it's a little bit different because some shifts are busier than others, but if you just use the bottom line of that 29,000 hours, it's 14 officers. So keeping that in mind, that was one part of why I needed to do a staffing analysis as well of what patrol looks like. The other part about that is what you want to look at is overall, like I said, the time usage. How often are they busy during their shift? Best practices suggest that officers are only busy 50% of their day. When I looked at ours, we're close to 75% of our day is occupied. That means less than 25% of their day they can use for proactivity, making traffic stops, visiting with our community, some other type of engagement. That's challenging because that means, one, I got two problems. The first one is my officers are running call to call to call to call. And the second part is they're burning at both ends because they're at minimums every single day and having additional people to try to come in and fill in for those things. So you got a morale challenge that's associated with it. They don't want to go do anything extra because they're just hanging on just to get through the day because every minute, a large portion of their day is occupied doing something work-related without a whole lot of downtime to catch their breath. Okay, now let's go look for that car that I was looking for, or let's go address that challenging intersection that we've had where we've got a bunch of accidents happen. It's just not happening because I just don't have the staffing to do it. So those two kind of equate to each other. The only way that I know how to do it is obviously adding staffing, and I've started to do that the first time in May when I did the reorganization. I was able to put, we went from 19 sergeants up to 24 sergeants. I added another lieutenant because there's some challenges as far as not having enough supervision on patrol. And then I added, I believe it was 9 more additional officers to the overall staffing levels to patrol. My hope is to add another 8 that are currently in field training to bring us up to about 144. Doing the staffing study using an outside resource just for patrol alone suggested that we had about 150 today and recommended that we move that number over the next 5 years based upon growth of the organization and growth of the city up to about 174. That's where that 42 officers that you saw. Some of the challenges to do that are Amarillo ISD. As they continue to grow their organization, we were able to recruit some of those officers. So with our current number of staffing, I can get close to that 150 as far as pushing those officers back in patrol over the next probably 18 months to 2 years. The challenge is going to be where do we go from there? And do we add an additional 22 bodies to make that up to that 172, 174? It's a long way to answer that question.
No, I appreciate that. I knew about the reorganization. How are we making advances on getting closer to the type of staff that you need?
Yeah, so as I mentioned, I added about 25 officers already back to that patrol. Some of those are supervisors. My last group that I would like to add outside of this 8 that will get finished here probably January, there's one more group that I have scheduled to add another 6 supervisors as well as another, I think it's 9 officers to bring me up to about 150, maybe 148.
But you may be referencing actually being fully staffed of our sworn officers that are in the budget. We're very close to hitting that. Maybe the next academy or 2, depending on attrition, we're close.
I got 13 openings right now.
Yeah, 13 openings.
And I think in the not recent past, we were like triple that.
30 to 40.
Yeah.
In the last few years.
Good. Thank you.
So overall, like really good progress in turning the corner there. If you're down to 13 openings, fully staffed, right? Is that what that?
Well, once we fill those 13, yeah, that's our only.
What do we consider fully staffed?
Every sworn that's approved in the budget.
All right.
So right now, fire, for example, they're over hiring in their academies. Mm-hmm. We're trying to get to that point.
So talk to us a little bit about your budget. So you came in and it was already kind of done, and you're having to eval. You're finding some efficiencies. I know your leadership over the organization in, I think, proactivity towards the community, and then some of the deployments, the tactical approach is great, right? You know, our role, try to equip you with the budget that you need to keep going in those directions. So if you spend 65 or 66 million to run that organization, I think that was pretty much in line with kind of what we were thinking. If you spend 72 to get all that done, and so like in the way in which that budget moved left to right, and we got lost a little bit, what we would need to hear is, are you comfortable with the proposed budget that you have in this budget book? Are those your numbers? Are they reflective of what your actual costs are going to be? We understand the overtime issue, and we understand that police work is not forecasted easily in a lot of ways, but give us your comfort level on where you're at.
There's 4 areas of my concern, and it goes back into, as you grow organization, especially as you move them back into those uniform sections, clothing is going to be a challenge because we're increasing the number. And because of the influx, right, we're having folks get fired or retire, and then others are the one that we're bringing on. And that changes that clothing allowance pretty drastically. That's one of my challenges, to continue to make sure they have the uniforms, but like I can't reissue the same old uniforms as the guys that are turning them in. And those things, they only last about 3 to 5 years. 5 is a stretch. The vast majority of these things are only really lasting anywhere between 2 to 4 years, just because of the sun, the weather conditions, and how they just don't have very many of them, so they're wearing them out faster. The other one is the communication side. With the adding of the cell phones, there's some costs associated with that. Every one of our cars have a cell signal, more than one at times, because there's the MDT as well as the other things that are in the vehicle. Those costs have continued to rise just because of how the market looks at it. And then software, as mentioned before, software is a challenge. I do believe there's some opportunity for me to reduce what I have right now. But we've also added to it with the new RMS system with Axon. When that bill comes due, which is not too long away, as after we finalize of checking off, which has been a whole nother challenge to begin with. But once we move past that and we actually check off on that, that's going to be an addition. It's already built into the budget, but it's going to raise it a little bit. We do have some overlap on some software that I'm hopeful to get rid of, just because we tested it out as opposed to maybe doing a 30-day review of it. We signed a contract, and it's been a multi-year thing. So there's some opportunity for me to lose a little bit of money, maybe $30,000 to $40,000. There's some other great opportunities to find and look at some different type of technology that is a little bit cheaper. But the moment that we find that cheaper one is the moment they get more popular, and then we're right back to where we are. So there are some challenges built in with those 4 main topic areas, and training is another one. Training is always a challenge, right? We have some of these state-mandated, unfunded state-mandated things that we have to do on a regular basis. And, well, Amarillo, we're a little bit isolated, so that requires more of that travel to get to those locations, and obviously those costs are associated with that are going up. There's been ideas of trying to bring in some of those instructors to be here, but it's not nearly as effective as I was hoping it for. I've been trying to do that, but it almost comes really close to breaking even. I could get probably 10 people in there at the same cost of bringing an instructor in, but I need more than 10 people to go. So yeah, there are some funds, some line items I'm a little concerned with. You mentioned overtime, but my goals, hopefully we'll see some of those start to fall off, at least lower by the end of next year. I just can't guarantee it right now, just because we're not going to be able to see those cost savings it's just going to take a while to get that overtime down.
Okay. Any questions for the chief, counsel? Okay. Well, we'll be diligent on our side, looking for some of those special requests or supplemental requests. We're hearing what you're saying with the radio encryption for sure, and a few of those other items. I don't know that council would try to take over that new direction on the patrol vehicle and personalizing those. I think we need quite a bit more time with that one. So right now, I think if we prioritize that down lower, we look for other ways that we can improve the department over there, it'd be better spent. But not that we're opposed to it, I just think it's a really large.
Yeah, in their supplemental list, it's in kind of the recurring bucket. A lot of theirs is one-time equipment purchases. We can use that 12 million toward. So that's helpful from a one-time funding perspective.
Okay. Chief, thank you. You got anything else to add or good? Okay. Appreciate that. You want to get our other chief up here and jump right into fire?
Yes, sir.
Afternoon, sir. Can we kind of go in the same order? Just, let's talk about equipment and maybe what your CIP request looks like. And then if we can go through if you have your supplementals, you kind of want to hit the highlights on those.
There we go. My approach, really when I'm looking at this, obviously it's very short-sighted, knowing that we're one of 30-something departments. So, anytime we put ours up there, I feel like our yes is somebody else's no. But just looking at this purely from a fire protection standpoint, pretty much I keep it simple, and I try to run the department with my team back there. From a standpoint of our 4 continual goals on page 128, we're just trying to maintain a standard and a culture of excellence. We're trying to, goal 2 is increase ALS capabilities in our community. We do that primarily through paramedic training. 3 is engage our community and let them into our world, understand that everything we do costs so much money. I want to understand how they can trace that dollar and understand what we do besides putting out fires, and even if they're aware that we respond to medical calls. 4 is more of a vision statement than it is a reality, but it is trying to keep pace with a growing city, keeping our department on pace. So I have some, so through those, I've got overtime, I can get into some of our supplemental requests, which a lot of that really dictates. Our request, mainly from our approach, was trying to true up certain areas that I felt like we were able to dial in what we anticipate spending based on prior years. And so, you have any specific questions on that, or do you want to run through?
No. Yeah, go ahead and hit the ones that you're seeing.
Like for us, from our supplemental, let me see. Okay, I've got them broken down. Prioritizes one or individually. As Chief Hover mentioned, our top request was that Pro Team Tactical, and it was just like he said, he did a really good job articulating the significance of the mental. And that's the thing, if it helps get you back physically and you're back rejoining your crew or your second family, the good thing about that's all I'm going to add to this point is the mental health. That is some of that strain while you're separated. And the thing that gives you a lot of purpose in life is that job, and when you're not waiting, doing therapy. So I do want to add that I really think that I'm really proud of our partnership in that. Whether that's granted or not, I think we're on the right team, even sharing how we do critical incident stress management with them. I just see nothing but a bright future, us partnering together as public safety, true public safety in that regard. So, it's back to the concept of trying to true up our budget from where we're at and what we anticipate. Everything with software, the cost is going up it just seems like there's some software programs as they dial in and get more efficient on what they can accomplish, then we find an area where that will plug into fire safety, and that will help us in what we're trying to do. So, and that might be how we manage our fleet. We did have a fleet. We were partnered with the city on that. There were some changes made, and so part of our request is to come up with $15,000 to have our fleet software for that. We've got a pre-planned software that basically lets that incident commander know of everything he's going to need. If they go to apartment building, lets them know where the utilities, the layout of the apartment complex, as well as we're looking at doing some incident command software changes, and so that's a pretty good ticket there at $79,000 for that. We did add in here to true up our budget another $1.3 million to what we anticipate in overtime, and I'll break into that a little bit more in a little bit. $56,000 for 2 line items, one for auto parts and for tires. We know that help is on the way once those fire trucks do arrive, the 6 engines that were the first year of that plan, the 2 ladders, the ladder 14 that was already en route, the 3 engines that we've ordered that y'all approved this last go-around. This upcoming year, another 4 engines we'll need there. But in the meantime, we're seeing a pretty good jump, I guess, comparatively in our tires and things like that. So we did put that in our supplemental. Travel and tuition, those are some more areas where we're truing up. Our clothing, one thing that we're looking at internally there to try to find some cost savings is as providers and vendors change, we were able to move to different fibers for our clothing, makes it a little more, just fit a little bit better, and it's tremendously cheaper than some of the things that we're looking to switch to in terms of compliance. So we're trying to do what we can to make sure that it's not always an ask. We try to reallocate what we can do and try to be more efficient. So that's it mainly on our biggest ticket it's that unscheduled overtime, $1.3 million for ops. The fire marshal's office had about $30,000 that we wanted to, again, I know it's a small ticket in terms of everything, but it was to true up that budget. Let's see. And as far as in our CIP, as Mr. Freeman mentioned, that training facility is a huge ask, 2.5. I'd really like to dial in more on that number if we could cut a little bit aside to get some plans drawn up to see if there's some areas where if it's value engineering or whatever. I'm not asking for a Taj Mahal, and I know it's a high price for a training facility, but we've gotten the best that we can out of the single wide trailers that we've had there. But that's probably from a fire standpoint. If we were ever to build stations, if I ever wanted to really keep pace comfortably by adding crews, my choke point right now is that single wide training, the classroom right now where if we hire small enough guys, I can fit 26 students in there. And on that note, and I think this will get us into 40% of our cost, or 38 to be more accurate on our overtime, it's minimal staffing. And one thing, while on paper we've been overhired for several years, but we don't really acknowledge that benefit of being overhired until they hit the street. So 6-month process from hiring. We're going to have varying attrition rates. We have retirements and things like that. So by the time they go to the truck, we might have lost. We went overhired on paper by maybe 10, and we're maybe 8 under by the time that July or the summer rolls around when they go to the truck. One thing that we're trying to do on this hiring list for the test last entrance exam last month is we had it's a promising group of certified, so we try to go through that list and hire all of the certified. And me discussing with Mr. Path yesterday that the authorization for an overhire of 10 personnel, that would bring us to 322 temporarily. That'd be a hire of 18, but instead of it being 6 months to certify somebody off the street, that would allow us just a 6-week orientation and get them to fire trucks. So that would be a benefit, and we're 8 down currently as we sit. And that would also allow us then to go back January 1st of next year, thereabouts, and then hire all the uncertified, or what we will need to fill and make for, that'll be a Fire Academy number 6. So that, with there being about 1.35 million, and that's a big chunk of our overtime is just for that minimal staffing. Some of our bigger ticket, and we went from when I was selected as chief 6 years ago, we had about 8 to 10 leave codes to help us track wherever dollar is spent on our overtime, and we've expanded that to 41 leave codes. So if we ever need to dig down and determine where is this money going, do we need to make cuts, and if so, where, we're able to give you 41 data points on where we're spending our overtime funds. One of the biggest, if you just look at the line, it's for state assignments and the backfilling of those state assignments. That's to a tune of about 1.1 million, but all of that is reimbursed by the state of Texas. So if you take that off of there, then the number's not quite so ugly, but it is. We're still spending unscheduled overtime, at least from last fiscal year to today. That would still put us at 2.5 million. So again, those are reimbursed by the state. Our biggest chunk of overtime in terms of training is to meet my goal number 2 of advancing our ALS capabilities. We spend $320,000 every year in paramedic training, and it's a lot of hours to get certified to do what they do. And it's a little bit more on that as we cost share some with Amarillo College to provide instructors to help teach that academy. And so that's anywhere from $320,000 to $400,000 every year. When we dig down into the numbers and we look at some of the wildfire, when we look at some of the incidents that we've had to call personnel in, combining just our callback for incidents and our callback for red flag, that at least fiscal year to date is only $260,000 comparatively, of that large chunk. But of those entry codes, we're $3 million of our 3.6 of this year current day is from those 10 leave codes. So just to shed a little light onto that. Some of the ways that we can really dig into that is we could cut some of the training. I don't know that anyone's necessarily asking us to do that or whatever, but ALS is such a huge deal. It's not the riskiest thing that we do, but we do provide that team along with AMR in our community, as you know, and as y'all have well supported over the years, from being able to put life packs on every truck and that training that we're able to provide to. Again, our goal eventually is to have every one of our engines as a paramedic engine, and I really think our public, with that being anywhere from 60 to 80% of our calls, really reaps the benefit of our professionalism in that area. Any questions so far, sir? Okay.
Yeah, so Chief, a couple things.
Yes, sir.
And I'm just trying to think through where we were. You rolling the trucks on what we would say are minor emergency calls. They implemented a nurse navigation program, right? And so we were supposed to be offloading some of those calls to a more appropriate entity. Is that helping you guys at all, or are you still responding to that same individual that wanted Tylenol?
I can prepare you a report. I'll dig into that, and we'll get you a report. And we've been running it long enough now where we should be able to have some data that would help us paint a better picture today.
I think it'd be good to know if that's helping at all, or if we're still, spending some of your budget in running some of those routine calls that I think you guys were not necessarily warranted to.
Yes, sir.
So just inefficiencies, when we start looking at could we cut training, well, before we cut training, are we seeing that we're responding to things that we shouldn't be, right?
Yes, sir.
Wildland mitigation.
Yes,
so
sir.
in looking for grant funding and different things like that. So what would it look like now if we started now? And maybe it's 5 years from now before you really see that, coming through, if you had to build out a program. My understanding is that you guys are already doing some wildland mitigation, and
Yes,
you're
sir.
running it out of your current budget.
Yes, sir. Well, within a lot of it, majority of the projects, we can take one of the trucks in that program at Station 7 on the Boulevard and Grand in that area there. That's our wildland program. There's 2 stations, or 2 crews that run out of there. Typically, we've got 1 truck in service while we're doing mitigation projects, and we'll take one of those vehicles to wherever it is on location to conduct that mitigation project. Yeah, our wildland team, I don't know why the hotter and the more dirtier and miserable it is, the happier they are. And really, with mitigation, I mean, right now we're running that solely, or the majority of that, off of overtime. And there's some things ways down the road, like to do what Border does, where they do have a day's crew that goes and does nothing but mitigation. That's way down the road, but I think long-term that would be helpful. But years ago, as we required the fire marshal's office under that, and we added that division to support operations and then community risk reduction, anything that we can do for mitigation, it really does put more functionality into the risk reduction of our community. And our guys, we try to make sure that stuff is shared with you, and Mr. Path gets those stories to you as we conduct another phase. Right now, we've got some mitigation project going over at the 58th. Y'all might see that Friday. And there's some pictures before and after, and you know, it's hard to quantify what you don't burn down or what business isn't damaged if, you know, if we
Yeah.
were granted the 2 inspectors to be in more occupancies and implement software. And it truly is, it's adding functionality to removing that risk. You know, I know that's one of y'all's pillars is to be
Sure.
business friendly.
Well, for those that may be listening and for council that, you know, we're not always familiar with like wildland mitigation. What is that? So you're removing fuel
Yes, sir.
from open areas that are going to make it safer for the structures so that, as a good example, you guys put out a fire quickly over here off the Amarillo Boulevard with high winds, you know, several months ago. And so like there was a lot of fuel out there that you guys combated. So like if we were to ask you to try to prioritize and ask for building out that program over the next year or so, are we missing out on grant funding somewhere? Like, do we have that program set up in a way where we can go and start seeing some of that come back to us?
We're actually, with the TIFMAS, basically it's the Texas Fire Mutual Aid System, when they are going on the assignments, not only are they developing by just being thrown in the middle with all these other agencies, unknown people, they're getting that development, they're getting credentials, actually task books that are signed off, and they come back. All of that's state reimbursed. So really, that's one program that is pretty much funded fully by state reimbursements.
Okay.
What we're getting.
So if it's already being reimbursed by the state and you guys have the manpower for it, then I think we see the benefit, you know, here recently with dry conditions, high winds, and protecting structure for sure and life, but really those structures by mitigating. So I think if you can continue on that, I was just looking for efficiencies in also being able to qualify for the grants. But in the remodel of Station 6,
yes, sir.
if you had to pick between you know, updating an existing station or putting in a training facility out there next to the airport, right, or where you're at.
Yes, sir.
So what would that look like? And then could we look for just the design piece of that, where maybe it's a small amount of money, go ahead and get some plans drawn so that 2 years from now you guys have something that you could swing at? Right now, when you bring that to us, I think it's too conceptual. Yes,
And
sir.
that one's a rebuild, so we would need to purchase land and design it.
Oh, it's not a remodel.
No,
I
this one was.
apologize. I thought it was rebuilding
I think it's
Station 6.
that's one of those old houses, right? That we
Yes.
are looking to yeah.
So Station 6 is a tear down.
tear down,
Yeah.
find a new location because it's not an appropriate location for it. Yeah.
This would be a new station.
Yeah, so we could allocate money for design and land, perhaps, to get the project at least rolling forward.
I would like to see if you guys could prioritize in the budget. I think that's money well spent if you were to get some designs going on Station 6 rebuild, potential relocation, but at the same time do the training station and see what that looks like out there so that they could at least see. I don't know that it's a $2.5 million build. I mean, it may be $1.5 million, $2 million. I don't know. And then as we work through these CIPs and they continue to come off, if you've got something planned ready, it makes it easier for council to look at, like, where's that money need to go next?
Yes, sir. And I would love to sit with whoever wins the services of that and just start. But I know I want 3 truck bays for any station we put on the ground, but really, is there some way to really shrink that footprint a little bit more? I know the crews like that, homelier type, you know, it feels more like home instead of a commercial building. And I know we've worked with some people that have been very responsive. I just think there's more work that we can trim down.
If we can get some appropriations in there to get some designs built in, I'm sure Danforth could keep you at the table with whoever that is that's going to conceptualize that. So I know those were the ones I was trying to hit, and just not trying to figure out what needs to happen over the next 6 months with you guys, but looking down the road 2 to 5 years. Those are the things that 4 years ago I was still being asked.
Yes, sir.
So I think it was 4 years ago I looked at your training facility out there and sat in the double wide. And so we're never moving that ball forward if we don't get some plans drawn and we don't actually have something sitting there. Right now, it's too conceptual. It's just sitting on a sheet somewhere that when everybody takes off running, we forget what it is.
Yes,
so if I could get those moving, that'd be beneficial.
Sir.
Okay. Yes, sir.
Mayor, I think obviously we've lost 2 of our council members for the day, and we're taking breaks, we may struggle with quorum issues here, so I might recommend we might find a stopping point.
Who took a break? Was there?
I'm not naming names, and so we might find a stopping point pretty soon, and then that'll give us at some time as staff to work some stuff up from the day, come back fresh tomorrow morning, and with some stuff for y'all.
If we are moving away from like what we're normally considering public safety, right? Do we have a good understanding of OEM and what's going on over there? Do we have a good understanding of AECC and how that's going? If we need to address any of that here, let's push 15 more minutes and get through that and then get out of here. But if we're at a stopping point, then we're at a stopping point. We can take it up tomorrow. I know we thought, maybe be out of here by 4. So, it's 2:30. I'm doing fine, but then want to be conscientious of everybody's schedule and these two.
No, I think we're clear on it. Now we just need the time to bring back some recommendations for y'all. Yeah, so we'll spend the rest of this afternoon pulling all that together for tomorrow morning.
Yeah,
Okay.
I just feel real comfortable with having as many as the council as I can. So, in talking both Prescott and Tips, it sounds like they're both going to be here tomorrow. So, Lord willing, Tips can. So,
What's your plan tomorrow, and what do you still have left to cover for you to feel like we've got enough direction?
I think it's just going to be continuing this conversation. We'll bring back the debt scenarios so you have a better feel on that. We'll bring back the supplemental recurring $2 million plus ideas for the cost of living raise, merit, compensation study, and then we'll go ahead and start recommending these CIPs based on some of the feedback we've gotten and just the funding that we have available. So I think we'll have a more constrained list for y'all to discuss.
Okay. I know Councilman Simpson and I were talking earlier. He's got a few things that he'd like to make sure we hit tomorrow. I've got a few other things I want to make sure we can visit on. So before I hit him up, start thinking, Tim, about what you may have, and then we'll obviously still include the other two. But on my end, with the level of importance of emergency management that we've seen, like I want to go through, I'd like to see if we can bring back Max, let him speak to it tomorrow. I know he's been here today, but still time well spent for building out any of those other programs. It's too easy. When I first got elected, they were in the basement, and man, I'm in year 6 here, and I feel like they're still in the basement, right? And so when you look at everything that department does, 26 county wide, and everybody that relies on them, it's too important for us to be missing, even if it's $1 million. Like, we got to figure it out, So OEM, AECC, I think is doing better, right? Do we have what we need over there?
Yes, they're still, of course, they could use additional dispatchers, but we are still getting to the full staffing level. That's one we've had discussions on, whether they're at a point of overhiring and continue to work down their overtime as well. But he's over AECC, so he could touch on both tomorrow from a high-level perspective.
The wildland program, I know I got to address that. I think that's a good look. The CHAMP plan that we had talked about, I want to visit with that tomorrow and see, is there a realized savings that gets passed through to our employees? Is this truly a bolt-on program that won't cause us any issues in contracts and negotiations? So I don't want to spend a lot of time on it. I just need to hear in 5 minutes either, Mayor, here's why you can't do it. It's going to cause all these issues. Or, yeah, you can do it. We just haven't traditionally done it. Okay. That, and then Purdue Brandon, right? So that's your outside third-party collection. I'd like to hear from staff on once we run it through our system and it becomes a bad debt that's sitting on a shelf somewhere, can we hand that over and just see what happens with it? So those two, I definitely want to make sure sewer and water is a topic as an enterprise that we revisit before we get to a point to where we're going to talk about what is or is not getting paid for. I still have zero clarification on the very simple question of what do we do with that money that is counted as depreciation, right? Where does it go? So that means there's a calculation that you guys are doing to arrive at a fund balance, right? Or a net starting position, available funds. we, and I don't know, maybe council knows it, but I don't know that calculation. I need to see it. And then even if we just started with sewer and water.
You won't see it because it's not in the calculation. You do not calculate depreciation.
Right.
At all.
Right. So that is what I've been understanding, learning, and saying.
That is the understanding. There's no other way for us to explain it.
So in an answer tomorrow at some point in time, if there's $18 million of depreciation.
Doesn't exist, can't spend it.
Okay,
Period.
if there's zero depreciation, then it's never been factored, right? Then I just want to run a enterprise starting, total revenues, total expenditures, and what did that enterprise finish with at the end of the year? And so,
Cash flow statement. We can bring it back up again.
yeah, let's go back through it again tomorrow, because I'm not the only one that's lost on that. But those were mine. Councilman Simpson, what do you have?
I'd just like to spend a few minutes, not on the Civic Center budget specifically, or what we're doing or whatever, but talk a little bit historically about where we've been on the hot tax, and where we are and where we're going on the amount of supplemental, the subsidy we have to get from the hot tax on the Civic Center. I just like to kind of get an update and kind of talk about that topic just a little bit of having to use the amount of hot tax that we do to that for the Civic Center. So if we can get maybe a little bit of history of what the trend has looked like. I was given a report a couple years ago, but if we could kind of update that and kind of look historically, because I think the trend is continuing to go up on that, and would like to just talk about that for a few minutes.
Yes, sir.
And considering where we are with our parks and the fact that I'm on the Parks Board, I think I'd be remiss if we didn't hear, because you have a couple of good asks in here that I think we need to look at and kind of see where they differentiate and what we might be able to do. So if we could have some stuff in the parks.
We can do that.
So what I would expect Councilman Prescott to be texting in on right now, if he was here, right, would be fees. He definitely was cost recovery, and, it's the price of a golf ball, and so you're looking at some fee increases. I would like to have a little bit of time tomorrow to talk about those potential fee increases. If we need them, we need them, and we need to know how much it's costing and who it's costing. But then let's do a good, healthy run-through of all the fee increases and what's being moved and changed. And I would anticipate that from Tips and Prescott. But I don't know what else I could anticipate. Do you guys have anything else that you think they're going to want so we can budget accordingly?
No, but we can reach out to them just so we know ahead of time.
Yeah, I think that'd be great if we can do a follow-up tonight.
Yes,
and
sir.
then what is you start at 8 in the morning.
8 o'clock till we get done.
Providing lunch tomorrow.
Yes, sir.
Does anybody have anything they're leaving for tomorrow?
I'll be leaving probably about 1:30 for a funeral.
Okay, so can we catch Parks before he goes?
Yeah, we're going to try to power through all this while all five of you here. My preference is as many of y'all here as I can. So, yeah, we're going to try to power through this before you leave.
Real good. Okay. Anything else before we get out of here? All right, we got a motion and a second to adjourn.
So, second.
Let's adjourn. Thank you guys for being here. See you tomorrow.